Oh, there she is. Susan.
Hey everyone, it's Susan at Escape.
Lulu.
Big Tech is continuing its run, driving the markets higher. Joining us now, Paul Meeks, Harvest Portfolio Management co-CIO. Paul, great to have you with us.
Always happy to be here.
It looks like you're all in on the AI trade when it comes to sort of the picks and shovels trade of it at this point. Why are you so sort of cautious on the next phase of AI?
So what I'm worried about is, at least not yet, have I seen enough real, what I call needle moving use cases for AI? Because what I'm a little bit worried about, not for all companies, some companies obviously will be huge beneficiaries, but for many companies, I believe AI will be a feature, not a product, not a product platform that in and of itself drives revenue and profits and cash flow. And for those companies, if it's just a feature, it pretty quickly becomes commoditized, and I don't know if it has that great of a financial impact.
So that thesis can't live as a silo next to the thesis that NVIDIA will go to the sky. I mean, at what point do the two stories sort of converge and you say, you know what, that was a lot of pull forward on the picks and shovel side of the trade, and it's time to reallocate?
That's the perfect question. So what I think is, and maybe I'm a little bit contrarian, even though tech stocks have come back in recent sessions, it has been a pretty nasty couple of weeks for the standard bearers like NVIDIA. But I actually think the AI infrastructure build is going to continue for a couple more years. And so that's where I'm a bit different, because some people believe when they sell off these stocks that we're going to go from very rapid growth to just absolutely hit the wall. And so it's going to be my responsibility, right, actively traded tech portfolio manager, to get folks out as closer to the top. But I actually think the top is pretty far away for what you call the picks and shovels guys.
When you look out to the rest of the year, though, Paul, what do you think is the catalyst for, for this trade in particular? I mean, the first half, it was all about increased capex. It was the hyperscalers increasing their expenditures. That's not going to happen in the second half, or at least definitely not to the same degree. And so in the second half, what are you seeing as sort of, the oxygen that's going to allow this trade to move higher?
So I think the oxygen is just a confirmation from the hyperscalers are going to spend, because even on their last quarterly calls, and of course we get a refresh in a couple weeks, they talked about capital expenditure plans for the rest of this year and going forward. So I don't think they're going to come on in the next couple of weeks on these June quarter calls and give us more data, but maybe just a confirmation that yes, we're going to spend all those tens of billions, and the supply is going to continue to be tight for the semiconductor vendors, also for the server vendors, and then a few data networking companies. And so they should get not only very strong unit volumes, but they should also start to bump up in pricing.
Melius Research had an interesting note out yesterday, Paul, saying, maybe it's time to dust off the AI laggards, saying, last year what we saw was in the second half of the year, we saw all these laggards like Dell and IBM, Intel. We saw them really, off to the races in the second half, and maybe we're due for a repeat this year, especially as people are questioning the valuations of some of the high flyers that you're in. Do you subscribe to that thesis that maybe investors will be looking for sort of the lower multiple AI trade?
I think they'll do that, but I think that's a mistake, because particularly in AI, as it is with most tech trends, I believe that the strong get stronger. And what I mean by that, who has the dollars to spend on CapEx and R&D and even potential acquisitions? And so, unfortunately, the 800-pound gorilla becomes even bigger. And so I don't know, even though it's tempting to say, okay, this stock trades at 10 times, the other one already trades at 40 times. I don't know if that is going to be a good strategy. What I stick to is not just the semiconductor companies, but as you mentioned, some of the server plays like Supermicro, Dell, and Hewlett Packard Enterprise.
Yep. Paul, great to speak with you. Thanks. Paul Meeks.
That's good.
It's just after 7 on the East Coast, 7 a.m. You're watching Squawk Box on CNBC. I'm Joe Kernan, along with Melissa Lee. And among some of the top stories that we're watching, Boeing is reportedly in talks now with the Defense Department over how its criminal guilty plea over those deadly 737 MAX 9 crashes, how it could affect its government contracts with the DoD and NASA. Boeing's U.S. government contracts accounted for around 37% of its revenue last year. The FAA is ordering inspections of at least 2,600 737s over concerns that passenger oxygen masks could fail during an emergency. And Disney unveiling plans to launch a new cruise ship from Tokyo. If it sounds good, you're going to have to wait till 2028 when it would start. It's part of a 10-year, $60 billion expansion of Disney's theme parks and cruise business. It currently has 5 ships in operation with plans for 3 others, including one from Singapore in 2025. And Amazon is launching a new Echo Spot alarm clock for $79. It features a revamped display and better audio quality. It's the first upgrade since Amazon introduced the Echo Spot in 2017. Wait, we showing Anderson Cooper and CNN. Don't we have one with Carl Quintanilla or something?
But Joe Kernan.
Oh yeah, for an alarm clock. Nobody gets up.
Do you want to wake up to Joe Kernan?
No.
You don't want to wake up to Joe Kernan.
I have to. It's not easy.
Let's take a check on the futures. We're looking at a higher open, and of course the S&P posted its 35th record close for the year in yesterday's session, looking to be higher by 14, and the Nasdaq's looking to be up by 85. Let's get to Dom Chu now with a look at this morning's pre-market movers. Good morning, Dom.
Good morning, Melissa. Good morning, Joe. So we'll start with a check on the oil and gas patch, specifically UK-based BP. The European integrated energy giant is seeing its U.S.-listed shares down roughly 4.5% on roughly 60,000 shares of pre-market trading volume. That's pretty much in line with, to maybe slightly worse than its London-traded shares at this point right now. BP warned that it expects to realize asset impairment and contract provision charges of up to $2 billion in the current quarter. Also, weaker oil refining profit margins and weaker oil trading results that could result in a hit of roughly $500 to $700 million. So that's what's driving those shares down 4.5%. Meanwhile, on the analyst front, you got shares of Bank of America. They're catching a bid, up by just about nearly 1% right now, 35,000 shares of volume. Getting some help from analysts at Piper Sandler. They upgrade America's second biggest bank by market value to a neutral rating from a prior underweight. The target price goes up to 42 bucks. It was 37. It's a bit of a catch-up move, as you can see here, after a 20% run-up in the stock year-to-date and ahead of bank earnings season kicking off. They're citing, amongst other things, a bottoming out of net interest income, or NII, Now, for more on that and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers get full access to some of that detail and analysis. And we'll end with a check on Bitcoin prices, which are still below that 60,000 mark, but up nearly 2% today, just about 57,364. Now, we're seeing a test of the lower end of its kind of medium-term trading range so far over the course of the past several months here. But the key level that some traders are watching is this yellow line, which is the 200-day moving average, that moving average on an average price. It currently stands just a hair below 58,800. So that, Melissa, is going to be a key level to watch for Bitcoin. I'll send things back over to you, Melissa.
All right, thank you, Dom. And by the way, we do have the analyst who upgraded Bank of America this morning. He'll be on Squawk a little bit later on in the show.
And that's good. Coming up, former Secretary or Senator Bob Kerrey, on the question surrounding President Biden and whether he should stay in the race. And then later in the show, Kyle Bass of Hayman Capital joins us. It's the 7 o'clock hour, isn't it? To talk China relations ahead of the NATO summit. Squawk Box will be right back.
The S&P and the Nasdaq hitting new highs yet again as investors wait for key inflation data later this week. Joining us now, Anastasia Amoroso, the iCapital Chief Investment Strategist. Anastasia, great to have you with us. It sounds like you think we're setting up for some sort of a disappointment, that there's just a disconnect in terms of earning expectations and where we are at record highs?
I do. I think there's some ingredients that are definitely coming together for some market pullback and consolidation. And the reason I say that, I think there's this disconnect that is building right now between the economy that is clearly slowing and earnings expectations that are quite lofty. And so if you look at the economy, for example, whether you look at the City Surprise Index or the Bloomberg Surprise Index, that is now deeply in negative territory and has been trending lower for the last number of months. And the Atlanta Fed is about 1.7%, 1.5%, I should say, down from 4% that it was in the beginning of the quarter or second quarter. So I think there's a slowing momentum to the economy, and yet you compare and contrast that to the earnings expectations, and they've done nothing but move higher. And for this quarter, the second quarter in particular, they moved lower just a touch, much less than they typically do, which is 3 or 4% downward revision. So that's why, you look at this setup and you also look at this, what I call extreme market comfort with this Goldilocks scenario. Volatility is low, everybody's in the trade, and that's what's giving me a little bit of discomfort here.
So you think earnings season is going to play out and perhaps companies will either miss expectations or severely lower or lower guidance for the rest of the year, and then we're going to have to sort of come to grips with the fact that it's hitting, the slowing economy is hitting?
I think the initial reaction may be that we're not going to get quite as much of a surprise as we typically get in the prior quarter. So if the surprise was 7 or 8%, and that's why we've outperformed expectations the last few quarters, that's probably not going to be the case this quarter, because we've cut down earnings expectations by 0.5%. And I will say there's this bifurcation where the tech trade is still very much alive and well, and the earnings have been revised up, and everything else has been guided down. So maybe you can argue that we've already reset the bar lower for cyclicals, but I think probably not quite as much. So I think the first reaction is going to be not quite as positive earnings surprises.
When you look at the markets and you get various data points, you see how stocks are trading, you see guidance companies are giving, what concerns you the most? And we were talking yesterday night on Fast Money about sort of the implosion that we've seen in fast food stocks, just sort of as a microcosm of how the consumer is feeling. We've seen real reversals in how these stocks are trading. The consumer's really pushing back. And you take a look at the various data points in terms of household incomes. It's not just McDonald's, it's all the way up through Chipotle has reversed. We're seeing Nike, some of the more aspirational trades, Lululemon. Are you worried about the consumer? Because the market structure is such that you just need tech to work, really.
Yes, and that's what's been working for the last couple of months, and the stock market has been able to push all new highs. But it's interesting, if you look at the equal weight S&P, it's definitely stalled out. If you look at consumer finance stocks, for example, they've also stalled out. Look, broadly speaking, I'm not overly worried about the consumer because where the unemployment rate is and where the aggregate household net worth is, but it's hard to deny that there's definitely cracks that are starting to emerge. And for example, if you look at the delinquency rates, especially for consumer finance companies that are catering to the lower income cohort, you're starting to see those delinquency rates rise. And we shouldn't completely dismiss the rise in unemployment rate, because half of the rise of the unemployment rate can be explained by layoffs. So that's clearly affecting some part of the consumer as well. So I think it's a risk that bears watching. But Melissa, from my perspective, I think the biggest risk is the headline risk around the election. And I think that rhetoric is likely to pick up, and volatility typically does pick up into the November election.
Volatility doesn't necessarily mean though a pullback. Are you thinking that we're setting up for some sort of, seeing that we are at record highs right now?
Yeah. Well, I think this time around, they could coincide. We should likely see a spike in volatility. Again, that's what history suggests. But I do think there's some potential for consolidation in the tech trade as well. And, I don't have to remind everybody, but there's a lot at stake in this election, whether it's taxes, whether it's tariffs, whether it's export controls. And when you think about the sector that is likely to be vulnerable to a lot of that rhetoric, it's actually the tech sector. Because remember, tech was the largest beneficiary of the tax cuts that we saw under the Trump presidency, and that's what's at stake for 2025, is whether that sunsets or not. If you think about tariffs and restrictions, those are likely to hit some of the more internationally exposed stocks. And once again, that's the tech trade. So I do think that the trade for the next few months can be consolidation, pullback in tech, and the move towards the defensives. So that's what I would be thinking about in portfolios.
Luckily, volatility is very low right now, so you can protect your portfolio
pretty
cheaply.
You can certainly buy downside protection. You could do that in derivatives outright. You could do that in structured investments, or you could just trim a little bit of tech and add to things like utilities.
All right, Anastasia, thank you.
Thanks, Melissa.
All right, up next, we're going to talk financials. Piper Sandler raising Bank of America from underweight to neutral this morning, ahead of earnings season, which is right around the bend, and banks always come first. I think that's this week. You might be here on Friday.
No, I'm not. Oh yeah, I will be.
Why do I know you'll be here?
I try not to, one day at a time.
Okay, one day at a time. We're actually going to have a non-alcoholic beer guy on in a second. That's anyway. As we head to break, another day, another call on Nvidia this morning. KeyBank moving to an overweight rating and a new price target of $180 a share. Scott Fox will be right back.
Piper Sandler upgrading Bank of America to a neutral from an underweight, raising its price target to $42. This comes as the financials are set to kick off earnings season, with Wells Fargo, Citi, and JP Morgan out on Friday. Joining us now, Scott Seifers, Managing Director at Piper Sandler. Scott, great to have you with us.
Hey, Melissa, thanks for having me.
You do see an inflection point here for, people will probably be asking, it's already up 20+% for the year. It hit a 52-week high just last week, but you do see an inflection point probably having happened in the second quarter.
Yeah, so we think their NII is going to trough here in the second quarter. So as you can imagine, given the prior rating, we've been a little more cautious, given that we thought their guidance was a little more ambitious than at some of their peers, and their revenues had been weighed down by some of the asset purchases they had made back when interest rates are zero. But that said, we think we're finally at an inflection point. NII should trough this quarter and then start to advance more robustly into the second half of the year, and more importantly into 2025. So is it up off its lows? Certainly. The universals have all kind of outperformed their regional peers this year, but we think just fundamentally the tide is turning in Bank of America's direction. So we thought neutral rating was more appropriate at this point.
Right. You still prefer a Citi, a JP Morgan, for instance. I'm wondering if at this point in the cycle, you see sort of a recovery in investment banking, things should turn a little bit, but in terms of valuation, have we seen that priced in? I'm thinking of JP Morgan is trading at 1.9 times book. Should we be trading at that level, right now?
Yeah, so that's always an excellent question, given that J.P. Morgan's a premium name. So it virtually always trades at a relatively rich valuation relative to peers. In our view, however, they compound tangible book value and their earnings so much more rapidly than virtually anybody else in the industry. So you've got that compounding effect that's very helpful. Moreover, with J.P. Morgan in particular, their guidance is always extraordinarily conservative. They're as well levered to this investment banking recovery we're experiencing as anyone else out there. They've got just an excellent credit profile, and eventually, once we get some more clarity on where capital rules are going industry wide, they just have such a hoard of excess capital that capital return and share repurchase should become bigger parts of the story as well. So a lot of levers for J.P. Morgan despite the valuation.
There are so many questions regarding capital requirements, whether it be Basel III, or this morning there was some Reuters headlines saying that the Federal Reserve is going to revisit GSIB requirements. And I'm wondering, Scott, if you think that that's a likely scenario, that the capital burdens placed on banks will be alleviated in one way, shape, or another, in the next 6 months or so.
Yeah, well, we certainly hope so. It seems like the winds are blowing in that direction and have been all year, which is a great thing. Of course, within reason, we want a safe and sound banking system. But, it seems to us that, regulators have just sort of layered kind of buffer upon buffer upon buffer on these banks. So, it's hard to argue that they're in a position where they have some sort of, crack in the armor that is not visible to all of us. So, I think there's been maybe a little overreach. The industry has done a great job at lobbying to have those proposals dialed back. It looks like we should get something, hopefully in the second half of the year here, that would water down those proposals and be much more tolerable to the industry, still maintain a very, very safe and sound system for customers, the economy, et cetera. So once we get that clarity, we should be in a position to see much more robust capital return from the banks, given that they have such big cushions as it is, or as we stand already today.
Even more so after. I mean, we already saw them, increase payouts after the stress tests, and so you think that there could actually be more substantial payouts.
Yeah, exactly. What we saw after the stress test was more or less just boosts in dividends, which were, broadly as we expected, maybe a little more. Share repurchase tends to be the bigger toggle that we'll get once we get more clarity on the pending capital rules. So that's where we've got our eyes most closely focused right now.
Who are you most concerned about in your coverage list?
Who am I most concerned about? Generally speaking, I think the tide is turning well for the group over the course of the next, the next several quarters. We've got NII inflecting. Hopefully, investment banking is indeed continuing this rebound. Ideally, loan growth will get better. We do have one underweight in our coverage. It's Huntington, which is largely a sort of evaluation and momentum call. But that's a well-managed story that will experience a lot of the same sort of things that the group as a whole will experience.
Scott, thank you. Scott Seifert.
All right, Melissa, thanks again. Appreciate it.
Suddenly, I'm kind of a believer in this next story, and I never thought I would be, but alcohol-free beer.
Yeah.
I think there's a place for that. Up next, the booming business of boozeless beer. Athletic Brewing is striving to be a champion of the industry. We're going to speak to the CEOs on set next. Then later, pressure is ramping up on the Biden White House. We keep saying that, but as a growing, he's at 61% now on the probability of him being the nominee. Growing number of Democratic lawmakers, no one high profile though, are urging President Biden to pass the torch. We're going to talk to former Senator Bob Kerrey in this case, thank God, joins us to discuss. Squawk Box will be right back. New this morning, non-alcoholic beer company Athletic Brewing announcing it's raised a $50 million equity financing round led by General Atlantic. And joining us now, coincidentally, his name is Bill Schufelt, and I asked you that question right away, founder and CEO of Athletic Brewing. And I asked you initially, is everyone a friend of Bill W? And by that I mean someone that really would get in trouble if they had any alcohol. And some are, I would imagine, but many are not people that are drinking non-athletic beer for that reason, non-alcoholic beer.
Yeah, I think, actually, in general, I think the word sober is somewhat outdated in many ways, where I think people are just super busy, modern adults. We all have phones in our hands. We want to feel a little bit better. We want to be a little more alert. People tend to drink like one day a week, one day a month, but there's a lot of occasions outside of that. And a delicious beer goes great with a lot of different parts of life. So
you're here to talk about a nice fundraising round. Let's get that out of the way, and then we'll talk about some of the implications, because I have a lot of thoughts.
For sure, yeah.
So what happened?
So we announced a big investment. We increased our West Coast production capacity and announced that a couple weeks ago. But kind of in conjunction with this, we're welcoming General Atlantic to our cap table. $50 million equity financing to the company, and they'll ultimately invest significantly beyond that in the round. But on anyone, if you ask anyone in the financial world, a short list of globally respected investors, General Atlantic's usually in the top 3, and so we're super excited to have them on board. And just their perspective and advisory on like scalable, disruptive companies is just such an honor to be having their investment.
Where's your valuation go to with this round?
Yeah, well, we're a private company, and we don't tend to talk about valuation. I can say that our revenue has more than doubled since our Series D about 18 months ago, and it was publicly disclosed at that time that our valuation was about $400 million. So.
You went from 855 cases to hundreds of thousands of cases per year. You're in IPA, you're one of the 10 largest brewers, and it's non-alcoholic, right?
Yeah, we sold well over 3 million cases last year, or over 100 million cans. Did over 90 million in revenue last year as a company, and are growing well beyond that this year. We're a top 20 brewer overall, top 10 in craft beer out of over 10,000 craft brewers. From one of the smallest just a few years ago.
I'm drinking it, it's good, and it tastes like beer. Am I going to feel like I'm starting to think maybe that there's some type of placebo effect. Is there not, or there's not, right? I mean, you really aren't, there's no alcohol, so it's impossible that you're feeling anything.
Well, I think what you are feeling is the placebo effect. People have been drinking for 5,000 years, holding beer in their hands when they're socializing, when they're relaxing, when they're unwinding from their day. It signifies I'm with friends, I'm having a great meal. And very little that actually has a lot to do with the alcohol. And that was kind of a key insight for me. And as I was doing survey work for Athletic Brewing, as you know, I was in the financial world previously. And when I started to share the germ of this idea with people were just like, that makes sense. I would drink that all the time. I'm sick of alcohol, or like, I would like to be drinking a lot more, but alcohol holds back the
Why is the time right now for a non-alcoholic beer, as opposed to in the past where you had like an O'Doul's, which sort of just
was not, because it tasted like swamp water.
Okay, well that's one reason.
That was, because I was going to say, on The Simpsons they would have the non-alcoholic in the convenience store. And the guy would walk back, and it would be a false front. No one ever opened the door for it. It would be a place to go where you go into the back of the store, because no one ever checked to buy any of the non-alcoholic beer.
But I think people are mentally, they want alternatives as opposed to before.
He said it was high performance. So you're working out at 6 in the morning. If you go out with your like in the financial business and you have 5 or 6 beers, you're not feeling good at 6 in the morning to work out. Right?
Yeah, I mean, I was up listening to your show and at the desk at 6 a.m. for 12 years, and out to 3 or 4 work dinners a week. And in the beginning of that career, it was, steak dinners, boozy, drenched dinners, and I would feel terrible. And I saw a real shift in the 10 years I was in finance to like people being really excited instead to do like Soul Cycles or Barry's boot camps and hit the day running. I think a big part of our reinvention is it's both product and marketing. So our co-founder, John Walker, is an extremely talented and highly awarded brewer who had won every...
Johnny Walker?
Yeah, which was one of those like universal signs that was so obvious, like it should have hit me over the head that he's the right guy. But he is so talented, and so are so many of our teammates. And another big differentiator is, which this investment's going to, is we've invested over $100 million in our manufacturing, which is really differentiated quality that this segment had never seen before.
It's amazing. And I ask you, I like play golf, okay, something like that, hot. So that I do like to drink like a Corona or something, and I like, there is a little bit of a feeling. I could drink one, but if I hang out, I could switch to this, couldn't I? So that I don't get, you know, so I'm not like driving after 3 or 4 beers. You could drink one alcoholic beer and switch to this, couldn't you? Because I just realized I'm drinking this. I'm like Brett Kavanaugh. I like beer. Remember when he said, I like beer, even though it's
Almost
not.
like anything you're doing in your day-to-day life, like we've got a beer for that occasion. And what you're doing now, like that afternoon beer on a stressful day, like I drink an IPA at like 4 in the afternoon. And
Non-alcoholic.
Yeah, and it's amazing. Or golf courses crush it for us, where people may have had 1 beer during the round, they may have 5, and it's super refreshing. They can get in the car after, they can go meet their kids at the pool. And
Right.
Yeah, there's not that like line in the
Takes
sand. to
away
alcohol.
all the bad quality, because there's plenty. And then the one other thing I'll mention, earlier this week, it used to be maybe 1 glass of red wine is good for you. Now they're starting to think that alcohol is just in general. It could be 1 glass, could be 5. It's never really great for you because your liver's dealing and your brain and everything else. And when you get older, it gets much more difficult to process the alcohol, I think.
Yeah, so I think whatever people's views are on health and alcohol, you know, the world is stressful. I don't want to take away people's alcohol, but
Yeah.
like 10 years ago, there were no options. If you weren't drinking and you're
Right.
at a work dinner,
You're
or
like
something
drinking a
social,
seltzer water, yeah.
like, so we just want to have great options, and I think it's all about occasion growth, where maybe the occasion base for alcohol is shrinking, but we want to build that back up, welcome a lot of new people into the beer world, and give people great beer they can drink 7 nights a week and feel really good about it.
It's amazing. Yeah, I like it, and it's good. But was it really bad? Old alcohol, the previous intro of alcohol, of non-alcoholic beer, was it crappy beer? Was it swamp? Was it bad?
It's so
Was it?
rare.
I mean,
If
'cause it's-
you like walk around a grocery store.
I never had one.
It was when I stopped drinking 10 years ago. It was so weird to see a part of the grocery store that had seen absolutely no evolution in 30 years,
Yeah.
and it was like it's like athletic brewing is such a simple concept, just hiding in plain sight, and yeah, just trying to be really positive about it.
Like I would have thought that if I'm going to get the calories and the carbs from drinking a beer, I might as well have some alcohol. But now I'm starting to rethink all that.
Well, alcohol.
Because you got to drink something when you're socializing, and it'd be good if
Alcohol
it did.
is a lot of the calories.
And it's
in
all-
here.
it's the
Yeah,
calories.
Generally,
Yeah.
as a rule of thumb, like 20 calories per 1% ABV.
Good luck, Bill. Thank you. And
Thank
you've
you
been
so
watching
much.
since when? Since I was a
Yeah,
young
huge
person?
fan of the show. I entered Wall Street in 2005, and I listened to you guys on my commute, at the desk, all day, so I appreciate it.
People say, well, thank you. Appreciate it. And good luck.
Thank you so much.
Coming up, former Senator Bob Kerrey on the race for the White House, and later, potential VP pick for Donald Trump. Senator Tim Scott will be our guest. Squawk Box will be right back. make money. Overnight, the White House responding to news reports that a Parkinson's disease expert visited the White House at least 8 times over an 8-month period. In a letter, White House physician Kevin O'Connor confirmed that the expert, Dr. Kevin Kennard, was a neurological specialist who examined President Biden for each of his annual physicals. But he said that President Biden had not seen a neurologist outside his annual physicals. Dr. O'Connor said President Biden's last physical was in February, and he did not show any signs of any neurological disorder, including Parkinson's. In the letter, he says Dr. Kennard has been the neurology consultant to the White House Medical Unit since 2012 and has held clinics for the thousands of active duty military members assigned in support of White House operations.
Later this morning, House Democrats will meet to discuss the future of the party, while President Biden continues to say he has no intentions of dropping out of the presidential race. Joining us now, former U.S. Senator Bob Kerrey. Senator, how are you? It's good to see you again. It's been a while.
Yes, man. Been too long.
Been too long. Not sure how you actually want to start. I guess just what do you think is the right path forward for the Democratic Party and for President Biden right now?
I don't know. I mean, first of all, it is a very unusual situation where a condition of the candidate's health appears almost suddenly. You know, the White House is saying there's no problem with him being old, and in North Carolina, right after the debate, he goes down and says, "Well, yeah, except I have trouble walking and I'm shuffle and I'm sometimes get confused." And so now there are some cognitive issues, and the question is, how comfortable are Democrats nominating somebody with those conditions, given the apparent vibrancy of the Trump body? So I think it's not an uncommon situation for a health problem to emerge, but in this particular case, the emergence is causing Democrats to say, is there a better candidate? So. I think the president's letter to I'm just sort of imagining if I'd gotten that letter and I'd been in the Senate, I'd been angry. Basically saying, if I challenge and I have any questions about your health, I'm unpatriotic. I'm a threat to democracy. That's not. Well, I'm a part of the elite. You know, I went to I'm proud graduate of the University of Nebraska. So please don't say that anybody that's questioning this is somehow on the wrong side or challenging people to go to the convention. I don't know who talked him into that letter, but it doesn't make a bad situation better. It makes a bad situation worse.
Well, I guess in the president's defense, he got 85% of the votes for the delegates throughout the nominating process. Now, do you think that we need to blame people that kept him out of the public spotlight? His staff, because I mean, this is not a total shock to people. I mean, an hour and a half doesn't change what we all saw, which was a different president, a different Joe Biden than he was 3 or 4 years ago, obviously. But it still hadn't gotten to the point where he didn't garner all those votes in the primary. And he wanted to run for re-election, and the Democratic Party gave him a clear path to being able to do that. So to just change your mind now because the polls aren't in his favor at this point, it just seems that's not the way it's supposed to work.
But Joe, it's not the polling data. Certainly the polling data will contribute. But people are seeing something that they hadn't seen before.
How did that happen? How is that? Okay, then we're back
I don't know.
He was kept out of the spotlight then. He was kept out of the spotlight by people. They didn't let him. Go ahead.
No, I just haven't seen a debate. Normally, debates don't matter. But right from the beginning, I was watching that debate and I basically said, "Oh my God, what's going on here? This is worse than I thought." I'm not an intimate of the president, so I haven't been watching him. But it's a significant change from what he was relatively recently. So people were startled by it. I don't know what can be done, frankly, to repair it. And if Joe Biden continues to say, I'm going to go to the convention and I'm going to be the nominee and I'm going to fight and I'm going to win, that's his choice. Right. He can do that if he wants to. If he if he loses the race, in my view, it's going to be because of these age-related issues that they were denying that it was a problem.
Right.
You know, I'm 80. I'm much older than you. But you know, I wouldn't say I'm in cognitive decline, but there's no way in hell I can measure up to where I was when I was 60 or 50. Plus, the future looks different.
You'd be fine, probably. I mean, Chuck Grassley, I forget, he's running 5 miles every morning. I think he's about 87.
It doesn't matter.
No, it's not age. It's the
the number of miles that you're running don't matter.
Well, no, but there are people that are 90 that are capable of. Not everybody who's 81 is like President Biden. I don't think you are either. I think you would have done fine in the debate.
There are no living human beings who are 80 years old who, if they went to sleep and died in their sleep, that people would say that's a surprise.
Right. That's true.
Yeah.
That's true. Well, that can happen anytime, too. Well, let me ask you this.
It can happen anytime. That's exactly right.
The Democrats kind of did compound problems, maybe, and you know, you can go to the Wall Street Journal, this isn't me talking, go to the op-ed, saying that it was identity politics, that they wanted to pick a woman A, and a woman of color even better, and that maybe she wasn't the most qualified individual to become vice president. So that's already done, that's ancient history, but it does compound the problem with what Democrats are able to do right here, because it's going to be hard. Wouldn't you think it'd be difficult for Democrats to pass Vice President Harris over if the president were to decide to step?
First of all, she's in the line of succession. If he dies, she becomes president.
Right.
But I don't believe the rules are in place to say if he decides he's going to get out of the race, that the vice presidential nominee becomes the presidential nominee.
It's not a rule.
There's no question
you try being a Democrat and passing over Kamala Harris. I'm going to buy a popcorn machine to watch that, because that's going to be
and of course non-alcoholic beer. Because we're a new party now.
Buttered popcorn, but non-alcoholic beer. No, that's going to be that would be a spectacle, Senator. You know your party. I mean, you're from Nebraska. That doesn't completely separate you from the coastal Democrats.
What Democrats, I think, nationwide would object to is if the process, let's say that Biden decides, and it's up to him. It's not up to me. He gets to decide, and right now he's made that decision. If he changes that decision and then says, I want Kamala to be the presidential nominee, and then works it to make certain that no other candidate has a chance, I don't think that's going to fare well in the general election. So it's a practical problem. Certainly, let's say you have 5 candidates that are presented at the convention trying to get a majority of delegates. First, it'll be quite exciting. These are young people, including her, but she's got to be one of several, in my view. Otherwise, it's my view now. Otherwise, I think it makes it difficult for us to say it wasn't cooked, it wasn't corrupt.
So, Melissa doesn't like to get involved in these types of. Do you own NVIDIA? Can you think of anything you could ask? You just don't want to. You don't want to.
Well, I'm curious about how Senator Kerry, this could affect the down ballot in terms of, the donors right now are revolting. They're, a lot of them are saying we don't want to support Biden, but they're shifting their funds away from the presidential campaign to the down ballot. I'm wondering if that you think will impact ultimately his chances.
Well, I think it certainly alleviates one of the big concerns that you've got when you've got a presidential candidate that's been weakened by a variety of things, and that is if you're running for the House and Biden is at the top of the ticket, you're running for Senate and Biden's at the top of the ticket. It's hard. It puts negative pressure on down ballot candidates all by itself, independent of how much money is available.
You ever had a non-alcoholic beer, Senator? It's not bad.
Yeah. No, they aren't bad. I'm not going to damage brands by trying the ones I don't like, but I'm going to buy the one you were trying out.
It was good. I liked it, and I never thought I would do that. But there are times where you don't really feel like.
Is the can better? Is the can better looking than it appears on television?
Yeah, it was okay. Here it is. This is the IPA. Why you want a better design for the?
I don't know. I can't tell from the television. You tell me.
I don't have a problem with yeah, maybe they might get a graphic artist to do a little bit better, but it says athletic. I like to think of myself, and I'm not, but I like to think of myself as, but I'm really not.
Or what you drink.
Senator, thank
Great
you.
to see you.
Yeah, it's good to see you as well. And you'd be fine. You'd be fine in a debate. You were just in a debate. You'd be fine. See you later. Thank you.
You're welcome.
Coming up, we'll talk markets ahead of key inflation data and take a look at the futures. We are looking at a higher open across the board. Be right back.
Get yours today.
Coming up, NVIDIA leading the way when it comes to the growth of AI. The stock is now up over 200% over a 52-week period. We'll find out if the other players in the space can ride the AI wave. That is next. And later, Heyman Capital's Kyle Bass will join us on what investors need to watch when the NATO summit kicks off today. Squawk Box will be right back.
things they never thought they could.
NVIDIA up by about 1.5% pre-market. Two firms raising their price targets yesterday on demand for the Blackwell AI chip. Joining us now is another analyst who is also bullish on the stock, Vivek Arya, Bank of America Securities Senior Semiconductors Analyst. Vivek, great to have you with us.
Good morning,
I was reading your note from just a couple weeks ago, or last week. It could be. It's saying that NVIDIA is relatively underowned, which I thought was really surprising. The assumption is that the Mag 7, particularly NVIDIA, is probably the most owned trade on Wall Street. What have you found?
Sure. Thanks, Melissa. I think the first thing to realize is that we just went through what is probably just phase one of large language model deployment. Now we are going to start phase two. That's when we will see a lot more optimized models, both getting larger in scope to increase their accuracy, but then also getting a lot smaller and optimized. And that requires a very flexible set of hardware, software, silicon. And that is, I think, the ecosystem NVIDIA is pioneered and created. And they're just at the start of their Gen 2 product, Blackwell, which will really start to kickstart this phase two of AI. So I think that's very important to realize that even though the numbers have gotten very big, we are still at the start of this deployment phase. When it comes to ownership, what our strategy team, led by Savita, have found out is that if you take a snapshot of active long-only fund managers across the US, that yes, a lot of them own NVIDIA, but the weightage with which they own NVIDIA stock relative to its weight in the S&P 500 is essentially just market weight, right? So even though it is one of the fastest growing stocks in our coverage and across technology, it's not actually among the largest holdings in a number of actively managed funds. So we do think there is scope for both a better earnings upside and, of course, a lot more weighting in investor portfolios.
How do you see NVIDIA trading for the remainder of the year in that? In the first half of the year, it was all about this massive CapEx spending raised by the hyperscalers. That was a huge boost to the AI trade in NVIDIA in particular. And then you had Jensen Huang in the last earnings, raising Q2 guidance on the old chip, but also saying that there's going to be plenty of Blackwell revenue for the rest of the year. So they seem to be raising their own bar. What else do you want to hear in order to sort of keep this story going?
Sure. So today, the most reliable spender on the planet is the US cloud customer, right? They are in a race to deploy these large language models. They have just gotten started. And it's interesting that if you double click on that, the most useful models that are out there, one has been developed by a startup, right, OpenAI, and the other has been developed by a company, Meta, which is not even a cloud service provider. So that's why I think it's interesting to see when people try and predict the peak of this cycle, when some of the largest technology companies on the planet don't even have a large language model that is rolled out and is being adopted in full scale. So that's point number one. I think point number two is that the demand which started from the cloud providers, I think will slowly start to expand into enterprises. There are a number of enterprises across a number of verticals, whether it's healthcare, whether it's financial services, transportation, retail. They also want to extract insights from all the data that they have. And a lot of times they want to do it on premise. And number three, look at the demand that is just starting from all the sovereign countries, right? Each one who wants to have their own set of large language models that are optimized for their own language, their own culture. So because of the diversity of demand is why we think the diversity of needs across NVIDIA's product stack, whether it's Ampere, whether it's Hopper, and now it's Blackwell. So that I think is the key, that the demand is a lot more diverse, and that is why you need a diversity on the product stack to address it.
Vivek, thanks. Appreciate it.
Thank you.
Vivek Arya.
It is just before 8 a.m. Usually it's just after. So it's 7:59.
When they tell me to rap, I rap.
Yeah, you do. You do. I don't. We're on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan along with Melissa Lee. Becky and Andrew obviously are off today among today's top stories. Power coming back for a portion of the millions of homes and businesses that went dark when Hurricane Beryl hit Houston yesterday. The storm is being blamed for several deaths in Texas and Louisiana. Shares of oil giant BP sliding. The firm expects to post an impairment charge of up to $2 billion in the second quarter, also warning lower refining margins will weigh on its results. And Bill Ackman launching a roadshow for the IPO of his hedge fund, Pershing Square. The price is expected to be in the range of $50 a share. It'll apply to list on the New York Stock Exchange under the ticker symbol PSUS. The futures right now are once again indicated to open higher, at least at the beginning, after more new highs yesterday in the S&P and the NASDAQ. Treasuries have been under control. The 10-year 421, right now, actually 430 right now. Let's get to Dom Chu with a look at this morning's pre-market rumors. What's going on, Dom?
All right, so Joe, Melissa, we'll start in healthcare. Eli Lilly and Novo Nordisk specifically, because those shares are moving in opposite directions this morning. Lilly's right now just about up fractionally to maybe flat at this point. Novo is actually down just about 1.5%. Now, this is driven in large part by an analysis that was published in the JAMA Internal Medicine Journal that showed that Eli Lilly's popular GLP-1 based obesity drugs led to faster and more significant weight loss than competing drugs from Novo Nordisk. Those trials, though, the caveat, were based on health records and pharmacy dispensing data as opposed to clinical trials pitting those drugs head-to-head against each other. So we'll keep an eye on Eli Lilly and Novo Nordisk shares. Moving on to the earnings front and the earnings mover of the morning, shares of Helen of Troy are tanking, shedding just about a quarter of their market value on 60,000 shares of trading volume. This is the consumer products company behind big brands like OXO kitchen tools, also Vicks Vapor Rub, Braun electric razors, amongst others. It reported quarterly profits and revenues that both trailed consensus estimates and gave full-year guidance that also fell short of expectations. They cited things like increased macro uncertainty and increasingly stretched consumer and a more promotional environment. So Helen of Troy down 25%. And we'll end with a look at those computer chip stocks, specifically Dow Component Intel, up over just about 2.5% right now, 1.7 million shares of volume after that big gain yesterday, tied to more bullish commentary out of Melius Research about the potential for second half stock gains in Intel tied to AI chips. Shares of Intel had been stuck in this kind of narrow range over the course of the last couple of months here. They've kind of broken out, as you can see here, going back to the highest level since April 25th. So keep an eye on Intel shares. Remember, at one point, we did see a 40% drop on a kind of year-to-date basis to the low so far this year. We'll see if that trend reverses again with the trends in Intel, guys. I'll send things back over to you, Melissa.
By the way, Don, for the Novo trade, apparently an analyst over in Europe put a sell rating on Novo Nordisk, which is very interesting getting the stocks run, but could be adding to some pressure this morning.
Absolutely. So there's all kinds of things at play right now, but you know, at least the report out of JAMA is getting some scrutiny right now, just about whether or not there was actually kind of like a apples to apples comparison over some of those drugs.
Don, thanks. Don Chu. For more on the broader markets, we are joined on set now by Jason Trenner, chairman of Strategas, a Baird company. Jason, great to have you with us.
Thanks for having me.
What do you make of what's going on with, I mean, it's a key week for President Biden in terms of whether or not he stays in the race. There's a key meeting amongst Democrats today. The NATO summit is all week, and he's going to be on Showcase with the opening remarks and then also a press conference on Thursday. Does this matter for the markets, or is this just political theater?
I think it's a little bit more political theater. At this point, I think that if you look at the betting markets, it seems clear that investors, or at least people who are betting, seem to be pretty confident that Donald Trump will likely be the next president. I think it's personally, I think it's way too early. 4 months is an eternity in politics, but certainly with what's happened since the debate, I think clearly popular opinion has certainly moved that way. So market's a discounting mechanism, so I think it's largely in there, but I think people also understand that there's a long way to go. It seems unlikely, in my opinion, that President Biden will be the nominee in November. So I'm not sure anyone's really planting their feet, and they're waiting to see how this works out, which I think is wise.
Betting markets, if you're going to cite the betting markets for Trump, you might as well set them for Biden, because he's at 65% to be the nominee now.
Yeah.
Versus 20, so why do you think he's not going to be the nominee?
I think I just see what I see with my own eyes, and I'm not sure he's going to make it. And I think when push comes to
shove, if it can't continue, it doesn't. That's,
I think
Carvel's famous.
Exactly, Herb Stein. Yeah. So
but if you can't, if he doesn't decide to go, you can't You can't tell him he has to. I don't
No,
care.
it's-
Unless you're, I think he said God could tell him that. But.
God, the Lord Almighty could
Yeah.
tell him that, which, he could tell us everything. It all tells us something, right? But it doesn't seem likely that he's going to tell President Biden to get out anytime soon. But listen, I think there are just realities of running for president. That kind of physical and mental and emotional strain would be tough on anyone of any age. It's certainly tough on someone that is older and, let's say, not in the greatest of shape. I don't want to offend anyone, but I think we can all see what's happening.
Right. It's that's the backdrop to what will be an interesting few months in the markets, especially with the S&P now sitting at a record high. Today we're entering earnings season. We've got Jerome Powell on the Hill this week. We've got a lot of stuff happening. How do you think we're setting up? I mean, are we in for the correction of 10% that Mike Wilson's got? It feels like there are a lot of nervous bulls. Like you have to acknowledge what the market is doing, the momentum it has, and yet you don't really want to jump on the train, to stay on the train. There's part of you that just looks at valuations as we're at peak valuation right now.
Yeah, Melissa, you're so right, and it's something we struggle with every day. Evaluation is a terrible timing tool for people with short to intermediate time horizons. If you're Charlie Munger or Warren Buffett, valuation can be a wonderful timing tool, or you're not so worried about the timing. But if you're a professional investor, it's hard not to be involved in this relatively small group of stocks that are powering the market. I'm largely coming down to, it's obviously earnings in the next couple of weeks. It seems unlikely, I think we would have gotten more indications, let's say if the AI trade was going to be weakening, I have a feeling we would have more clues of that. And then also the 10-year Treasury yield I'm paying a lot of attention to. We found that once 10-year Treasury yields hit 450, that's when the market really has time digesting the current valuations. But anything lower than 450, we're at 430 this morning, it seems unlikely that there's going to be much to upset the apple cart. Also, going back to the election, there is an enormous amount of liquidity that's being pumped into the market, but certainly from a fiscal point of view, there are new tools like the employee retention tax credit, student loan forgiveness, Freddie Mac securitizing second home loans. All of those things are being brought to bear to keep the economy out of recession. And so in some ways you're fighting the federal government, you're fighting the political cycle. You're also, I think it's likely that the Fed is going to ease. I still think September is a live meeting. So there's a lot to fight here, even though I would completely acknowledge the fact that I'm a little nervous because so much of the chips seem to be in a relatively small group of stocks.
All right. Jason, great to see you. Thank you.
Thank you for having me. Appreciate it.
Coming up ahead of an important NATO summit that kicks off today in Washington, we're going to be joined by hedge fund manager and China hawk Kyle Bass. China likely to loom large over the gathering of world leaders. And then later this hour, South Carolina Senator Tim Scott is going to join us with his thoughts on the state of the presidential race between Joe Biden and Donald Trump. Stay tuned. You're watching Squawk Box on CNBC.
got this.
Welcome back to Squawk Box. The futures right now indicating a higher open. The S&P looking to be up by about 12 points. NASDAQ up by 68 and Dow up by 27.
When NATO leaders begin a summit today, this seems to be in Washington, but they'll do so with a backdrop of China's growing influence across the board. Cyber threats, support for Russia. Joining us now on all this is Kyle Bass, Heyman Capital Management founder and chief investment officer. Interesting piece, Kyle, good to see you. It's been a while. Interesting piece in the journal. It's an op-ed, actually, that NATO's been doing a little bit better. Back in 2014, there were only a couple of countries that were spending 2% of their economy on defense. We're now up to 23 out of 32. But it's still only 2%. In this world, a lot of people say it should be at least 3%. Where I'm going with this is that Stoltenberg, the gentleman now who is NATO Secretary General, says that the real problem with what's happening isn't even, it's Russia, but it's really China. The chief enabler of Russia is China at this point. So, you know, anything that NATO is facing, China is front and center.
Yeah, I think what's lost on, I think, many of the members of the general public is what's been going on in the South China Sea, especially near the Philippines, where the Philippine general, the lead general, drew a line in the sand 2-3 days ago, where he said if the Chinese boats attack his resupply missions to his outward posts near the Philippines, that they will respond proportionally, meaning that you're going to see a potential kinetic conflict here soon. China has already deployed the Shandong, one of its new aircraft carriers and the carrier strike groups, down to the Philippines in the southern part of the South China Sea. Now remember, Joe, that's 700 miles away from China, and it's right off the Philippines coast. And China lost a contested court case in the International Court in The Hague, the International Maritime Court, saying that China has no claim to those islands that are right off the coast of the Philippines. So when you talk about NATO, Joe, and what percentage of GDP we're spending on defense, you know, look, the U.S. is spending 2.9% of GDP on defense. During the Cold War, we spent anywhere between, call it 4 and 6. At the back end of World War II, we spent 47% of our GDP on defense in 1945. One could argue, with a ground war in Europe, with the Iran and proxy war against Israel and maybe anyone that's, let's just say, not Shiite Islam, Muslim, I think one could argue that we should be spending a hell of a lot more on defense right now, and NATO's catching up. And I think Europe's finally caught on. The U.S. is going to be spending more on defense, and you know, we sit at a hinge in history today, and we better catch up.
Yeah, in this interesting piece, I guess the Stoltenberg talking about 40 billion euros a year baseline for Ukraine, and it's being sort of characterized as an insurance baseline level against the Trump presidency, because I guess NATO still thinks that Trump wants to, I don't know, even President Biden says, you know, look what I've done for NATO, look at what this other guy has done. Journal points out that there are many European leaders that really almost seem like they think Trump is more dangerous than Putin, because he required a lot of these countries to actually pony up and get somewhere near 2%, and even 3% would be better.
Yeah, you know, to say that Trump has any kind of comparison to Putin is just crazy. I think that whether Trump's tactics are seen as good or bad, he does have tactics. And you pointed out, Joe, that a number of the NATO members are now spending more than 2% on defense. Well, you know, Putin's knocking on their door. And as we saw last night, Russia, you know, took out the largest children's hospital in Ukraine. I differ from some people, I think, on the far right, where I think the Ukraine conflict is an existential crisis. It is democracy versus authoritarianism. We have to win that fight. And if you've noticed, the Biden administration began saying we'll never send medium and long-term missiles, and now we're sending medium and long-term missiles. It's really hard to do the right things early, because the right thing is the hard button. This administration hasn't pressed the hard button. They've only pressed the easy button. We didn't sanction Putin. We didn't touch his energy business. We didn't touch anything as far as the blood growing to the tumor of Vladimir Putin. We let the blood keep flowing. And we're doing so again in placating and appeasing China. and appeasing authoritarians or dictators has never worked, and we're going to realize soon that it isn't going to work. So I think that NATO sees what's coming, and I'm pretty sure that the Supreme Allied Commander of Europe is certain that this war is going to intensify.
The point you made last time is it's still kind of interesting. I don't know whether I was here, but I don't remember what you said. Real wages, just bringing it back home for a second in the election and everything else. A lot of people scratch their heads why people don't feel better about things. You say inflation, the way it's reported, doesn't really give you a clear look at how much real wages are actually down.
That's right.
How much do you think real wages are down since Biden took office, and that would account for why people don't feel flush in what seems like a good economy?
Yeah, that is a great point. When you hear the talking points of the administration, they like to talk about the economy and the economy kind of writ large, and that the numbers look fine. The problem is if you looked at the government's own index, the FHFA housing index is up 50% in 3.5 years. So let's just say the cost of dwelling, the cost of rent, the cost of purchasing a house has moved 50%. What do you think wages have moved in that time frame? I think real wages are down 20-25%, if not more, during this period, because the way that the Bureau of Labor Statistics and the way the Fed reports inflation is they use owner's equivalent rent. They do this crazy survey. They call 1,000 homeowners, and they say, if you were to maybe rent your house, how much would you rent it for? I mean, it's actually out of touch with reality, Joe, and it is designed to report a much lower number. Everyone that watches TV, everyone that spends $1 spends a real dollar. They don't spend a chain-weighted, inflation-adjusted dollar. I wish I could. I wish I could go spend one of those dollars. But the reason the electorates around the world are voting out the parties that presided over 40-50% real inflation are because that is killing them. It kills the poor. It really hurts the lower middle class and middle class. It takes mobility away from them. And the rich end up with all the money. And so these elections around the world, whether you're looking at France, whether you're looking at the UK, or whether you're looking at the US, I believe they're about two things. They're about runaway migration and inflation, and that's that. And the incumbents will be voted out.
It's a little weird because you point out we created 40% more money during the pandemic, but there's the key word, the pandemic. It was the incumbents that are being voted out. Weren't they just responding to something out of their control, the pandemic? There's inflation everywhere.
Joe, we added 40% more broad money to our system in 18 months. When you look at the way the world works, the world is priced in dollars. Whether or not transactions are settling in dollars, everything's priced in dollars. So we, as a country, the 18 unelected people that run the Fed and the person that runs the Treasury, created 40% more money because that was the response that they deemed necessary to kind of save our economy from collapsing during COVID. We didn't know what was going to happen when that disease moved over the rest of the world from Wuhan, China. We just didn't know. They didn't know. But if you remember, we had spending bill after spending bill after spending bill. I mean, thank God Joe Manchin was alive. We'd have another, $1.5 trillion, $2 trillion of gasoline thrown on this fire. They went incredibly overboard on the way up, and now they're not going to be able to take that much out on the way down before they're going to have to stop contracting the balance sheet and start expanding it again. So we exported like 50% inflation to the rest of the world, and we broke many of the countries that were already kind of moving along the bottom in the emerging markets. We broke them. And so the financial architecture of the emerging world hasn't looked this bad, call it since the end of World War II. And that's why we're not going to have some rapprochement or denouement of these conflicts. I think the conflicts are going to get a lot worse.
Final question, and they say we got to go. In this country, if you think the incumbent's going to be voted out, who is that incumbent that will be voted out in November?
I mean, my guess is it's going to be Kamala. If you look at the supporters in Democratic Party, the editorial board of the New York Times, David Axelrod, the big donors, Biden can't survive this, in my opinion. Who knows? I'm a Wall Street guy. But I think Biden's out, and I think from what I'm seeing in the betting markets, it looks like Kamala is their lead horse.
Not today, though. It's 61-20. It's 61-20 Biden over the vice president. I was betting. I think they're thinly traded. They move so fast. They moved the other day based on that letter and based on the Morning Joe interview. They totally flipped. It's something to watch, something to behold. Thanks, Kyle Bass.
Thank you.
Okay, see you later.
Coming up, Fed Chair Jay Powell is set to testify before the Senate Banking Committee this morning. Ahead of that hearing, we'll speak with the committee's ranking member, Senator Tim Scott of South Carolina. But first, as we head to break, China shares of Bank of America, which reports earnings early next week. Piper Sandler raising its rating on the stock to a neutral from an underweight, saying with net interest income likely to hit a trough in the second quarter and then go higher, it sees less chance that B of A stock will underperform. That stock is up in the pre-market by just under 1%. Stay tuned. You're watching Squawk Box on CNBC.
Hackers getting rich off cryptocurrency this year. A report from blockchain research firm TRM Labs says that hackers stole close to $1.4 billion in digital coins between January and the end of last month, and that's more than twice the amount taken in the same period a year ago. Although crypto prices have also been higher this year, so it makes the number higher. Large hacks account for most of the ill-gotten gains. The biggest heist this year took place when thieves stole more than $300 million worth of Bitcoin from a Japanese crypto exchange, DMM Bitcoin.
As we gear for bank earnings season, the country's biggest lenders could be in line for some good news. Reuters reporting the Fed is changing how it calculates an extra layer of capital it requires from the most important banks in the country to adjust for economic growth. That could save America's 8 largest banks billions of dollars in capital. The Reuters notes no final decisions have been made. Banks have sought for years to reduce the so-called capital surcharge.
And coming up, recent housing stats would have many conclude that we're in a housing glut. But if that's the case, why are prices so stubbornly high? After a break, Diana Olick will let us know what to expect from the housing market in the second half of this year. Then, South Carolina Senator Tim Scott joins us ahead of a hearing later this morning, which will feature Fed Chair Jay Powell. And a reminder as we head to break, you can always watch or listen to us using the CNBC app. Stay tuned. Squawk Box is coming right back. Some housing industry watchers have been thinking that home prices will ease in the second half of the year, but so far hasn't been the case, even as the supply of homes on the market finally increases. Diana Olick joins us to explain why. Diana, good morning.
Well, good morning, Joe. Yeah, we're in a housing market now unlike any other, and that's due to economic forces unlike any other. The foreclosure crisis, the Great Recession, the pandemic, and the unprecedented quick cut and then quick spike in mortgage rates. So take a look at supply of both newly built and existing homes together for sale. It shot up during the 2005 housing boom and the ensuing foreclosure crisis, which of course flooded the market with homes. So home building essentially ground to a halt. By 2012, new homes were just 6% of all supply. Then total supply dropped even more in the pandemic when demand spiked in those first 2 years. Now it's finally climbing back slowly, but in a weird kind of twist, it's mostly newly built homes. The month's supply of new homes for sale is now almost 3 times that of existing homes. Month supply is how long it would take to sell that supply at the current sales pace. Now, new and old home month supply usually track pretty closely, but not so much now. Now, new construction, it's making up 30% of total inventory. And this, of course, is due to roller coaster mortgage rates dropping to historic lows at the start of the pandemic and then spiking to 20-year highs just 2 years later. That makes homeowners who wanted to move up instead stay put, cutting existing supply further, and it makes buyers look for cheaper homes. So you can see that in the month supply of homes for sale in May by price tier. It is the lowest in the $100,000 to $500,000 price range because that's where most demand now lives. And that is despite the fact that supply has increased the most in those lower tiers. The homes are just getting eaten up that fast. And that, Joe, is why prices just keep going up.
So what does that, which home builders would we buy then? We should buy the ones that can make houses between $100,000 and $500,000. You don't want to buy the luxury or premium house builders then.
Well, the home builders who do have that entry-level supply are doing the most in sales right now. We do see strength in Toll Brothers, which is the luxury home builder, but that's only because they're not really reliant on those mortgage-dependent buyers. But home builders like KB Home, D.R. Horton, who have that express brand, that real entry-level brand, they're still seeing a lot of demand. But we should also note that the home builders don't necessarily have to worry about that 9-month supply we're talking about. People think, oh my God, are the home builders in a glut of homes? And that's because just 20% of that supply has actually been built yet. That's how they measure that supply. It can be houses that have been permitted, it can be houses under construction, or houses that are finished. So the home builders have a lot of control over what they finish, when, and what they even start, depending on that supply situation. But once again, probably that entry-level builder is going to be the best bet.
So if interest rates were to come down, are there a lot of people that want to sell their existing homes if they get the chance, or not?
I certainly think there's a lot of pent-up seller demand. There are, aging baby boomers in big homes who would like to downsize, but they're thinking, why do I want to get rid of my 3% rate and trade up to a 7% rate, especially when the market is this pricey? But they're also lured by the fact that, hey, the market's pricey and I can sell my home for a lot. So if rates come back into that 6% range, that's where we saw last fall and into the winter that people did start to move. Sellers started to say, okay, I'm going to go, because that 6% range is a little less, shall we say, unsavory than the 7% range.
Resemble that remark. Aging baby boomers. I might sue you for definition.
We're all aging, Joe. Even babies are aging. Okay.
Definition of character. I might sue you. Because I do resemble. All right, Diana, thank you. See you later.
For more on the state of the housing sector, prices, and who can afford to buy right now, let's bring in Lawrence Yun, the National Association of Realtors chief economist. Lawrence, great to have you with us. You think housing prices are stabilizing at this point? Have we seen the worst in terms of the high prices?
Well, I hope it's stabilized because, as we know, the home prices really shot up, 40%, 50% from pre-pandemic 2019 levels to now. Certainly, income has not grown as much, and now affordability being hit by larger, higher mortgage rates is not good. It's difficult for the buyers to come in. So what I anticipate is that we are seeing more inventory of existing homes beginning to rise. This is implying that despite the fact that many homeowners have that lovely 3%, 4% rate, some are saying life-changing circumstances. Baby boomers who are considering downsizing, or people who are in New Jersey considering moving to Florida markets. All of this is leading to more inventory, and as we get more inventory, I believe home prices will stop accelerating. I think there will be slight growth, but not the strong growth, and we certainly need more stabilizing home prices.
How are the dynamics in the rental market influencing what's going on in the housing market, Lawrence, in that, are rents still high and therefore people then look to swallow the bitter pill of a 6%+ rate, 7% rate and buy?
The first-time buyers, despite the affordability challenges in the recent months, have come up So they were below 30% consistently for the past 2 years. But in the recent 2-3 months, it's been a little above 30%. It's a minor gain, but this is saying that first-time buyers are toughening it out. They understand that initially mortgage payment may look a little heavy, but that is fixed. It doesn't change, while the rents would rise and rise over time. So many people who are looking to build wealth over time understand the true long-term value of ownership. So first-time buyers, even in tough market, they're getting in.
You know, when we talk about higher for longer in the context of the Federal Reserve, Lawrence, we're talking about, you know, where the Fed is going to stand. How does that translate in terms of your view of mortgage rates and where the new normal will be?
The long-term average mortgage rate is around 7%. That's where we are today. But certainly compared to the past decade when it was averaging 4 and 5%, it is higher. But I believe that the Federal Reserve needs to cut interest rate. And the reasoning is the following. What we are seeing is that apartment construction activity has really begun to come down because of higher financing costs. With lack of supply, it could accelerate future inflation. So in order to assure that inflation is calm, the housing component, we need more construction, we need more supply. So the high construction financing costs today is restricting some of the developers, and that could actually lead to housing shortage and push up future inflation. So in order to prevent that, I think the Federal Reserve needs to cut interest rate so that more developers get active and we have more apartment supply, and that will contain the inflation.
What is the golden rate in your view? We were talking to the CEO of Compass a couple weeks back, and he said 5.999. Anything under 6% basically would sort of, you know, increase the velocity of transactions in the market. What is that number in your view?
I think the new normal for mortgage rate will be around 6%. So the Fed clearly has indicated that they will be cutting interest rate even with delays. Certainly whatever they don't do this year, it will get pushed into next year. But the mortgage rate will not go down to 3%, 4%, or even 5%. I think the new normal will be around 6%. We do have large federal budget deficit, that government borrowing, it means less mortgage lending availability. So consumers should anticipate that 6% should be normal. Right now, close to 7%. You know, again, the first-time buyers recognizing it's better to get in now rather than wait later when a much larger number of potential buyers will be rushing in at 6%.
Yeah, you can always refinance. Lawrence, thank you. Lawrence Young.
Thank you.
Coming up, an interview you do not want to miss with South Carolina Republican Senator Tim Scott. We'll ask him about a hearing later this morning featuring Fed Chair Jay Powell, the state of the presidential race, and much more. Stay tuned. You're watching Squawk Box on CNBC.
Welcome back to Squawk Box. More gains, at least for the NASDAQ and the S&P indicated. Perhaps today will be a long session, though, all the way to 4 o'clock. And this will happen, too. Fed Chair Jay Powell set to testify in front of the Senate Banking Committee just a little more than an hour. Join us now to talk about what's on the agenda and also the presidential race. South Carolina Republican Senator Tim Scott. I hope you had some coffee, Senator. Hopefully, as a ranking member on the Banking Committee, and his name, you obviously have heard this, been floated as a potential VP pick for Donald Trump. There's nothing you could do that would get you more high-profile attention than being on Squawk Box, Senator. So this is smart. Welcome.
Good morning.
Good morning. Thanks for joining us again.
Thanks for helping me with my getting
you're
attention
welcome.
on Squawk Box.
Anything we can.
Powerful show. I watch as a business guy. So thank you.
Right. Anything we can do. Just all you got to do is call. So he's going to come on. It's kind of interesting, isn't it, that he's going to probably cut rates in September. Is that too late to actually help whomever the and we'll talk about that, but whether it's President Biden or whoever the nominee is, rates seem like they're going to come down right before the election.
Yeah, there's no doubt that Joe Biden broke this economy, and Jay Powell's trying to figure out how to fix the economy. Listen, over the last 3.5 years, what we've seen is a loss of spending power by the average American around $28,000. Rate cuts will be helpful, but the fact of the matter is that doing it in September looks pretty political. I had a conversation with Jay Powell yesterday, and one of the things I left with is that he sees inflation coming down, so the prospect of rate cuts, I think, are going up. But the bottom line is this: if you do it in September, not in July, I think there's going to be a lot of conversations around the political nature of rate cuts. More importantly, though, we have to figure out how to keep this economy thriving for the first-time home buyers. How do we keep single moms like the one that raised me being able to afford buying food 30% higher, putting gas in the car about 45 to 50% higher? Those are the issues that I will talk to Jay Powell about as we have a hearing in about an hour.
Yeah, and I was having that conversation just yesterday with my son. Actually, he's like, "Well, the economy, blah blah," and I go, "Scotty, oh, his name's Scott, Senator Scott. Scotty, if you have less money every 2 weeks at the end of your paycheck and your mother, and you're saying, no, I'm sorry, we're not getting that this time, or
yes.
If you're waiting for a paycheck and you have less every couple of weeks than you had before, it's just that simple. There's just no way to dress that up. There's not enough lipstick to put on that to help people.
100%. Listen, we went 52 paychecks in a row where inflation outpaced wage growth. Recovering from that is a long-term prospect. The challenge, of course, is baked into our economy today is significantly higher prices for everything everyday Americans have to afford. Whether it's housing, you're buying a house or renting a house. Whether it's groceries, you're making decisions in the line about what can you keep in your basket, or gas, energy for your homes.
Right.
Those prices are fixed into, and they're significantly higher than they were just 4 years ago.
But not all the blame goes to obviously the Biden administration. It's a global issue following the pandemic. Some of the energy things, I would grant you that some of those executive orders haven't helped.
I'd encourage us to look back at the first decision that Joe Biden made, which was to pass a $1.9 trillion spending package with only, called the COVID relief package, only 1% for vaccines, less than 10% for COVID-related health. The $1.7 trillion went to fueling the type of economy and inflation that we have today, which led to a 9% inflation, I think it was June or July in 2021. We haven't recovered from that because Joe Biden doesn't have a clue on how to fix this economy. He thinks that government is the answer. We know that the free markets and capitalism is actually the answer to creating jobs, not the government.
Will you press Chairman Powell on just getting in the weeds here on Basel III and the end game proposal? What are you getting anywhere with him?
Yeah, I think we have made significant progress over the last several months on Basel III endgame. The bottom line is simply this: parking more capital on the sidelines makes it even more difficult in a challenging environment to have your first-time home buyers have access to capital, for small businesses to start their businesses. So having that conversation about a re-proposal, I'm encouraged by the signs that we're seeing that there's a strong possibility that we're going to see a re-proposal put back to the market, having an open period of comment once again. I hope they take their time and get this right. This is a significant impact on the health of our economy. And if Jay Powell and the other powers that be are wise, they will take the time to hear from the public, the stakeholders, and then recalibrate even that approach in this final proposal that goes through the APA.
Senator Scott, I appreciate the awareness of what the average American is going through in terms of dealing with inflation and having to make really hard choices, but there are certain things that are sort of built into the economy at this point and are being proposed that are inflationary in and of itself. Nearshoring is increasing costs of goods or will increase costs of goods, and the tariffs that President Trump is proposing, 60% on Chinese imports, 10% on all U.S. imports. I mean, while these are proposals, may never actually come to fruition, that's the direction that President Trump would like to go in. Those tariffs would be inflationary as well. How do you reconcile wanting to reduce inflation, ease the burden on average Americans, but also being in the party that is proposing all these tariffs, which would add cost to consumers?
Well, let's not forget the fact that while President Trump did a very good job of pushing back on China, what President Biden has done is kept those same tariffs in place. So the question and conversation around tariffs is one that bleeds into this administration. The real question we should ask is, can we have a fair process of trade while being a free trade nation? I think the answer is yes. How do you do that? You do that by pushing back on those bad actors around the globe that continue to manipulate, whether it's their currency, whether it's stealing our IP. We need to make sure that we have in place the kind of headwinds that makes it more difficult for countries like China to lie, cheat, and steal. I think that is what President Trump has done, and frankly, it's one of the reasons why President Biden has not eliminated tariffs.
Senator, we alluded to when I said, I don't know, actually I was talking to Kyle Bass about it. I said, he said the incumbents have been getting voted out in the UK, France, et cetera, and it could happen here. And I go, well, which incumbent are we talking about getting voted out here? Do you know which incumbent that you're trying to get voted out in the United States? You know who that incumbent is?
Well, we know that the Democrats, they are in a hot mess, as we say back in South Carolina right now. There's no doubt. But listen, it doesn't matter what they call the person, whether it's Joe Biden or Kamala Harris. The bottom line is it's the incompetence of this administration, not Joe Biden's mental acuity, that is in question.
Do you have a preference? Do you have a preference?
I don't.
Who
I think
to face?
They have to solve the multi-100 million plus problem by replacing Joe Biden. Frankly, I think the American people and the day of reckoning is coming on November the 5th. I don't care whether it's Joe Biden or Kamala Harris. They both have been the same powers that be that's led to a wide open southern border, leading to 10 million illegal immigrants coming into our country. They've led to the highest inflation since the Jimmy Carter years. And frankly, crime in the neighborhoods that I grew up in, poor inner city neighborhoods, has never been worse, at least in my lifetime.
You know, one of the things that I saw the president and his people talking about yesterday was since the debate, the president's been all over the place. And he said, where the heck has Donald Trump been? And I think I have a pretty good idea that maybe laying in the weeds after that was the right move.
That's what I would do. That's what I would do. There's no doubt about this. When their house is on fire, let them figure it out. And right now, their house is on fire.
I don't know what to ask you about the Veep position. We'll know soon enough, I think.
I think you're right.
At the beginning of the convention, you think, or when do you expect to hear?
You know, I think it would be an honor to serve as Vice President of the United States for anyone who actually gets that opportunity. Bottom line is, I think we'll know something in the next 10 days. But more importantly, it's not the who he chooses, it's what the focus of his administration will be. It has to be looking back at the glory years where inflation was 1.4% or 1.5%. As opposed to the 9% that we've seen under Joe Biden. We have to go back to the glory years where illegal immigration was about 1,000 per day in December of 2020 versus 10,000 per month. per day, yeah, during December 2023. So when we look at the glory days, we know that the person who will be leading the ticket is Donald J. Trump. And the best we can offer to the American people is getting the same economy we had in 2017 back in 2025.
I don't know. On Squawk Box with the Capitol, right? Have you seen this shot behind you? I mean, I
can't see the shot, no.
Well, it's a nice shot, and I just saw Scott like leapfrogging over some of those. Did you see that? Could you feel that, him leapfrogging over some of those other?
No comment.
No comment. I didn't really see that, Senator, but I was imagining it.
Keep hope alive.
Will you call us if you find out before everybody else or something? Can you?
You'll be on my top 5, Joe.
I think that was sarcastic, but
I think it was.
Just be facetious.
Yeah, all right. Senator, thanks once again. Good to have you on again.
Have a great day. Take care.
Okay.
Coming up, news just breaking on big pharmacy benefit players. Stay tuned for that. Squawk Box will be right back.
The FTC issuing an interim report in its 2-year probe into the big pharmacy benefit middlemen with some damning conclusions. So we were right all along. Those middlemen. Bertha Coombs joins us now with more. Hey, Bertha.
Hey, Joe. The FTC's interim report argues that pharmacy benefit managers, PBMs, have gotten too big and points to the ways that these middlemen allegedly inflate drug prices and boost their profits, like the treatment of specialty drugs, high-cost or complex drugs to treat special conditions. It outlines how the big 3 PBMs, CVS's Caremark, Cigna's Express Scripts, and United Health's Optum, have amped up their sales growth by designating more and more drugs as specialty pharmaceuticals, which they then make patients buy at their preferred pharmacies. One example of the report highlights the price of the generic version of cancer drug Gleevec to treat leukemia, noting in 2022, PBM preferred pharmacies were reimbursed $2,700 a month for the drugs, 40 times the net cost of $66. And the report cites a quote from a PBM rep admitting to a consultant that they'd actually designed their plan to, quote, aggressively steer customers to home delivery, where the generic cost is 200 times higher, over $19,000, while non-preferred outlets like Costco, which customers might not know to go to, charge $97. In a statement, FTC Chair Lena Khan sums it up, saying the report lays out how dominant pharmacy benefit managers can hike the cost of drugs and squeeze independent pharmacies. But one thing to note is that while the 67-page report makes the case for greater scrutiny and regulation, it stops short of outlining a remedy. Joe?
Kind of interesting, Brett. It's always like that, though. Who's to blame? And it's always like this, isn't it? It's but that's pretty definitive. Maybe everybody is to blame, right?
There's a lot. The pharmacy benefit managers will argue. In fact, CVS showed us some of their submission to the FTC, saying that independent pharmacies actually charge more. That the big chains, they can get discounts of 12.5% in Florida, for example. So there's a lots of puts and takes on this.
Great. Okay, Bertha. Thanks.
Let's check in with Dom Chu one last time with a look at this morning's pre-market movers. Hey, Dom.
All right, so Melissa, Joe, a couple of Mag 7 related calls out getting some attention this morning. Apple shares steady in the pre-market between gains and losses. Piper Sandler upping its target price on the iPhone maker app services giant. It goes to $225 from $190 in a bit of a catch-up move. Shares are already north of that point right now. Also on the Mag 7 front, shares of NVIDIA are higher by roughly 1.5% now, just about 1.5% after a big gain yesterday. Analysts at KeyBank are upping their target price on the world's most valuable computer chip company to $180 from $130, while remaining overweight rated. And we'll cap it off with a check on shares of UK-based oil and gas giant BP. Its U.S.-listed stock is now down 4.5%, over 200,000 shares of volume. It warned that it could have an asset impairment charge of roughly $2 billion in the current quarter, and warned that refining profit margins and its oil trading performance could take a hit as well. So Joe, Melissa, big movers. I'll send things back over to you.
Okay, thanks, Don. We'll get a final check now on the futures. They've been up for most of the session. In fact, the Dow's now slightly positive again. NASDAQ, that'd be more new highs. Same with the S&P. What's today? Oh, I'll see you tomorrow. I'll see you tomorrow. Make sure you join us. Squawk on the Street is next.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures pretty steady as the S&P comes off the 35th record close of the year, takes aim at a 36th. Busy day on the Hill with both Powell and Yellen in testimony. Powell's last appearance before lawmakers ahead of the election. Our roadmap begins with the S&P's longest winning streak since January. Big tech continues to rally and eyes more gains at the open.
Plus Tesla's 9-day win streak. The shares have surged 27% this month alone. And Nike's not so good, very bad year. Shares have tumbled more than 30% year to date. So what about a turnaround?
Let's begin with the markets, though, aiming for more milestones as we await the Fed Chair's Capitol Hill testimony after new record closes for the S&P NASDAQ, as well as all-time highs for Apple, Amazon, Meta. What else was there yesterday, Jim? Royal Caribbean, TJX, Costco?
Yes, by the way, Costco, there's a couple of notes we've been seeing. There's just have-nots developing in so many different industries. When you look at food and staples, well, it's Costco and it's Walmart. And yes, it's Amazon. And then when you look at David, it's streaming, and well, there it is again. There's Amazon and Alphabet. When you look at the next iteration of the iPhone, people are talking about very big numbers for Apple. This group, David, has a hard time not getting analysts to love them. Some of the parts break up by Brent Thill on Amazon gives you some number that's absurd. But hey, you know what? I called last night and say, aren't they going to break it up? I demand that Lena Khan break up.
Yeah. Well, they are still embroiled in antitrust litigation that I suppose could, if it came to it, result in some sort of a breakup. Which, to your point, many of people who put some of the parts out there say that it's worth a lot more.
Right.
I don't think they have any intention, though, from a strategic standpoint of doing
None
that.
whatsoever. It's a fantastic company, but David.
Yes.
Standard Oil was a great company.
It was.
And
it was.
It broke up.
Yes, it did, Jim.
When we were doing the show together, weren't you doing SOTP Standard Oil?
When we were doing the show back then?
Yeah, back then.
Yeah, I was. I had some of the parts on that.
It was good. That what you said, Chevron, you said was good. It was SoCal.
I did. I like that one. I like that one in particular.
Yeah. Well, that was.
And I thought John D was going to do okay.
Oh, he did.
Yeah, he did.
Okay, so the wife does the modern. So you know.
The wife, yes, the wife founded the modern museum of art.
Speaking of oil, we got BP with this impairment charge, Jim. That follows Exxon's update yesterday, Shell last week. These weaker refining margins are they going to bite?
And yet today, I mean, we got a guy who cuts Valero by about 10 cents. I mean, come on, the golden age of refining has ended. That was just over. The golden age.
When was the golden age?
Geez, Valero's been up forever. I mean, this is the stock that people wanted to own, and I just think that when you look at these companies, commodity company, refiner. I mean, they all kind of make gasoline, but this is a stock that went from 120 to 180 in a couple of months.
You're talking about Valero.
Valero, yeah, but all these guys are in this business. By the way, BP has done a lot to try to figure out how to, let's say, make batteries. They've been trying to do a little alternative energy stuff.
Yeah.
No working.
Which is weird because Aramco's now investing in a company that is going to bet that the combustion engine will be around for, I think the quote is, a very, very long time.
Yeah, and Stellantis is going for the hybrid. I mean, everybody is scrambling it. I'm going to tell David the magic day is August 8th. And what we're talking about, remember, China has self-driving taxis right now.
They do. They
and
do.
That could be them. That could easily be Tesla.
But there is a belief that Tesla is ahead, given how many miles have been driven by Tesla cars, and therefore so many things have been already recorded. Yeah. The move to generative AI, what are we on, 12.4 in terms of full self-driving? But August 8th is when we're going to get a lot more information about the future for the robo-taxi, something that Elon Musk has talked about for many years.
And they've got places to
believes
sell.
Would be significantly additive to earnings when you imagine, as he does, a fleet of said cars on the road.
Could he announce that he has to put up more capacity in China, sending the stock to 300?
I don't know, Jim.
That's good enough. Or I think it would have been better to say, you know what, Jim, could be.
Taking aim at 10 days in a row. We'll see if it gets there. There is this piece in the Journal about foreign brands struggling in China.
Yes.
Volkswagen, Tesla, a year ago 50%, this month 43%.
Well, I just think that this man is not calling a meeting. Elon Musk is not calling a meeting to say, you know what, status quo. He, I think, can be the foremost robo-taxi guy in the country. But we've got this big problem, and that the robo-taxis are still district by district in our country.
Yeah.
Can he have something that transcends that?
I don't know. I never imagined he would have something that could navigate the streets of Midtown Manhattan.
Right, but maybe he owns Texas
given
now.
What our local government has done to all the different lanes.
Well,
I mean, it's impossible. Nobody can navigate them.
No, nobody. But I like real estate. We have SL Green piece very positive from Scotiabank.
But it will happen. It's happening a lot later than we ever thought it would. Of course, we've been talking about self-driving here for many years.
But
I can remember sitting here and talking to you guys and saying, oh, it's only a few years away, because I was being told that by the likes of Travis Kalanick. They were wrong. It's taking a lot longer.
Travis Kalanick, I'm richer than you are, he said to me at the White House Correspondents' Dinner. Hi, Jim Cramer, I'm richer than you are. It was a great opening line. My wife was right there. It was like,
nice way.
That was a stunner.
Nice way to start. He wasn't lying.
No. As a matter of fact, it was one of the most truthful things said in Washington that year.
Speaking of Washington, we mentioned Powell and Yellen on the Hill today. Yellen in front of the House.
Yes.
Powell at Senate Banking. Jim, this is his last chance to address lawmakers before the election, and there's some chatter about whether or not Fed independence gets a mention or two.
Look, I think that we all underrate. We used to talk about how great Greenspan was when he went in front of the Hill. He said nothing. I mean, Powell takes saying nothing to a higher level. He is, when you're finished with Jay Powell, I think you just say, what was it? What is it? And that's perfect. I just want what he said. I don't want anything more than that. Because Jay Powell needs to be inscrutable when he's on the Hill, because it gets you nowhere to start anything at all. Dave, we have a podcast. People can't see you just nodding your head. Say something.
I agree, Jim. It's probably highly unlikely we're going to get any news from Mr. Powell during his testimony today or tomorrow.
But we should show it,
or certainly anything beyond what we heard from him during his time with Sarah last week.
Right.
Right. But it is important that we show every second of it.
Every second, and every congressperson who we've never heard of, who's going, and says, "Listen, Biden has to." Whatever.
We can show the nation how ill-informed many of our elected representatives are about the financial system. I think that's always a helpful thing.
I recently watched the GameStop hearings for something I'm doing.
Yeah.
I mean, I'm talking about the most unaware group of people who have.
Did Roaring Kitty know anything you know either? I mean,
Roaring Kitty had a rap on GameStop.
He had a rap. He has a rap on Chewy also. It hasn't gone as well yet.
Well, Chewy, David, was up a lot.
You were out. Did you? $243 million. Now, I assume he's getting some leverage on that.
I don't know.
$250 million.
Look, he had it.
6.6%.
Did you watch the movie? He crushed it.
I did.
He was also really good at Stonehill. In the trap? He ran trap.
He did.
The guy.
You can see that
he was early.
Stock has not performed any better since he got involved.
He should have gotten involved at 19 when they came on the show and just crushed it. Sumit just crushed it. He said, "Look, because I'm like a huge dog lover. My dog NVIDIA. Someone thanked me this weekend, David, for naming my dog NVIDIA.
That's great.
I don't know if you ever get that. But Sumit Singh came on the show at 19. He goes, "Look, this is ridiculous. My stock is about to, I'm doing great." CEO of Chewy, and then Roy Kearney comes in at like 20, 25. Where's Ryan on that?
Nowhere. He's not involved in this company.
He's not at all.
No. Ryan Cohen runs GameStop, but he's not even on the board of Chewy
He's
any
elusive.
longer.
He's elusive.
So it is an interesting move by
did
the
well
roaring
on that.
Roaring Kitty.
Did Ryan do well in that BBBY? Now,
Yes,
he had
he
a couple
did.
people on the board. I don't think he spoke. He had people on the board. I don't think he spoke to.
He bagged everybody.
Well, benefiting Jim from a solid tape. And I do wonder what you make of the fact that we, as we said at the top, have a few dozen record closes this year. And the VIX at 12.5, Jim Bespoke points out that's the lowest it's ever been since 92 at this stage of an election
And then
year.
we have there's only been 2 times we've had so many all-time highs, and one of them was 1995, which is just that we were coming out of a halcyon period. It was a halcyon period because Mexico was being put behind us, and I just find that the comparisons to the early 90s are fabulous.
But all-time highs? What do you mean all-time highs? I thought only 18% of the S&P was even
the
up.
average. Yes, no, of course it's just a couple of stocks.
Two-thirds of the gain in the second quarter was just Apple and NVIDIA.
So?
Well,
where's the other guys? Why aren't
you
the other
just
guys
said
doing
something
better?
about all-time highs, which I don't follow.
I rebel at the notion that there's 2 companies that are doing well. I come back and say there's 498 that better get their act together.
Well, the B of A note this morning, looking at earnings season, says this will be the first quarter that those 493 are in the black in terms of EPS growth in a couple of years.
The number of justifications for the rallies at Apple and Alphabet, the rally at Amazon, the justifications are every day. It's like, look, we're not going to be left behind with a low price target for NVIDIA. Well, David, you can take NVIDIA's price target to infinity and beyond.
Key goes to 180 today. Not seeing any signs of demand pause for the H100. You said, is it coming out of its post-split crunch?
Well, we're finally through that. By the way, I think Chipotle's still in that. A lot of people still think that Chipotle made the stuff smaller. Chipotle says no to that. Avocado is very hard to come by because of the problems in Guerrero. That Guerrero, the state. It's true.
I believe you. Avocado problems in Guerrero, the state, are contributing to smaller portion sizes at Chipotle.
Well, there's there's an avocado shortage. There's a worldwide avocado shortage.
So, is there a portion problem at Chipotle or not?
I've had Brian Nickel come on. He said they have not changed it, and I'm not going away from that. Brian Nickel's one of the greatest managers ever, but there's still a lot of churn from that. And, I saw a guy lower his price tag from 3,000 to 68. I said, wow, they're crushing Chipotle. Then, split. But NVIDIA's now going through. They've now churned enough. And Blackwell, David, well, you can't get a Blackwell to save your life. Just try to get a Blackwell.
I'm not in the market for a Blackwell right now. I'm not running my own generative AI model. I might at some point.
Well, I've got one going in Quakertown, PA. It'll crush it. There is, without a doubt, that's my...
Why are you watching the hearings of GameStop? Why am I watching 2+ years later? What are you doing there, Jim?
Documentary?
Yeah, what are you working on?
I'm working on my own thing.
Your own thing. You don't have enough going on?
No, I do not. I want more, and I also caught a really big porgy this weekend.
That's great.
Record.
Well done.
If I do it, it's a record. And when we come back, I got an Apple story that's going to blow your mind.
Really? Well,
The best Apple story there is.
You're also going to touch on Nike, I believe.
I have to. And you know what? I will give you a.
Well, we got a break. We got a break. You already did a great tease.
I'm going to give you a heads up. I won't back down.
Nice.
I'm not going to back down on Nike.
As Tom once saying.
Well, Tom Petty is the guy that brought back.
Yes.
And I had no idea.
Miss Tom Petty.
Well, he was fabulous.
Take a look at the pre-market here. We'll get to Nike and a bunch of other names when we come back.
Get yours today.
Frankly, I've been down on Nike, as you know, for a very long time now. I have been worried about powerful competition, particularly from Hoka, and you know, on is one I've been recommending for ages. But now that everyone else hates Nike so much, the expectations have gotten so low, I think you should never underestimate the power of low expectations. Still, I feel a lot better about turning positive on Nike right here, right now. If we had more of a turnaround plan from management, how about some credible blueprint going forward? Right now, the company seems focused on making things less bad by reducing supply into the marketplace, launching fewer new products. That's just not exciting. It's not a hook. So I want to hear a credible plan from management about how it can get its business growing again. If they can or won't give us that, then we need new management.
That's Jim speaking out about Nike last night on Mad Money. Stock is now the year's worst performer on the Dow after falling 3% yesterday. Meantime, today, Bloomberg says the company is rehiring a retired senior executive, Tom Petty, to oversee the retail partnerships after those relationships soured and sales dropped. Jim, doesn't sound like you're sold yet.
Well, I do think that there's an excellent piece in the FT today about Nike's new chief runs into trouble as turnaround efforts falter. That kind of has some of the bones of what I've been talking about, including a disastrous Wu-Tang Dunks legend that's been brought back. But what people have to recognize is that on the conference call, which was, by the way, one of the most depressing calls, I used to do a piece about the choreography of a Nike call and how Mark Parker told a story equivalent to South Pacific, David. I'll tell you, it's one of the Roger Hammerstein, like one of those Roger Hammerstein stories. And one of the things that just drives me crazy is this conference call is now the conference call of a coach after a big loss in the NFL where they make you come out. You know, they are who we said they are. It's about on, and it's about Hoka. And I just thought it was terrible. I will say this, they talked about bringing stuff back from the vault. That was another really bad idea. What they didn't offer was a vision. They didn't talk about how they sold so much good stuff to the fanatic. They didn't talk about how poor the actual content is. I mean, the first time people would ever say that Nike stuff isn't that good. But they bring back some guy who is, you know, real. Tom Petty's real. So my hope is that they articulate a plan. By the way, Donahoe had no plan whatsoever. He says he has a plan. You know what? I think that he ought to start wearing New Balance because they have a plan. New Balance is doing well.
Well, we've talked a lot about blow-ups in retail. It was Levi a few days ago. Helen and Troy this morning, Jim, is going to open down 28.
Ouch, I know, and I know those guys, and they're good guys, and they've got a couple of brands that are somewhat marginal. I think that once again we are finding the haves, the companies that can go to Costco and Walmart and say, listen, we want to be in, and Costco says, well, you're going to make X, and they do. That's really unbelievable. There's the have-nots is who has the power to go toe-to-toe with Costco and with Walmart. Can you have any power against them? And I think the marginal brands of a Helen of Troy will not have that kind of, they will not have the heft. David, you know what kind of heft you need to be able to go toe-to-toe with Costco?
Yes. I would
It's
assume you need
amazing.
to be very hefty.
Yeah, you know, we love your toothpaste, and if you don't lower the price, we have Kirkland's signature toothpaste. It's really good. So they go head-to-head against Procter. So what is a Helen of Troy going to do? They have some good niche brands. Emphasis on niche. Do you remember they bought like Honeywell?
You know, you
Vicks,
mentioned some of those store brands. I mean, Trader Joe's is an amazing company, private though it may
well,
be.
so is Lidl, except for I can't stand going to stores.
What's their secret?
What of those
Trader
stores?
Joe's, yeah. Like how are all those store brands amazing?
Location. But you know, Costco. I'm going to take him to Costco. I mean,
You
you
should.
think he even knows what the meat aisle is? I'll take you to the free salmon dip.
Free salmon dip.
Will you promise me you'll take a crew and get that,
I will,
get that
but
on tape?
Rich Galante's done. The CFO, he's the greatest. He's the greatest. He's the great. Man, he brought the guy from Kroger, but there was no one like Rich Galante.
He retired.
$1.50 hot
He
dog.
retired.
I know.
He retired.
was
Some
within
people
30
do that,
years.
Jim, when they get to
I
a
wish
certain.
he had never retired.
When they
I
get
mean,
to a certain age, some
what do you
people.
think's the favorite thing that
Some
they
people
have?
choose to do that.
Pickles. Salt pickles is what people like.
That's great.
In China.
We'll get Kramer's Mad Dash countdown to the opening bell. Take another look here at the pre-market as we're about 40 minutes ahead of the Powell and Yellen testimony. Stay with us.
CNBC.
Welcome back. Let's get to a mad dash as we count down to an opening bell. It's 6 minutes away. We're going to talk a little Apple and that race.
Have you seen
$3.5 trillion in market
Well,
cap?
there's new news. Have you seen the trailer for F1?
No.
Okay, this is their new movie coming out with Brad Pitt. It's one of the most exciting trailers I've ever seen. This is the kind of thing that's going to make it so. I'm not kidding. It starts at IMAX, but Apple Plus is just gaining momentum. This is going to do it. David, I want you to remember one stock. If you remember one stock from this morning show, one stock, it's Expensify.
That's a stock?
Well, Expensify was one of these companies that came public during the worst period in the market, during the SPAC period, but this is actually an underwriting. It does expense management, and they are one of the sponsors of the mock team that is the team that's in F1, led by Brad Pitt.
Covering a lot of ground here.
Well, Shark Ninja is one of the
You're
one of the
covering
companies.
a lot of ground.
So David,
how about? Now we're going to show the trailer.
Okay, so David, oh my God, this is so good. This is an Apple original film, by the way. This is, guys, I am telling you. First of all, coolest man in the room.
Look at him.
Coolest man in the room.
Still looks great.
But David, on his head, you have Shark Ninja. They all bought. They are the people who ended up paying for this movie.
Got it.
David, this is one of the smartest things I've ever seen. You get Expensify in there. It's $1 stock, by the way, for those who are curious. And the great guy, a handsome guy, fantastic guy. But he puts a helmet on, and it's real. This is real. Look at this. Expensify.
You know,
see that?
there's another public company called F1, just to let you know.
These guys,
a Liberty company.
Look at these. Look at these sponsors. Wait till you see the helmet. When you see the helmet, David, look at that. Look at this. Expensify. Shark Ninja. That's who you want. Buy those stocks.
All right. This went in a different direction.
A white chip company. It's a white chip company. But anyway, I'm saying that this movie is going to be the first time that people are going to say that Apple, which is Warner Brothers movie, but Apple, I have to take Apple Plus. I have no choice.
It's a Warner Brothers movie.
It runs on Apple Plus, but start with IMAX. But what I'm
not
saying
on-
is
not
that
on Mac.
people are trying to justify how Apple keeps going up, up, and up. I finally found it. It's the movie F1, and it's Expensify.
Got it.
Okay? Dollar stuff.
Thank you.
Shark Ninja had him on. Stocks doubled.
You do some. You're very flexible.
Thank you.
All right, we got an opening bell about.
Now that was a
3.5 minutes from now.
That was a mad dash to end all mad dash. I just want to tell you.
And don't forget, you can catch us anytime and anywhere. Opening bell podcast.
Expensify, David. J.P. Morgan downgraded it when it was. They took it.
Whoa. First things first is the temperature. jacket, Jimmy. Oh, damn. Bell's already on. Thought I had another minute. Okay, we didn't go do much. We came back and hit the first support on the SPY. So that renders me 3 black crows right at open. Today's loser, MRO, AMC. Ooh, AMC at 540 something. Tesla. Carvana at 121.94 might be a good watch. What happened to it?
Let's get the opening bell this morning in the CNBC real-time exchange with the big board.
It's already jumped up some.
Celebrating its 20th listing anniversary at the Nasdaq.
Okay, you guys got to go. You lost me already. We'll do without the screaming and the hollering. Jimmy, don't do that. AMD's at the 200. IWM pulled back here. Watch IWM. SPY broke, SPX broke support. Get your platforms ready for trading. We were watching Lily. My water's done. I have it on warm today, so I can go up there anytime and get it. Things are getting done professionally around here today. Okay, it's been 3 minutes into trading. Now Jimmy's going to put the SPY alert. Okay, the crowd's going quiet. Drum roll, please. 558252. 558252 is the number. Very good job, Jim. Nobody saw that one coming. I did. Fuck, how'd you do it? So we're looking at the 9th on the SPY. We'll be performing a new high. New high. Don't take that too personal there. Somebody took it personal. Did you kick them out? Looking at the 10th, sure. Yes, I am. Make sure everybody knows that too. So what's going to happen next? I get a knock on the door. Yeah, hey Jim, man, this is Elvis Costello.
FBI, open up!
Remember that chick Ann that used to date back there in high school that had a crush on me? I'm still dating her, man. She's a control freak. Yeah, she's trying to control this resistance. Uh-oh. Uh-oh. 257s just went up $10. The 557s. We broke resistance. What do I do? Now this is what we're waiting for. We got the VWAP, same as yesterday. This is on the 1 minute. Jim, will you please pull up the 2 minute? We've already had 6 minutes into the market. Well, that's very bearish looking. The 2 minute is. 3 minute, same thing, but a little bit more bullishness on the 3 minute. See, the body is above this body. Jim, you always got to put sex in everything. Well, I'm not talking about that. The body of the candle. You idiot. Five minute has the 200 as support for double bottom with a tweezer at 556.21. You serious, Jim? This time I am. 556.21. So these are the July 10th, the 557s. Get 5 to start off with. And we might not even hold that. Let's see what the, here, let's put the 5 minute alert on here. Good idea, Jim. I don't want to forget about that. So far, the 200 SMA, you've been my best friend. So on the 5 minute, we have the 200 SMA and the VWAP. And on the 1 minute, oh, that's way much lower. 5 minute would have me waiting. So I'm going to take the 551 and I'm going to move it above the VWAP on the 1 minute. Been replaced. We got a problem. So Boeing gets charged with a felony, and oh, we go, who cares? Who cares? I don't care. It's behind us now. Felony, you idiots. Oh, I don't care. Oh, PayPal. Home Depot, AMD down 82 cents now. Disney at 97.16. Meta at 19.47. Positive, we've got NVIDIA. I said it. Okay, we're testing support right now on SPX. I do believe we are definitely testing. I think this number here is more important than this one, but okay. Now we're back to the 200 on the 1 minute right here off the 200 SMA. The option's now at 108, 106. Okay, get ready. Ladies and gentlemen, we're about to hit my support. There it. There it. There it is. Damn, Jim. Just as you said. Just as you said. July 10th. Strike is 557. That's $557.00. You get it at 106. Right now you're bearish because you're under the VWAPs. But to get that morning bounce, the crowd doesn't know what to do right yet. Come on, 106. They are now bullish as long as we're above the VWAP. And on the 5 minute, we're on the VWAP. 5 minute we could go lower if we don't hold the VWAP. Jimmy's in at 106. Now, the 2 minute resistance to break will be 556.49. Damn, Jim. Right there. 556.49 on the 2 minute. And on the 5 minute, it would be 556.62. But we're still bearish on the 5 minute. So I jumped in it on the 1 minute. Jim's a little nervous. I'm a little bearish on the 1 minute too. Very tempting. Biden reports permits to build U.S. apartments have dropped nearly 30% since the pandemic. Biden reports permits to build U.S. apartments have dropped. We're at 112. Boeing's at resistance. A little morning pop on AMD. Well, we could have a breakout here. We get a breakout real fast to a double top. Oh, up. That's it. But Jim, I'm up $40. Or now you're up 60. We want this to go to 120. Sure. Yes. DPZ's way up there. Way over butt. Domino's Pizza. Boeing got some overhead resistance. Looks like IWM wants to squeeze right now. Break it. So that morning bounce. Jimmy's scalping the SPY. He's at the 557s for July 10th at 106. He could have got him at $1, but he looked at him like a ding dong. He had to have been fast. We're just looking for a small break, which means the 63 has to break on the IWM. Oh, here we go, 113. Now, you're going to be making a business decision here real soon. And this will buy my drinks for all day. Break it. Trying to make a business decision. So 120. You can do it. CLSK. Break it. Okay. I'm not seeing much conviction yet. I am seeing a little bit though to a double top. As my water warms up in the kitchen. I would love to see this thing get up here to 556.62 as called. It was just a couple pennies off my low, 1 penny off. Oh no. What happened to the conviction? What happened to the conviction? Situation has aroused. Oh, come on, give it to me. I'm just looking for 20 cents, 10 cents. I had a glimmer of hope here. Now I want you to know that you're not going to break the bank today, and you got to take your profit when feasible. Done for the day? Oh, Jay, good job. Be sure to hit that like button and donate to my vacation. We're waiting for a breakout here. I mean, you could make a business decision and get out right now at 112. I'm not seeing enough conviction, as Dr. Frankenstein would say. Jimmy had a little pop today to a double top. Okay, here we go. Going back again. CHWY. Baba. Microsoft pulled back some. We had Meta on watch. We got Tesla. Tesla hit Vegas' night target yesterday. We were then 56 cents away from hitting it. I think that was a very good call. Okay, the crowd's going wild at Sports Arena today. AMD just had a new low. So this is the second, this is number 2 down. Jim, are you still in SPY? Yes. What should you do about it? Well, it can drop pretty good if we don't break here real soon. So if you haven't made a business decision yet, I want to hang out here and we want to see a double top. Then that's where you consider taking some profit. If I can get this to $100, that'll pay for my drinks. Or a good massage on the beach. Boom! There it is. That's what we wanted to see. Just somebody with enough nuts to get in there and bounce it above that trend line. And anymore, it doesn't have to have nuts. I guess she could have nuts. Jim, that was racist. Prejudiced. Today's women do have nuts. There's 114. Now I can make a business decision What do I do? You see 556.90, Yoko? Really? Mike is looking at Lily. Lily, the 200 SMA support level on Lily. Anthony, where's Anthony? But oh gosh, we're at 124. Okay, make a business decision. Make a business decision. Oh, woo! What do I do? Out at 124. Do you got anything to say? I think I've just made my point. What do I do? That'll pay for my vacation. Woo! That'll pay for the drinks. That did it. So today I was done within a half hour of my retirement trade. That's about the average time. You want it to day trade only last 1/2 hour? Very good job, Jim. Here at the Washboardjim Retail Traders Academy, we learn one thing, and that the first hour and a half of the day is the most profitable hour and a half of the day you could have. The most tense. The rest of the day, if you play it right, can just go down like ease. Mannequin retracted his message. Uh-oh. You gonna write me a reprimand? We have no retractions. They're distractions. With an overreaction. Could cause some satisfaction. I think that was a very good play, James. You played it to the T. Perfect. Oh. Instead of pucker, you meant fucker? Is that what you said, Mannequin? YouTube won't allow that. Word correct. It's like alcohol. It really speaks the truth. So like if it said, I want to hang that man, that's what it means. Well, that was a pretty trade. I'm totally satisfied. 127. Let's get a knock on the door. Jim, man, that was an outstanding call off the 200 SMA. Now, let me ask you this. Should I go ahead and jump on it now, or should I wait? Well, if you just got to the desk, I'd set you an alert above the VWAP. Now, we could go ahead and hold support, which was the old resistance of 556.49, and retest that again. So I'd set my alert just right above that. Excellent idea, James. So you're telling me not to rush it? Don't ever chase a trade. They'll come to you. Would you go make some coffee? Now that I have profited on my beach trade, Randy, how did you get that 56.90? Something sounds off fishy around here, Yoko. How'd you come up with that number? I don't want to say it, but I'm totally impressed. I don't like nobody doing better than me. So you get a little A. And you only get an A minus, small, baby A. If you can't give away your secrets, I give away mine. That's to the penny. I did show my appreciation. Oh, God. Always clean janitorial. Retail traders, may I help you? This is a recorded call, Brandon. Always clean retail traders. This is a recorded call, Brandon. He hung up on me. I just do as I'm directed. So I had a date to meet Hunter at the Steak Palace, and ever since then I'm getting these phone calls from hookers out of state. Ding dong. Nice little pullback here. So we're getting the retest. Grande. Double bottom, higher low, booyah. Today is what, Tuesday? Double bottom booyah, 96 cents. The crowd doesn't know what to do. Jimmy does. There it is. There it is. There's your $100. Damn, Jim. How do you do this? Well, you have to be creative. Double bottom, higher low, booyah. Now we got a tweezer bottom. We break the VWAPs. We're back to 556.62. Damn, Jim. Is that why they call you Master Fisherman? Yes. Okay, you're ready. Would you please remove that man back there in the back of the room? He's disturbing me right now. Break the VWAP, Jimmy. .96. .96. Shh. Break the VWAP. Okay, we're retesting. We're at $1. Retesting. Jerome. Wish you had balls. Nike December calls, I kind of got beat up in them. We would appreciate it if you broke the VWAP today. We don't ask for much. Uh-oh. Uh-oh. Randy. Profit taking occurs only when you take profit. Damn, how'd you do that? Well, we come real close to hitting my 556.62. Uh-oh. There it is. Now, make a business decision. Make a business decision. $115, baby. How'd you do that? 3 black crows. Randy, magnificent. I'll expect a good grade off that one, please. I expect a good grade off that one, please. 117. I think I've made enough money today to call it a day. That last trade lasted no more than 3 minutes. I mean less than 3 minutes. Snake, breakout, pull back, high or low, boom, to a double top exit idea. God damn, Jim, how'd you do that? Whoa. That's what I teach. People on YouTube doesn't know what to think about that one. Beautiful, Jim. Beautiful call, James. We get a knock on the door. Yeah, hey, it's Chris. Hey, Chris, what's up? Yeah, my wife's sitting next to me over here, and I think she has a crush on you. What should I do? Well, it's happened to me a lot. Just let her fill out her fantasy, fix her dinner tonight, and she'll love you forever. All I hear is crickets. Great day for NVIDIA bulls. Here's what Georgia says. I agree. Oh, we get an F minus for missing Apple and NVIDIA trades. Ouch. Ding-a-ling, 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 dong. And now, the calls are at 112. We definitely hit my 556.62 with a double top resistance. Apple's going for 230. NVIDIA, as said, very good looking. Okay, watch the IWM. Watch children. Watch the IWM. The crowd's gone. The crowd doesn't know what to do. I'm getting ready to go in there and slice up a tomato. Jim said watch the IWM. What do you think about it? What's the IWM? IWM, July 10th. The 202 strike. I'm gonna buy 17,000 of them at 44 cents. $43. IWM at 44 cents. Jimmy's taking a risk. Carlock sold half his puts. I need a reversal, please. I was kind of jumping up down there for a second. Now we got a double bottom. Blended. Damn. So Jimmy's standing here. How dare you? Jimmy's about to add 10 more. Really nothing holding it up. Fed pal, U.S. economy expanding at a solid pace. Oh boy. I've not heard none of them say we've merged into a whole new economy. It's happened a few times with me, the internet and the cell phone age. Computer. Now we've got corruption. Break it. It looks a little hairy now. Could be a gift. Market's been open almost an hour now. 58 minutes, and I'm getting ready to go and have me a couple of tomatoes. And a radish and a cucumber. I'm waiting for a breakout here on IWM. Now, I've not played IWM that much, so I'm trading the next day out. Debating on grabbing 10 more at 37. There we go, 37. Oh, and I get the verification. Always clean. This is Jim, the retail traders. This is a recorded call. May I help you? Okay. Premature breakout. Let's do it. Jim, the crowd noticed that you like to take a lot of risk in life. Yes, I do. Why'd you do that, Jim? I don't know. This could cause a problem. Spies at a double bottom again. Apple pulled back. Shop is down $1.53. AMD looks sexy. Where's CMG? Oh, I don't have it on here. Okay, I'm about even. CMG. Oh God, well that looks cheap. Okay, I'm even. IWM. Green now. Break it. Okay. The crowd's going wild here at the sports arena. Jimmy's average is under 41. We're now at 43. Oh. Nancy. Damn. Crowd's going wild at the sports arena. Well, I'll tell you what. Ethel, stop hanging out over at the vegetable counter. Stop showing off your melons and get over here, please. Ethel has the best melons here in Plainsville, Missouri. We're now at 44 cents. I see 99 and I said, what? I'm out. They'll be over 100%. Okay, the crowd's going wild. They're now at 45. Jimmy has 20 of these. Damn, you do, don't you, Jimmy? I tried to tell them there. They weren't listening. They just weren't paying attention. Randy, were you paying attention? Say yes. Joko, that was a very nice guess on your resistance. How lucky was that? Okay, time for a lesson. Jimmy's going to take a trend line, put it on the body of that candle right there, put it on the body of this candle right here, and that's your resistance to break. If we break above that, then we'll go to a higher level. Do you understand? That'll be another 500 put on my vacation, please. Let's get it up to 1,000. We're now at 47. You can make a business decision here on 49. Oh. Profit.
The third 51 analysts that cover this name. I do think it's really interesting when you look at AMD and like it's frankly underperformance versus like an AMD or excuse me Nvidia on the year, and the fact that right now it's currently trading at a forward multiple higher than Nvidia. It's like 45 times its forward earning. Now Nvidia's come close because we've rallied like 5% this week, but that is to me like your greatest, I'd say maybe more bearish case on AMD is Why is it more expensive than NVIDIA when it hasn't performed, I mean, nowhere close to the extent at which we've seen like earnings growth from NVIDIA?
Spy's very jealous.
Just because the market's basically trading it as an assumed winner, part two of the trade, when maybe it's
So what about me?
not that obvious.
Well, so I traded you twice today, Spy.
Housekeeping, bringing the price
I did call you out.
from 230 to 220. I mean, like, all right, well, that's a little.
You understand?
Target price work there. Rick,
I did trade you.
Yeah, an interesting chart here. We can see that we had a nice rise upward.
Don't feel like you're left out.
All the way up into our yearly highs, a significant peak that hit near 227, but then faded pretty strongly as well here. I think the more recent price action has been more of a triangular shape here. And when I
Jimmy's debating on making a salad right now.
to draw an actual trend line here, I'm just trying to illustrate that the price made a series of higher lows, probably a more reasonable place to start the trend
If I
line.
get 100% on the IWM.
Price activity that doesn't really line up very well. But once again, triangular shape from here to here, upside breakout. We had a period
I'm
where
coming after your job.
moving sideways, moving averages clustering together, price kind of bouncing around them. And this is something that we really are on the lookout for.
Coming after your
Triangular
job.
price patterns with low volatility, because they're often the precursor to a high volatility event, meaning a breakout in either direction. In this case, it did play out to the upside here. We broke above our moving averages. We broke out of the triangle. Now we're kind of paring back a little bit of the gains today, on pace for a harami candle, where the red candle, the real body, the distance between the open and the
I don't have any
is completely
beats.
contained within the previous day's green body here. So something to keep an eye out for if it does develop.
Although I do love my beats.
RSI broke above the 50 midline, hanging on. We need to cross into the overbought area to.
So whatever I put together today, I think about just pure tomato and cucumber.
To the upside, around 188, we had price stop there several times around that
With
same
a,
area, so that's a mark to beat to the upside. To the downside,
with a,
don't be surprised if we
tuna.
retest this this breakout point here. That's a common situation.
Seared
that happens.
tuna.
We've also got our two moving
Seared.
averages right on top of each other near 165, so that could be a supportive area to watch.
You know, the fundamental case does, I think, kind of argue that AMD is a less attractive play than NVIDIA, given the valuation versus the growth potential that we've already seen. But
Yes, that's true, Anthony.
the AMD chart looks pretty good. Like, if you want to try and buy dips in any of the chip stuff, because it's kind of already got the breakout. It's got the relative strength picking up. I mean, it could have easily broken down. I also kind of was in the camp that
It kind of did,
the
you
stock
dick.
price split on NVIDIA was going to be a negative AMD event, which it was actually like the first week, but then it's recovered since. So
Oh my God. You're starting to sound like CNBC.
standpoint. So, all right, nice chart.
I was the same though, because it was like that was the whole draw to AMD is it had a cheaper price tag.
Yeah, it
and
was
then they
literally like, dollar for dollar stock cheaper.
Yes.
That's right, Jenny.
But it's recovered, I guess. All right, and
I'm on your
bullish
side.
on it. Marvell, they're also bullish on, right?
They are. I mean, so they raised, this was actually a price target raised 95 from 90, so modest upside, but kept an overweight rating, saying that overall feedback indicates that for optimal networking, they see robust demand across all of their segments, and Marvell's AI outlook, they think, stands to benefit from this meaningful ramp into AWS Trainium and overall Google's Axon beginning in the fourth quarter of 2025. So this is more of a long-term call, I will say, at least as far as like those specific partnerships, the way it's benefiting Marvell. This name is also very much loved, though, among those that cover it. 31 buys, 2 holds, not a single bear, and average price target right now is like $90 a share. So KeyBank is like $5 ahead of the average, basically.
Lily.
Also trades at just shy of 45 times. So you could also make the argument, why is Marvell right now valued more expensive than
Lily had a new high this
It's
week.
amazing to me.
Yeah, no, it's very true. It's a good point. NVIDIA's just got such monster growth that it keeps it grounded.
Right.
Where everything else is just kind of getting untethered.
And maybe that's why we follow NVIDIA so closely, because the argument could be made still that it's valued, I mean, like cheaper than its competitors, like a Marvell or AMD.
A reasonable leader and general in the Army. Similar kind of the AMD chart, Rick, but it hasn't quite made the move yet.
Yeah, definitely some similarities here. a similar kind of triangular shape here. Not as much sideways movement in terms of our moving averages here, kind of bouncing around them with some big swings here. However, we are quite close
Spy
to
new high.
from beyond that upper trend line there. We tested it earlier today. Didn't quite hold on. Now we've fallen back within the boundary of that trend line there. Looking at RSI, we also see a very triangular shape here. Once again, one shorter term trend line going up across the lows, longer term downtrend going across the highs. We are above the 50 midline though, which means the RSI is more tilted toward the upside right now. So look to see if price can muscle its way above this boundary in our triangle pattern here. The next step would be to take out our recent highs. This red line just above 78, so around 78.50 would be the mark to beat there. To the downside,
It's
we've got
November
two moving
2021,
averages
and
quite close to each other.
I
Yellow
am
21
at
day,
Sun
orange
Palace.
63 day
I also-
exponential moving averages around 70 to 71.50 or so. Around that general area would be supportive. Then we had our lows, which are quite close to our volume profile point of control.
All right, this one looks like it still could go either way, basically, but generally kind of favoring, the sector. You would think it would break out, but there's a lot of trading at that $68, so it keeps coming back to test that big volume node there. So Marvell's had a little bit more trouble kind of taking off. Also, just percent-wise movement on there, it hasn't been one of the top performers since it peaked out at 85. But some like that as they're looking for the stuff that's been a little bit less in the spotlight. So, all right, nice work on the charts. Thanks, Rick. Thanks, Jenny. Market meetup when we come back. We'll assess what we heard from Jerome Powell. Not a whole lot has changed. Still about an 80 basis point difference between the NASDAQ and the Russell, but NASDAQ has lost a little bit of steam there, but really we're pretty much where we were at the beginning of the session. Bonds sold off a tad, dollar's basically where it's at. Bitcoin tried to bounce a little bit, didn't get too far. Mostly still watching NVIDIA is the main story of the day, up about $4.80 right now.
That's right. Do, do, do.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
All right, we got the NASDAQ up, we got the Russell down. Basically the same regime as when we started trading about an hour ago. Joined me Caroline Woods back with us from New York. Our senior markets correspondent, Dan Grant, joined me here in the studio, senior specialist retail trading at Charles Schwab. Kind of seems like mostly language we've already heard from Mr. Jerome Powell, Caroline.
Yeah,
nothing really all that new. You know, meeting by meeting, need greater confidence that inflation is going closer to target before they're ready to reduce rates. I think that, you know, I'm hearing a little bit of speculation that saying reducing policy restraint too late or too little could weaken economic activity and employment, might open the door to that September rate cut, but he's very much sticking with the meeting by meeting, data point by data point kind of narrative. 72% chance that there will be a rate cut in September, according to the FedWatch, CME FedWatch tool, another in December. So pretty much what we had already been seeing heading into this. But, you know, we will get additional data points, obviously, this week with CPI and PPI, and then, you know, a couple more labor market reports, and then inflation reports before September. So obviously we'll be closely scrutinizing those, but I don't think anything too, you know, crazy in terms of changes from Powell.
Yeah. You know, he did, Dan, seem pretty confident in the economy still. You know, we've had data missing quite substantially, but his approach seems more, we're just cooling off from a really impressive second half last year, not so much going over a cliff.
And the government spending hasn't stopped.
Right.
It's still blowing out the spending, so that's going to continue feeding the inflation. They can wait, right? They can. I don't think that they're going to wait too long, right? September might be a little late. I'd like to see them go at the end of this month, or sorry, in July, or in, well, they don't have a meeting in August, right?
Right, exactly.
September. We're only talking about 25 basis points, so it's kind of like we've said this before. It's only a rounding error, right? And the concentration in the market, the other part of it, the non-bond market, is that there's a concentration in the market pushing it higher, and the Russell's not participating.
Oh, no, nothing else.
And you guys have been talking about that for months.
Yeah.
You know,
again this morning.
Yeah. And then there's what, $200 billion new order in AI chips from and Nvidia, just blowing out that market again, and
It's so much more important to the market than the Fed right now, isn't it?
and how much is it really going to impact?
Yeah. That's where I feel like, Caroline, you know, today it's like we've got all these notes on semiconductors, we've got the commentary from KeyBank, it's all positive, you know. Yesterday there was one note out that kind of said maybe NVIDIA has gotten expensive, but few have tried to argue against the trend, and it just really does seem like that theme ranks right now over the Fed pretty substantially.
Because the AI trade, especially the NVIDIAs of the world, don't need the Fed to cut rates to be beneficiaries, essentially, so they can continue this run higher. Yes, KeyBank, the latest to raise price targets. We had UBS and Wolf yesterday. KeyBank's higher though at 180. UBS and Wolf are at 150. UBS did talk about that wall of worry for NVIDIA because it seemed like sentiment was kind of waning, but NVIDIA is back up another 3.5%, 3.7%. Right now, we're seeing strength in chips, so it's kind of more of the same today. Although I will say that I heard you talking about AMD. We were talking about that yesterday as potential AI catch-up trade. That's actually back lower today, but Intel has turned positive. Micron is up 2% today, so not seeing broad-based strength across all of the chip makers, even if they have that AI lean, but NVIDIA, it seems like there's no stopping it, and it's inching closer to the 140 high, but analysts think that it will continue right past that as well, and they don't need the Fed to continue that move higher.
True. However, bonds, maybe you could pay a little bit of attention, perhaps, Dan. Bonds are selling off a tad here. Treasury market did respond a bit since Jerome Powell sat down.
Is it breaking? I didn't even get a chance to
We're
look.
We're down about 30 bips.
I noticed that we rallied in the futures price right before the unemployment number came out on Friday, and we had a little bit of a continuation. Market's really focused on Thursday and Friday, and I was hoping that we'd get some sort of indication from Jerome Powell about what's their policy going forward. They're not slowing their balance sheet down anymore, running their balance sheet down. They're not pushing up the Fed cuts. I was hoping we'd see something. Bank earnings on Friday as well. I think those are big. I don't think and then I don't know if you guys have touched on this at all, but commodity prices being so weak.
Right. Yeah. The last 48 hours.
Yeah.
Turned around. So at least Fed doesn't have to worry about that too much. But as we heard from Jerome Powell, people's inflation expectations are still pretty anchored.
And I don't see prices going down anywhere. I just came back from visiting down in some of the theme parks down in Florida, not to unnamed theme parks down in Florida, and it's super expensive.
Oh yeah.
It's not just a double markup, it's
Yeah.
triple, quadruple markups.
Yeah. Hey, real quick, Dan Grant, bond guy, tomorrow 10-year auction. You think that could be an event?
I think you still have to have the hedges down below.
Okay.
That could be an event. Could miss.
Little term premium potential ahead of the election.
And then a 30-year bond is Thursday, I believe.
30-year bond. We got the 20 on Thursday. We got the 30-year at 1 p.m.
You're right
on
back.
Thursday. Yeah.
I think they're vulnerable.
Okay. All right.
Vulnerable.
Thanks, Caroline Woods. Appreciate it, team. Thank you very much. You for joining Morning Trade Live. Trading 360 with Nicole Petalides is up next.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. So she had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Schwab Network's like no other financial media you've watched because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors, and everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time, relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We have a big day, a big week. We had record closes yesterday, the 35th record this year for the S&P. Today we'll focus on so much. Of course, our 360 spotlight, Boeing, after a whirlwind of a year so far. Our disruptor, Micron, after KeyBank raising the price target on this stock. Our 360 round, those travel stocks, as we continue to see increased travel demand as summer rolls on. We've seen some records there. And of course, we're getting all the headlines from Jay Powell's testimony today and tomorrow, and we're waiting on those key inflation prints as well for CPI and PPI. In the meantime, here's a look at the numbers. As I mentioned yesterday, the S&P had its 35th record close. The NASDAQ had its 25th. I think it's something like that. We're right about there. So here's a look. So if we gain today, these will be records again. S&P 5583, the NASDAQ 20,488. Those are gaining. The Dow and the Russell with down arrows, those small caps pulling back by about 0.5%. Right now, 82.35 the barrel, gaining slightly. 23.60 a troy ounce, down $3. For gold, 12.43 for the VIX. And we are watching all of these for you. In the meantime, I'm joined by Jenny Horn, markets correspondent here on Schwab Network, taking a look at Netflix, a price target hike over at TD Cowen ahead of the numbers that we're expecting from Netflix. Jenny.
Yeah, Nicole, I have to say that we're seeing a lot of analysts that are updating some of their coverage. Mostly it seems like right now to the upside, but TD Cowen today, like you mentioned, raising its price target to $775 from $725 while maintaining a buy rating. But the new target would imply about 13% upside from where we closed on Monday. Now the increase has come, of course, ahead of those very critical second quarter results we're expecting next week, but they overall said they believe that Netflix's broad catalog across multiple genres creates a durable advantage over time. They noted that TD Cowen's second quarter consumer survey actually showed Netflix is still taking a top spot for living room viewing, and besides the company's second quarter earnings and third quarter outlook, this analyst also cited paid sharing initiatives as well as Netflix's ad-supported tier as near-term catalysts. They said any further price increases they do believe at this point could actually act as a major catalyst, as we know that the password sharing crackdown, it seems like at the time, well, personally, I was a bit upset about it. It's been like the model for so many of these other companies to continue to see really strong growth. I mean, right now it seems like it's Netflix and Netflix only as far as streaming. It's like they're in a league of their own, and then everyone else is fighting for that second player market share, really. Netflix, I think, has looked like that also from a chart perspective. We're up almost 43% on the year. We've risen another 3% since the start of July, and now up a modest 1.2% on the session, just off of highs by about 0.5%. So a name that's been able to hold on despite the fact that overall streaming trends have actually been a bit mixed when you look at some of the legacy TV names like a Paramount or a Warner Brothers.
Understood. All right. Thank you for all of that, and we'll continue to watch that. As you noted, those earnings next week also will be key. Thank you. Jenny Horn, markets correspondent. Let's get some insights on the news shaping the markets. For that, we welcome in Jay Woods is here, Chief Global Strategist at Freedom Capital Markets. Good to see you.
Good to be here.
So I was following all the Powell headlines today. I feel like we got a lot. I mean, consumers are spending, right? Mm-hmm. You know, he needs more reassurance that inflation's going in the right direction before they are to cut. A hike, not likely. Did you feel that he said anything that surprised you?
No, and that was what we were hoping for. But surprise us. Do something different for once in your life. No, he stuck to his talking points. We're going in the right direction. Then he goes back and says, well, we didn't get there fast enough. It's slow. So he's kind of painting himself into between a rock and a hard place, as Miss Schneider, a guest of yours, tweeted out early, and I had to retweet it. It was so good, where he's not saying anything, but the time is getting closer. He had the opportunity to use this platform to cause that pivot, to give us a hope that September was coming, and then actually maybe set up July 31st for that rate cut, because that unemployment data was exactly what they needed, slowly ticking up. We get the CPI on Thursday. He could have set it up where if the CPI data continues to go the way we're going, that could be what we need, but he just kind of slow and steady. Things are progressing the way we want them to, but I'm not ready to do. We need more data. That to us is boring, but that's typical Jay Powell.
And it's typical Fed speak, right? Mm-hmm.
it's sort of like if we raise, that could be problematic. If we cut, that could be problematic. So we're just going to sit here and stand by. And I feel like we've gotten that now for the whole year. I mean, even into December, I don't know how likely even December is at this point for a cut.
Well, I think we'll have one by September.
Yeah,
The
you think
data
so?
is there. He's just not going to telegraph it
Yeah.
2 meetings ahead. Now,
All right.
he has telegraphed everything.
I think it was at 77%
He was too late
or
to hike,
something.
and then he rushed it, and then there was one time he had to
Yeah.
leak it to the Journal that we're going to make this move. So he hasn't surprised us when it comes to those FOMC meeting days.
Yeah.
So he'll let us know, but today was an opportunity to do it, and he didn't do it.
September 75%. So we will see.
Mhm.
That being said, tell me a little bit more about the big picture. How do you feel about the market? We just had our record closes again
35
yesterday.
record
35
highs.
to 25. It made it easy for me.
25 and then Nasdaq.
So, you know, I get up in the morning, I read everything, I stick it in my brain, and then I hope it's right later. You know, but, right, it's pretty unbelievable. Nobody expected this, but do you think we'll continue to see records?
I think we're going to continue to see records, but we're not flying away right now. What we're focused on is the rest of this market. We talk about breadth, and what happened today, the Russell's down again, flat on the year. What we need to see is more participation, and I think that could set us up for a rocky August, September, which historically are rocky months. So right now, I think that those big stocks, those tech names, are going to continue to lead. We'll see. Earnings season kicks off officially on Friday with J.P. Morgan. We have Delta and Pepsi before that. I think Jamie Dimon is going to have a few interesting things to say. They've traded lower the last 6 earnings calls, even though they've beaten, and the stock continues to make new highs. But Jamie Dimon he's a pragmatist. He always worries about what the next headwind could be. So we're going to hear about that headwind when he talks, and it could affect the stock. But J.P. Morgan looks fantastic. It already broke out, and then we get the rest of the financials on the heels of J.P. Morgan Friday. We get Goldman and Morgan next week. So that to me is the next sector to watch.
Yeah, I feel like a lot of people are speaking positively about Wells Fargo as well, to keep an eye on that, which actually had some PR troubles, as you know.
They have.
But, you know, that there seems to be a lot more positivity on that one. Let's talk about some of the Mag 7. I mean, you talk about names like NVIDIA, and Tesla's even making a comeback and surprising folks. So when I look at a name like NVIDIA, right, some of your thoughts. Let's see, month to date up 7%.
Yeah, that's a slow month.
132.
That's a slow month for them. What we saw last week was very interesting. You talk about Tesla and NVIDIA. They're the only 2 stocks in the Magnificent 7 that didn't make a new 52-week, actually a new all-time high. So we saw rotation within the Mag 7 last week. Tesla's up 80% from its April low. What a run. It's a little overbought. It wouldn't shock me to see it pull back coming into its earnings on the 23rd. And then that big event, 8/8, we'll talk before then when we hear about the robo-taxi and autonomous driving. But what we're seeing, instead of rotation into sectors, we saw rotation in the Mag 7. But when you have 5 of those stocks, and it's not NVIDIA making new highs, there's a story there, and it's a positive story. So I think the strength continues to be in that leadership. We just need the leaders to kind of get the rest of the troops to follow along who are not seeing it.
So what's your advice to investors now? I mean, when you talk about, you know, you talk positively about some of the banks like J.P. Morgan, right? You said something. We talk about, you have Pepsi and Delta coming up with earnings. What's your advice for investors?
Yeah, I think there could be viable dips in the financials. I think J.P. Morgan is a stock that continues on its upward trajectory. If Jamie Dimon gives you an opportunity to buy a dip, the last 6 times we've traded higher after it's traded lower after earnings. So I think the financials still will be leaders. The XLF, here's a fun stat for you. It's been around for 25 years. 15 of those 25 years it's been up. When it's up an average of 21% a year. It's only up 10% year to date, and I say only. So it has room to run. It tends to be streaky, so I still like the financials. Pepsi, that's a stock, you know, it's down 3% year to date. Coke's up 7%. The staples haven't really been moving, but it could trend higher. It's a little boring. So for your active traders, there's really not much there to like. And then Delta is the best performer of the airlines, up 16% year to date coming into the week. Its transportation is streaky. It's probably something I would avoid. And if you have some profits in some of those big names, you may want to take some of that off the table and get ready, because I think we're going to hit some volatility at the end of the summer.
And then also, obviously, we're waiting on CPI and PPI, and those will be key. So thank you for all of that. Jay Woods, great to see you.
Always great
Thanks
to be
for
here.
being
Thank
on.
you.
And look, any up arrows today, another record will be made. Jay Woods, Chief Global Strategist, Freedom Capital Markets. Thank you. Plenty more to come here on Trading 360. Up next, Big Three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes to the technicals. Joel Hawthorne, Retail Trader Magazine, takes us through the trades for Okta, Palantir, and JP Morgan Chase. Next here on Trading 360.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Penaleves, live on the floor of the New York Stock Exchange. It's time for the Big Three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Joel Hawthorne is with us, Retail Trader Magazine. Great to see you both. Look, we're still getting headlines. This is what used to be known as the Humphrey Hawkins testimony, so we'll keep an eye on Powell for 2 days, but I think we know what he's saying. But if any surprises pop up, let me know. In the meantime, gentlemen, any gains today will be new records. Joel, how do you feel about the market overall?
So glad to be on the show. Thank you, guys. Ultimately, I am a bull, and I think that what I'm seeing here is just really making me nervous, though. I think that just seeing so many names rally and go to their highs, all-time highs, 52-week highs, that's a narrative that's been going on for quite some time. This bullish momentum has really been going since about October, late October, early November, and I just really am anticipating some kind of breath in the market, some kind of stoppage and some kind of consolidation. When that happens, I don't know, but I am very, very nervous and cautious about that. So I am a bull, but because it's just so hard to fight this trend, but I am getting very nervous.
Yeah, you're not alone. I mean, I've been speaking with people that are just taking profits faster. So they'll buy a dip or they'll make a move, but when they see the profit, they take it faster rather than leaving it there because they too are nervous. So I've definitely been hearing a little bit of that, Joel. Let's talk about Okta, which have this high of 114 and change back in March after earnings, but then the next earnings gap down. Tell me a little bit about this story and why this one jumped out at you.
You know, originally this morning, just right around the opening bell, I was looking very bullish, and then obviously we can see this thing is down over 6% right now. So not looking great for bullish sentiment here on the day. But this is one that I thought really could have some momentum to break above that $100 mark again, and kind of see some upward action. But right now, I mean, we're down 6%, over 6%, down $6 right now. This one's just getting annihilated today, but overall, we're still thinking with somewhat bullish.
Look, you know, unless there's another reason, if you liked it 6% ago, you must really like it down 6%. It's a buying, right? And you liked it this morning. Unless there's a reason it's really selling off, and I understand what you're saying. But, you know, when you like something at $100, don't you like it at $80 better? You know, I get what you're saying. But it does bring some apprehension about market turning or what's behind it. Because it is a big move. Ben?
It is a big move, Nicole, but it's still a stock that's been within a range over a long period of time now, and within that bigger picture, longer term range, we could see some upside potential. So you're gonna notice the pattern behind me here, a very bearish type pattern, and definitely not what Joel's looking for if he wants to get back up and through that $100 level. But I agree with him, that's a possibility, as we're really kind of in a bit of a random phase here right now. We'll break that down, we'll get into the bigger picture. Let's start with some of the selling we saw today, the high conviction move lower. Actually, when I drew these charts and got them prepared for us, we were trading around 95.50. I was identifying this vertical move to the downside. You can see that that's continued. We always talk about within trends, continuation being more likely than change, or another way of saying it's your friend, simply put, right? So positioning with it. And the reason you say that is because these patterns that play out, the high conviction move, sideways consolidation, that transition from one phase to the next, you can actually see it occurring. Look at this, multiple times here. If you get very granular and pull out that kind of fine-tooth comb, that microscope, I mean, this is a 1 minute candle chart, so I don't want to spend too much time on it, but I did want to talk just briefly about those two phases and about the conviction that we're seeing on this intraday chart lower, taking a step away from the 1 minute into a longer term chart right away. We're going to get into it here, and this is why I think that, again, we could now start to see some sideways consolidation if we were to find our way back to this $100 level. Just build a bit of a range here, upper extreme around 115, 117, we'll call it, lower extreme around this $87, $90 level. But bull trend to the upside on the longer term here. You can see, now I did mention that this stock's very familiar with being and has been stuck in quite the range for some time now. So again, random price activity while you're in this horizontal phase where there's opportunity oftentimes amidst the bulls and the bears here, a little bit of a meeting of the minds between both sides. And definitely if you're going to look for smaller gains within this range, that's a possibility. But longer term trend down here. And again, we just looked at the daily, which is showing a little bit of an upward trend. So this is a stock that's kind of mixed. As I said here, there's some consolidation playing out here, and there's a bit of opportunity, I think, for both sides here, depending on your parameters and your time frame.
Right, understood. You know, it's interesting because it's not that long ago that Guggenheim reiterated a buy rating and put a 130 target. I mean, they did that on the 25th of June, and that's a most recent analyst call. RBC on the 17th maintained a 125 price target. So they are also feeling bullish like you, Joel. A quick thought here?
Reopened, I think, here at about $98 a share. And this is when I was looking for structuring this trade for selling a 90 put, simultaneously buying an 87.50 put, expiring here next month around the 16th, picking up a credit of about 38 cents with a break even of 89.61. So although the trade is still favorable, there's plenty of time because that we are still above that break even for bullish for this bullish spread. But it's very uncomfortable right now in the event that because we're trading so close to that 90 strike. So still bullish, but to this pullback to below 6% on the day makes it extremely uncomfortable.
All right, understood. Next up, Palantir. And we could just say, wow, right? New highs.
Yeah.
Some thoughts there.
You know, this is a stock that I think still has room for some momentum to the upside. I think as we start to continue to talk about the AI stuff, I think this is one that really doesn't get spoken about enough. I think everything from a lot of the people in the C-suites are some of the leaders in that AI arena. And I think this is one that's just going to continue to be slept on and gain some momentum for shareholders. So this is one I'm very optimistic about.
Right, understood. So you want to get long on this stock. You feel bullish. It's up 79% in 1 year. Ben, take a look at the chart, please.
Yeah, Nicole, our last example was kind of mixed, right? Depending on which time frame you were talking about and which pattern you were looking for. But Joel did mention how he was a little bit concerned about some of the selling that we saw on that last stock as the magnitude, the pace that we had seen lower. But let's take a look at Palantir, because this is a completely different example. I mean, there is a bullish narrative playing out here across multiple time frames, and it's easily identifiable. It's not as difficult as our last example. Let's start off with the 5-minute candle chart. You can see two phases of development. I've identified them with these two separate areas. Look, high conviction to the upside, sideways consolidation, building balance around this 2770 level. Now, you could actually take a step back. You could really dissect this and look at this as three separate areas, but just giving the benefit of the doubt to the bulls here and kind of bigger picture, broader range. When in doubt, zoom out, look at this area that we've been forming over the last couple days this week as one larger area. All right, moving away from the 5-minute candle chart, we've got an hourly queued up here, going all the way back to when the stock was trading down around 2021. We're talking about middle of May, we'll call it, all the way up to recently as high as just shy of 28.40. Again, kind of balancing around this $27 level where I see it, the bulls want to hold above 25. As long as they do, it looks like this pattern or this process we're seeing value form at higher and higher levels continues. We are forming acceptance of this upper level here right now by establishing value. They want to see a breakout, right? In addition to holding above 25, breakout and form a new area of value, continue the staircase pattern to the upside here, and just that wash, rinse, repeat type situation. Wanted to look at this daily candle chart with you through two separate lenses. One, the idea that we're trying to get something vertical going here to the upside. Even today, although we are lower, we did see a higher high and a higher low. So this breakout is happening. Tomorrow will be key, right? Do we take out today's high? Again, not all out loss, just the fact that we've come off, because we did take out yesterday's highs and holding above yesterday's lows, it looks like. But again, either a vertical phase here or another scenario that I drew up here, which is not necessarily what the bulls want to see, and that would be a bit of a double top kind of playing out here, right? And ultimately seeing, again, that 28.29 level establishing a bit of a hurdle for them to get above 27.28. So just keeping an eye on that. Again, potential double top or breakout. I think tomorrow's going to be somewhat telling with this one.
All right, so we'll have to wait and see a little bit. You see the double top. Can we break out even further? Final quick thought here, and then we got to get to JP Morgan.
Absolutely. Looking for an entry price near 26.54-ish or lower for a possible long-term hold there of the stock itself. Like I said, I just think Palantir is really one of the slept-on leaders in the AI arena. So definitely want to be bullish here.
Right, understood. All right, next up, JP Morgan. Of course, Friday we'll be hearing from all these banks that kick off earnings season. You heard Jay Woods a moment ago talking positively about Jamie Dimon and JP Morgan overall. Where do you think this one's headed? Just off that high of 210 and change. Where do you think is important to watch for JP Morgan, Joel?
You know, I'm a bull here. I do like JP Morgan. I think having some risk in the banks, if I have to have that for my portfolio, it would definitely be in JP Morgan because they are the leadership as far as banking goes. Currently trading 207. I think that in this very near term here, near resistance levels would be somewhere along the lines of about 208 and change, 208 and a quarter, all the way up to possibly 211. So I am optimistic here, and I think that if this market continues to be favorable, a bank like JP Morgan will reap the benefits of that. So looking for bullish momentum here.
What's interesting is Wealth Research recently cut JP Morgan to peer perform and highlighted Bank of America as the outperform. And this was a valuation call. And a few of the analysts' calls that I see here, the recent top for price targets, Keefe, Bruyette, and Woods has 211. I saw another one for 211. You know, I don't really see a lot higher than that. So I think they wonder if this name is fully valued or not. Let's talk about the chart, Ben.
Indication's topped out yet, Nicole. If anything, the exact opposite, right? This one is actually seeking value right now higher on a longer term time frame. We'll get into that chart in just a minute, but let's begin with the bullishness we're seeing on the hourly, the 60-minute candles. This is a stock that's rallied since the end of April. We're talking beginning of May, around 180, 190, all the way up to 211. You can see that we are establishing value and currently balancing around 208. So again, acceptance of a big move up here. We're talking about a lot of conviction on this screen, bottom left, top right. As long as we hold above 200, it looks to me like the bulls are still in charge, right? Because as we're balancing, constantly referencing that last area of consolidation we formed, and again, as long as we hold above, that idea that we're establishing value at higher and higher levels appears to be a valid one, a valid working assumption. Let's take a step back away from the hourly candle chart. We're going to add some time on here now, going all the way back to August. We're going back to September of 2022. Look at this. 3 really well-defined areas of consolidation. Again, this is why we're giving the benefit of the doubt to the bulls here, and those that are looking to position with the trend are looking for long opportunities. We've been talking quite a bit about this right here, Nicole. You get a balance that forms, and then you get a test of the middle of the range, right? And then lift off as the bulls come in. And I think that might even be some shorts that are being forced to cover up there. But either way, it's continuation of the pattern. Again, really well-defined trend up here. One more step back, hourly, daily, and now a weekly candle chart. Take a look. I identified 2 areas of consolidation. 120 is the one that we're breaking out of right now, all the way up to 210 again, and yeah, simply put, a vertical phase. At some point, though, Nicole, we are going to get a little bit more rotational, right? We will get, okay, I shouldn't say that we are going to. This is what the bulls want to see, is something a bit more rotational. It's tough to sustain this kind of momentum, a breakout phase like that, a vertical phase, and then again, that transition to the overlapping rotational is value being established after the breakout. So they don't necessarily want to see this move end, right? But they do want to see it accepted.
Understood. All right. Final quick thoughts. Joel.
Absolutely. Definitely looking to be a bull here. For an entry price, preferably below 206 or lower for a long-term hold. I think, as I said, in this market, you know, we've seen a lot of bullish momentum, want some exposure to the banks, and if I'm going to have that, I would love for it to be at JP Morgan. So looking to be a bull here for the long term.
Yeah, and on Friday we'll have Wells Fargo, Citi, Bank of New York, Mellon, and JP Morgan to kick off those financial earnings. So it's going to get super busy in this group. Thank you both so much, Joel Hawthorne and Ben Lichtenstein. Great to see you both. Thank you. Coming up next, a spotlight on Boeing. Obviously, it had some new headlines, and this one is in focus. We'll have David Nelson with us after this company pleading guilty. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, just for traders. All
Jimmy
so you
comes
can
back.
trade brilliantly.
And he's looking where the spy is right now. And he goes, hey, gets a knock on the door. Hello, this is Schwab. Jim, we've heard of your double bottom. And we want to ask you, do you think this is a great opportunity? Schwab. Yes, I do believe this is more than just a double bottom. This is a triple bottom. Now we've got a formation of a snake. It's called a downward progression. Oh. Okay. So where does it start, Jimmy? You get your snake out. You know what I mean there. Talking about your chart. You see, I have all the patience in the world. Got all the patience in the world here. We pull up what one we're going to trade. We've got the SPY. So far that we've been doing the 557s, and we're at 81 cents. And we've got to get 10 of them. I'm at Service about Shibibi. So I review my order. Got the July 10th, 557s. We're at 77 cents. Okay, now the crowd's going wild here. Go ahead, quiet. 10 of them. Get ready. The eye of a cucumber right there in my mouth. Oh, excellent rye of a cucumber. Okay, got a double bottom. I think it's now or never. So we're at 78 cents. The crowd's going wild here. Get 77. 77. These are the 557 strikes. That's 77. Okay. The crowd's going wild right now. Jimmy's got some at 77 cents. Let's go to the 10th. $0.77. There's a message in the room. Blake it. You didn't blake it. I got a booger in my nose. Can't wait to pick it. Oh, we're at 77 cents. 77 cents. 77 cents. 77 cents. We're trying our best here. So we got the double bottom. I had plenty of knocks on the door. And I called this a 1-2-bit 3-bis. And we're in at 77 cents. We don't know what to do right now. It's kind of going wild here, sports arena. Jim, can you tell us what 10HTH means? Yes, it's called the 10th epithet. The 10th epithet. A 10th epithet. Blanket. Rob. Magnificent. Get your magic marker out soon. What you're about to witness is going to be one of the best runs you've ever seen. You really believe that, Jim? Not really, but I know how to count to 3. And if you can count to 3, you can trade with me. If you can count to 4, you might make a little bit more. How'd you get that 77? Now we broke out of the snake. So far, this is a very beautiful candle forming right now for the third one. We're at 82 cents. The crowd's going wild at the sports arena. Let that bowl out. If you know what's best for you right now, I think you should. How'd you do that? Okay. Hickory dickory dock. Let's call this spy. Uh-oh. I didn't want to see that. Let's see. Very good. I'm getting ready to have a sneeze. July 10th. Back to 77. Ooh.
The names that it came into the start of the year with, and everybody's looking for the broadening out, but when you look at the numbers, they're not there. In aggregate, those other 495 stocks,
low blow.
In aggregate, those numbers are probably, the estimates have probably gone down about 5%. So that's why everybody's parked in those handful of names that are just delivering right now.
So you're just holding on to those, riding the momentum.
Wow.
Right? All right, David Nelson, great to see you, Bell Point Asset Management. Thank you so much.
Take
Coming up next,
You're
a
just
look
not
at
there.
Micron. That is our disruptor today. Positive note over at KeyBank. We'll have all the details and an example trade.
Jimmy's
for you
scared now.
Right here on Trading 360 on Schwab Network. We'll be right back.
Don't worry, Jim. Snake breakout, pullback. Damn, that's some mean music right there. My dad, he used to be out and he used to do windows. My dad used to be a pellet mill operator. My other dad used to work for the Godfather. Whoops. Probably should have not said that one. Dad, man, I found Washboard Jim. He is the... He is James Howard Jr. Break it. Okay, we got Boeing CLSK at 1532. Whoa. Well, well, well. Looky, looky. It could be on watch. Right now I'm in the SPY. I'm watching it real close here. We broke out of a snake. Now we've had the pullback. I think next thing would be the boom or the breakouts. We had the snake, breakout, pullback, and now we just need to break out of the boom for the boom. I'm going to give it less than 5 minutes. Clock starts right now at 10:42. So this will be less than 5 minutes. It could be a little early because the fat cats ain't going to be back for another hour and a half. But we're waiting patiently right here. 79. I said 42, so we got 45 to 46. 10:46. Dingling just went off. That could be good news. Yes. No, it's not good news. It is, and it ain't. Okay. 1 minute has passed. J Powell still speaking. Trash pickup for retail traders. I'm one of the best trash talkers out there. Okay. Come on now. Break it. I command you to break. So we've got 2 more minutes. This is where it's got to do its boom and not pull back. Go ahead. It's your turn. If you break here, my students will be very pleased. And so will my master. I'm going to stick out my little toe out in front of my big toe and say 556.21 has to break. Upon that, I'll be making some kind of business decision. We understand, Jim. $5.90. Can we break if we break 556.21, I do believe we'll break the 200 SMA and the VWAP. So this is an exit idea right now if you want to get out of the trade with Washboard Jimmy. But I'm going to stick this out because so far we've got the snake, breakout, pullback, and we just got the boom at 85 cents. So here I could take an A+. Are you serious, Jim? I don't joke around. Did you just hit the 200 SMA, Jim? Was that an exit I did 87 cents? Like I said, either one, baby. How do you do it? Well, you got to enter on July 10th. July 10th, strike at 557 at 77 cents. Now don't tell nobody about my trick. About July 10th. Right now you're at 89 cents. I think I can make a business decision. You're guaranteed winner every time if you follow this path. Not every time, but the Terry 10th at the 10th time it happens, you will. That's called the VWAP trade, right? Damn, Jim. How do you do that? Well, you got to make sure you got a booger in your mouth. Carry a lot of snot around, do you? No, you tell me and I'll tell you. I think that was beautiful. That's how you do it. Oh. That's how you do it. Well, Right now, 91 cents, baby. Well, we're at 45 on the other one. My WM. Oh my, 90 cents. I think that's a bingo. IWM, we got it to the 200. It's a win. The crowd really appreciated that trade, James. That can go into your vacation fund. I'll give you 10% of my winnings. Oh my God. Hello. Jim, what a beautiful call. It's kind of scary, wasn't it? Well, at first it was because I had to add on. But you give me the stigma to go ahead and hang on to these trades and the conviction that it takes to stay in it. And I had the conviction, sir. Well, if you go down to the content, you can contribute to my vacation fund. Oh, I didn't know that. 46 cents. Uh-oh. 200 SMA. Mike? What do you tell the people out there? I've never seen anything quite like it before, Jim. You were down on that trade and you hung it out. 200 SMA. Jesus Christ. Uh-oh. Uh-oh. Oh, 48 cents. Jim. Randy. I'm nervous. We're at 48 now. I can make a business decision right here. Think it would be the smart thing to do. One day after another. It reminds me of a song I used to sing. All I hear is crickets. Back in the day, they used to throw bras up on stage. Now they throw chairs. I can make a bank deposit withdrawal here at 48 cents on the IWM. Jim, is that serious? Are you serious? Yes. I'm gonna do that right now. Come on, Jimmy. If I can get 48, there's 49. And the SPY's now at 93. Just keep going. If you know what's best for you. I'll be very happy with the 49 cents. Mike, I'm coming to your expertise here. Should I hold the position? 2, should I net some profit and hold a position? Or 3, should I just exit the trade? He's going to say he's too busy to answer. I'm in the IWM. I've never had any experience trading the IWM before. In capital letters. Randy, I need a second opinion. Yoko, I need a third opinion. Imagine if I get a pop on this to 60 cents from 49. That'll secure me a 5-star hotel room. Because it'll give me 10% of your winnings. You're a great vacation salesman, James. There's my 50 cents. Now we're going to business. You could sell it right now, Jim. My mic is hot. Michelle's hot. %, stay in the trade. Come on, Pablo. Come on, Pablo.
It's your money. Use it when you need it.
Send it to the Jim Vacation Fund at 1-888-888-8888. Just buy it in the bottom of the content. Again, that was Jim's Vacation Fund. 888-888-888888. 8. $0.52. Oh yeah. It's getting very juicy there. I think I'd be doing the right choice right now by making a beautiful business decision and guaranteeing me some of my profits here, like all of them. But I'll show you. Nancy. Did you get that bill passed, that IWM bill passed yet? Yeah, bring me a shot of vodka and a Valium. Yes, I do have connections to the White House. And what's got into her husband, he always shows up to the door now with a hammer in his hand. I said, up there she, see, now I'm getting, ever since her husband found out, I get these weird, mysterious phone calls. Always clean. This is Jim. May I help you? No, I did not go out with Nancy's husband. No, this is Jim with Always Clean. And no, I did not go out with Nancy's husband. We're at 51. No sleeping on Tesla. Don't sleep. Jimmy's in 2 trades right now. Woo! I think Jimmy hit his target. We hit our target. Vegas and I did. I hope everybody went back and watched Jimmy's video. Yes or no? If you haven't, spank. You should have by now. Yes, I had a crush on Ronda Rousey. I had a big crush on Ronda Rousey. We had 127 views on the play of the week. Damn, Jim. How do you do that? It's not that hard. We're at 54 cents now, Mike. I'm getting ready to have an orgasm. I should get a very good grade calling the bottom on this magnificent. Does anybody know how to count to 3? You can trade with me. Right now, this is at 54, and I could walk out the door. I don't think you understand. I'm not a one-man band. There's Mike's Fibonacci target. Woo! 53 cents. I could take this right here. Be the happiest man in the world. How'd you do that, Jim? The timing was perfect. It wasn't perfect, but it is now. I want 201.98. I'm gonna stick my middle finger up there. 201.98. Magnificent. I'm going to stick my middle finger out for IWM. And I'm going to call 201.98. Please put that down on paper. Damn, Jim. I'm a little nervous. I'm just a little nervous. Uh-oh. We're at 56 now. Put it on your big boy pants. Okay. JG who? There it is, 56. Oh, God. Jim. Do you have faith? Can you get 201.98 out of it? If I did, we'll get up to 65, maybe 70 cents. Mike says stay in until 202.50. Are you serious? Damn. God, it's a spy. What's going on? You just happen to see the SPY? They're at $1.02. Uh-huh. Oh yeah. These things are at $1.02. Should I get rid of them? Brandy. Damn Jim. I can't believe how good you are. Okay. I should make a business decision, Randy. I mean, I don't look no better than that. Oh my gosh. The IWM. Jim, I'm calling you up to tell you that I think me and my wife are going to get back together again. Yeah, I bought her last night. I bought her a brand new car with the winnings off that IWM trade that you called out. And I wanted to let you know that I'm going to go ahead and donate 10% of my winnings to your vacation donation fund. Well, that's a funny one there, Magnificent. He's being too funny and break it. It's such a beautiful day today. But 1, 2, 3 on SPX. Make a business decision. I'm looking at the sunshine. Now when I'm nine feet under the ground. We have a 1, 2, 3 on the SPX. Let's say that was a successful trade. I accept the A+, please. And Jim weekly play of the week video, and we're going to be talking a little bit about Tesla. Whoa! Play of the week. Oh, God. Big winner last week, and it's really been our top dog for a very long time. Hello. Vegas is going to speak, so. You are the ninth caller. You are the ninth caller, and spin the wheel.
Everyone. Thanks for joining us in another
For the Tesla drawing.
Play of the week. And so we had a very interesting week.
May I please have your phone number, name, and address?
How have you been?
I've been doing great. You just won a challenge on the Tesla challenge that we had this week at the Jim in Vegas show. How do you feel?
Awesome. Well, I'm calling to let you know that the government is giving a subsidy to pay your bills without any cost to you. I just have to check a couple things to confirm your eligibility. May I know if you already have any government or state provided health coverage like Medicaid or Medicare?
No, I don't. I have Obamacare. Now, have you ever drove an electric car before?
Well, that qualifies you for the subsidy. Just one last question. Do you have an annual income of less than $50,000?
No, I don't. I make 260 grand.
Perfect. You do seem eligible for this subsidy. We have a benefit specialist on the line who will find you the best benefits available in your area free of cost. I am transferring your call now.
When would you like to come pick up your Tesla? I'll be transferring your call right now. The same people just called you? Do you give them the same answers I do? Sometimes it's Sharon, sometimes it's Tammy, sometimes it's Melinda. Hello, my name is Sherry. I heard that you are the master of the retail trader of catching knives. I'd like to invite you over for dinner tonight and see if you can fillet my filet mignon.
Nothing for you.
Okie dokie. Spy looks good here. My screen's not sharing now. Take that woman to a different level. There we go. Well, I'm going to go get my coffee going and I'll be right back. That was quite interesting. The SPX 123 started to pull back. Jimmy called it. I'm trying to save you money and get you out at the highest resistance levels. Oh, yeah. do. Yeah. Well, snake, breakout, pullback, boom. Uh-huh. Whoa. Whoa. Yeah, damn, man. Jim. Whoa. Beautiful job. Oh, yeah. Oh, yeah. Oh, yeah. That's right. Earnings, they're going to be fun this week. Friday. Of course, they're going to be doing good. Ooh, Tesla. Profit taken, yay. Good job, Jim. You knew right when to get out. Takes a real man to admit to that. Well, I had people going against me. Oh, that's a low blow. They're magnificent. Jimmy did a video on Tesla. It should be good enough. Should be an A+. No respect. It don't take much to break my heart. You know what I'm talking about.
Check this out. I'm going to show you how.
Gosh, I don't want to listen to that. What you talking about, man? A+ goes to Vegas and Jimmy for the video. Very good. Microsoft down 6. Jim, that was a beautiful call off the bottom on IWM. Here at the I Watch the Best Institute out of New York City. We've been watching your trades and want to let you know we're going to donate 10% of everybody's donations this month to your vacation fund. Where can I find this? It's back there at the bottom of my content. SPY just pulled back to the 200 SMA. As Jimmy stated in the IWM, it got up to a new high. And the rest of them came back and touched their supports. So if you're in the IWM right now, you make a business decision. Thank you very much. 63 cents. Very good job. Very good job. $0.64, brother. Damn, Jim. You did it again. Oh my God. Look at that. Isn't that beautiful? It's the most beautiful thing I ever saw in my whole entire life. Very narrow range, yep. Jimmy's out of IWM. And for that, I'm going to celebrate with an instant cup of coffee. Thank you very much. I tried to tell them and they weren't paying attention. $202.50 target. Well, try to hold your urine for more than 3 hours, Mike. You make weird decisions. Piss in a jar. Oh, God. Oh, Jimmy. I'm very quite proud of myself for staying as long as I did in that trade. And Jimmy's very proud too. I think I'm more proud that I called the very bottom. For that I should get an A+. Josh Brown, he got on my bad side. So we got us a Josh Brown pump here. Yes, I have a good side. It's only visible to people on YouTube. Woo! Man, I ain't got my apron off yet today. My shoes haven't been off yet. I've made my limit. Real simple today. I like it. It used to be very, very hard. And see, when I'm coming back now, I just got out of that IWM, and now look at me here. Jimmy's checking out the SPY and the SPX. Hey, Jim, you got a 1, 2, 3 coming up. Damn, you're getting good at it, man. Yeah, let's draw that trend line across here. Let's get ready for it. I'll go get my coffee going. And we got a little head and shoulders right up in here somewhere. So we got the first support right now. Second one's going to be right here. Let's go ahead and get that priced in there. There's your second support. There's your third. And your first one's right here. So let's get this thing going. I'm going to set an alert right here for head and shoulders. Patiently wait. Okay, Jimmy's getting ready for head and shoulders on the SPX at 5579.56. Do I have any rejections on that thought? Please keep them to yourself. Woo! 5579.56, Mike. Chart Faz, please. And bring back some flashbacks. The linear channel says we're at resistance. That's going to move over here. He said please, so I got to do it. I was going to make some coffee, but he said please. If you wouldn't have said please, would you have done it? No, because I need to make some coffee. Faz looks very interesting. We can see 112.52. 112.45. Jimmy likes. Jimmy likes. Jimmy says we could see 112.45 by next week. No, I'm not getting. No. No, I'm not going to give myself an F for missing Faz because I took SPY and SPX in its place. If it wasn't for that damn SPY, I would have. Find that quite interesting, don't you? I miss that, though. I kind of do. But calling out IWM for the first time, I'm going to give myself an A+. Oh, boy. So Jimmy sold his IWM. Now we're at 59. I'm gonna go get my drink ready for me, and I'll be right back. Now, I'll leave it to the chartist artists. Okay, Frank.
Is that the right play, right?
Right.
Is $288 billion market cap versus 3.1 trillion market cap? It seems like if you like AMD here, it's the mother of all pairs trades, Tom.
Right.
If not, I don't know. Act accordingly. It's risky out there.
And they talk about the valuation. It's up there about the same forward-looking PE as NVIDIA. That's the scary part. But Lisa Su's a good CEO. But this one, you know, that debit that you pay $450, that's your risk, as I mentioned. But that break even of 179.50 to the upside cap, that's only about $4 above the current share price. So you don't need like an explosive move, and you've got 5 weeks in this trade.
So the mother of all pair trades, you don't have an interest in a 1x10.
We got a new snake formed.
This is a directional
An
play.
expansion
that
snake.
buys one, call vertical, sells another.
Which means
unbalanced call,
a little weaker.
Limiting your risk on that one. Also, with all upside exposure for profitability above 179.
Fat Cats will be back in less than 29 minutes.
Fast market, but stick around right here on the Schwab Network. Next Gen Investing is coming up.
The Fat Cat Hour will be less than 28 minutes. I hope you're all ready. And now I'm going to go get my beverage.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on Schwab Network.
Man, look at her go.
And on all your favorite streaming services.
Oak. Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day. No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Today through the 3 of the 4 major indices, I guess I should say, are pretty much unchanged now in the NASDAQ, but weakness led by the Russell, which is down, about 0.2% here in real time. So it's been another quiet session despite some of the remarks we heard from Jerome Powell earlier today.
Yeah, definitely some shifting under the surface going on. You saw the Russell and the Dow both weaker earlier, and the NASDAQ out in front on small breath once again. Said another way, very little stocks participating to the upside. As that has widened out and more stocks start to have a good day, make it make sense, the NASDAQ gets weaker. And so you see that every single session, more stocks participating, more of these indices do okay. S&P is kind of flat, NASDAQ gets weaker. Less stocks participating, the NASDAQ starts getting stronger and outperforming. And so it's been a story in the mega caps. And as those mega cap rallies have weakened a little bit, they're still up largely, but as they've weakened a little bit, led a lot by Microsoft, which is one of our names we'll talk about in a little bit, we've seen the NASDAQ get a little bit weaker. So look, it's deja vu. Same story you can only say so many times. So we'll see what happens, Jenny, as the day rolls on.
Make it make sense is a good way, I think, that we're all sort of thinking about it right now, because it doesn't really make a whole lot of sense. And we'll be going through the individual stock movers as always. I think of note, though, is the name we look at pretty much every day, and that's NVIDIA, which is up another 1.5% on the session. That's actually pulled back from its session high. So amazingly enough, that name has been able to carry what feels like this overall market. So that
it's
name,
$3 off its highs, too. So it's like they're selling it. I mean, it's giving back most of the rally.
It has given it, yeah. Now we're basically, that's what's so amazing is the 15% correction we saw just like at the end of last week. Now we're pretty much back to those levels.
Yeah, we're back to those levels. We've given back over half the rally intraday, and this is one of the things that we've talked about kind of throughout the programming. Is look, VIX is super low. Now that you guys talked about this on Market on Close yesterday. But that doesn't mean that it's quiet. There's so much going on in like these individual stocks each day. Nvidia's had like a $5-6 range today. That's a massive move.
It's up like over 7% now over the last 2 trading sessions. And Tesla, another name that's up 4% today almost.
On top of what, 50% in like the last month?
Yeah, right. I mean, and now it's like well off 60% off its low. So I mean, a lot of individual movers together today, despite the fact that we are very much in a light season of earnings, as we do ramp up into the big banks later this week as far as reporting goes. But as always, we'll kick things off with up vote and down vote. And obviously, given our excitement today to talk NVIDIA, we'll be revisiting that name later on for FOMO today. We'll also be looking at Eli Lilly, also touching new all-time highs today. That name has been, I mean, like the most resilient of all of healthcare, it seems like. And we'll close things out with ticker symbol ZETA, as one analyst is seeing some optimism, a name that we have never, I believe, discussed before. So I'm not even entirely sure how to say it, but I know the ticker.
Zeta.
Zeta. That's what I was going to guess.
One of the Greek letters.
Yeah, okay. That makes me feel better because I was going to say it like that, I think.
Yeah, so we'll look forward to that with George. Of course, George always on the case for some of these overlooked type names. But let's do up vote, down vote, not endorsements, not recommendations. Finally, some love for the downtrodden name that is Intel. Intel has watched these other semiconductor names basically eat its lunch, as Kevin Hinks would say, for what seems like months and months, Jenny. But finally, some love for the mighty Intel.
Yeah, and Intel also has quietly had like a very nice couple of trading sessions. It gained 6% yesterday just on some of the renewed interest in these AI names that have been, frankly, I'd say, like not forgotten, but unfortunately for a name like Intel, it's been left behind and trailing a name like NVIDIA. But having a really nice week now thus far. Analysts, as far as like I would say analyst coverage goes, this name does not see as favorable of overall coverage. But amazingly enough, there's these AI underdogs. And I was reading this note out of Melius Research that highlighted that they see the fact that there's these now second-tier beneficiaries that are outside of just the NVIDIA boom. They say that that includes names like Apple, as well as AMD and Intel and IBM, for example. The focus, they said that overall is that it may, while AMD may actually be, I believe, sort of their favorite, they do say that it lacks Intel's now foundry overhang. And Intel has the massive advantage of pretty much specializing in some of this foundry business, like a Taiwan Semiconductor. Intel has so many plans in its pipeline, though, for expansion of these projects, but a lot of it is until the end of this decade. So that's where I think a lot of the weaknesses come from, is a lot of Intel's stories and pipelines that we talk about. Sure, it's great news, but it's like, you know, the timeline is until 2027, until 2028. I mean, like a lot of these stories are, I think, more long-term for Intel.
Yeah, and money's got to come from somewhere. So are people going to, throw in the towel on the things that have worked and they're going to switch to something that hasn't worked? That's been the big question. Maybe some love the last few days. Maybe some excitement will spur in Intel. You saw it happen in Tesla. It can happen. Happened in Apple already. It's starting to happen in the AMDs. Certainly looks like Intel's gotten off the mat a little bit, flatlining around 30, jumping up over 10% in really a short amount of time. A little bit of strength today, not much, so we'll see what happens. Microsoft is absolutely one of those first-tier names, one of those winners that you talked about, but not today.
Not today. And today it's like, it's, classic. It feels like Microsoft here, as it's not typically performing, I feel like, with the overall market. Microsoft's like on its own tangent. We're down about 1.3% today. Argus actually, though, raised its price target on Microsoft shares to 526 from 475 with a buy rating, and so the company has put itself near the center of the generative AI platform transformation, with only a name like NVIDIA having a greater claim, which they believe that Microsoft will continue to pursue long-term growth through its generative AI and cloud investments. They also highlighted that Microsoft is among the few names that offers a complete integrated product set aimed at enterprise efficiency, as well as cloud transformation, collaboration, and business intelligence that also has this very large and very loyal customer base. So optimism there, but then Microsoft is slower, which is kind of a mystery to me because I didn't see really any other news that could be weighing on shares. But that's just sort of the case, it feels like, for these sort of massive mega tech names that aren't NVIDIA right now.
Yeah, I mean, you got to get the magnifying glass out for that to register. That's been a pretty nice stock to be invested in, and it only looks better the further back in time you go. So Microsoft, we'll call it a blip today. We'll see what happens as time goes on. Obviously, the commentary for the analysts still pretty glowing. McDonald's is the next one on the list. Is of course, you're probably noticing by now the theme somewhat within these Dow stocks, which the Dow has had a nice turnaround intraday as it's now up on the session. Let's talk McDonald's here. This has been a stock that is indicative, Jenny, of what's sort of gone under the surface, which is there's actually some stocks that are struggling pretty mightily.
I mean, no kidding. So actually, we just looked at the strength we've seen in Microsoft over the last year. Look at the decline we've seen in McDonald's. I mean, and it has been a slow, gradual, like lower lows, lower highs trend we've seen. I mean, like the clearest downtrend that I can recall seeing outside of a few blips, but all in all, trend is definitely not your friend there if you were long McDonald's, frankly. But Truist today lowering its price target to $300 a share from $320 with a buy rating as part of this broader research note that was basically discussing all restaurant spaces, same-store sales now, expectations for the second quarter. But I will say that a $300 price target is obviously still pretty optimistic where we're currently trading at around $245. So that actually, to me, is not pessimistic at all. They're seeing now this Truist card data pointing broadly to sales downside, as well as pressure on fast food restaurants. And the recent value promotions, they said, are not helping overall strengthen this fast casual segment. Of course, McDonald's' issue has been the fact
on
that they have
IWM.
now pricing power, lack of pricing power, because their prices were already relatively low.
We all get
So
A
that
pluses?
stability you've just seen hurt them. Their CFO has even mentioned the fact that their prices are up like 200% for their most popular items, like the McChicken, the chicken nuggets, the fries. I mean, 200%.
Even the chicken
For an item
fries.
that was already like considered, I'd say their specialty is being low cost. You raise that price, and you see consumers right now that are angered over it.
Yeah, they're kind of stuck in no man's land right now. They're certainly not seen as a premium offering, so you're not really getting, consumers spending up for your product. But they're really not that cheap anymore. Like
No, they're not.
It's not as cheap as you can't get things for $1 anymore, or at least not enough. And so it's really not a place to go for those who are struggling anymore either. And so throw in the fact that it's not, the most healthy thing on the planet to eat. I don't think that's controversial to say. And in a more health-conscious consumer who's willing to spend up, they're just going to go somewhere else, and they have been.
And there's so many especially like living in an urban area.
That's not to say that McDonald's isn't good from time to time, but I don't know that you're getting the repeat customers the same way they used to.
No, and I would definitely say, lack of pricing power, and also the fact that it's not a healthy meal, and anyone that frequents McDonald's, like myself, will definitely admit that. But last time today here is Visa, and actually some really interesting consumer data we saw that said overall consumers are certainly pulling out their credit cards to pay for goods and services, according to federal data. The total outstanding credit card balance rose to $11.3 billion to nearly $5 trillion in May, which beat April's jump by around $5 billion. So the median forecast in this Bloomberg survey did call for an $8.9 billion increase for May that has not been adjusted for inflation, however, but revolving credit, which does include credit cards, spiked $7 billion in May to almost $1.35 trillion, according to this data. So May's increase in credit card debt reversed a $900 million decline in borrowings during the month of April. So basically, what we know is, and this is no shock to anyone that has basically assessed their own finances as of late, credit card spending continues to rise, and especially that so in May, as we saw, just rise substantially. It's wild to me that we're talking about trillions and billions of dollars, but obviously this is the overall U.S. consumer, which keeps being resilient despite what some of this data shows.
Yeah, so it's interesting, right? Obviously, Visa isn't going to be exposed to the credit risk, but they will be exposed to the credit risk if that means less swiping down the road. And so you're starting to see signs of some of that economic concerns.
Woo, 96.
Visa. That said, it's probably not going to be the first in the financial kind of realm to see that pain, because you're going to keep swiping before you stop paying the bill.
Right.
So they're not exposed to the bill not being paid. They're only exposed to whether or not the swiping's happening. So we'll see what happens with this particular name, but it certainly had a bit of a sell-off start to develop.
Yeah, and not seeing the same degree of strength as a lot of these names have seen over the course of the month. We pulled back about 9% from its all-time high. But we will leave it there for this discussion. We'll be diving more into our upvoted names coming up next, Intel as well as Microsoft. Stick around, Next Gen Investing. We'll be right back.
Bam Bam. It's now time for the fat cats to be back. Blue. Yeah, yeah.
Wrap up the trading day with me, Oliver Rennick. For the
Oliver.
best coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you...
I called you at 4 o'clock Saturday morning. You just got back from the, let's say, where the ladies are bar. You told me to call you back in 45 minutes. So I waited until 5 o'clock, called you again. You still were in bed with that lady. At that time it was 5 o'clock. And I had to get to work. So I called back again, right around 5:30. Again, you just got out of the shower. It was horrible. But I still made out okay on the trade. You weren't there at 4 o'clock.
Yeah, two big tech names here, but very different charts, like you said. And what we can see here when we start to dive into this...
Jimmy doesn't like this monitor.
Downward trend, you know, has been in play for a while here. We've got this blue line extending down off those yearly highs near 51.28 that we never really have broken. We had a very sharp decline a while back here that has transitioned into more of a sideways range-bound trade between about 30 and 32. Then
God, now until Intel breaks out.
We've had a notable upswing here.
What a
We
suck.
found some resistance at our line near 32.24. We crossed above our orange 63-day EMA and cleared it nicely. Then today we have hit a bit of a stumbling point here because we had this gap, this red line near 34.50. We opened above it. We made a little bit of a new high beyond that point, but then we have fallen off and we're back within that resistance boundary now here. So well, we weren't quite able to crack that even though we did fill the gap. Looking here, we can see we had a volume spike
good.
yesterday. Volume was over 50% above the 50-day simple moving average. So we had heavy volume on a strong move to the upside. Not a bad sign for sure. But now we need the follow through. We needed to keep going more to the upside here as we kind of struggle to break above this resistance point today. But we're above our two shorter term moving averages. They're both trending upward. We have our 252-day exponential moving average, our purple line here in our sights. So that could be the next potential stopping point.
So now when we look at as far as momentum
Very interesting.
here, what are you seeing with this recent? I mean, it has been a pretty nice uptrend, I will say. I know it doesn't illustrate the weakness we've seen in Intel all year long, but it's at least, I mean...
Jimmy got screwed in this trade. I sat in this trade for quite a while, almost a month. And you just go down, 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 back and forth. And now it broke. And I'm just, come on.
Stock, RSI was gradually grinding upwards, making a series of higher lows. Then we got our breakout to the upside. We crossed above the 50 midline. Now we're hanging on above that 70 threshold that represents the overbought area. So that's a sign of strength. It's a good sign for the bulls that we're hanging on above that area even as price is declining. We're kind of slipping back below this resistance area here. So look for price to solidify and for RSI to remain above that 70 level. The cross below 70
thought you were going to rhyme.
Yeah, and that's a good call there. As far as though overall then like price activity levels in some areas that we can watch here when we look at a name like Intel, which I believe has earnings actually the end of this month once we start hearing from big tech. What are you sort of keeping on your radar as far as support and resistance is concerned?
Well, you know, the area.
Okay, we're spies at the 200 SMA.
That's a key area.
I'm sorry, Guy, but we're not talking about that. We're going to talk about the SPY here. Randy? I rearranged my boys. You did what? So I rearranged my boys. That's what they thought you said. I don't know. Might be too much information, Jimmy. Okay, get ready. Get ready. Teeter-totter. Teeter-totter. Teeter-totter, 1, 2, 3. Ladies and gentlemen, we got a teeter-totter, 1, 2, 3. Oh, dang, right at 77 cents. That was beautiful. Okay, crowd's going wild again at the sports arena. Okay, come on now. We're at the sports arena again. Okay. Crowd's going wild here at Sports Arena. I can't believe we had the same price. Brandy. Brandy. Been playing Spy a lot lately, Jim. Is there a reason for that? Oh, we're back at... Uh-oh. We're back at 77. We're back at 77. Back at 77. Okay, much better. Crowd's a little nervous right here. Crowd doesn't know what quite to do here. We need a breakout. Yeah, I'm in something. I'm in the spy, man. There's people around here that want you to be removed. There you go. 7-5, come on. So right now we're pushing the limit. I mean, we're down here. We're still there. We're still safe. But not much. Not much more now. And we just got 1 minute before the fat cats come back. Morning, Jim. We're here to save you. This is Warren. It's right at 125 right now. Uh-oh. Don't let go too much more, Warren. I mean, we can't really let it go too much more than this, Warren. Could have had another 10 right here. Probably been a good idea if I did, but I just wasn't finger triggered yet. I wasn't ready, didn't have position. A lot of red there. So I'm watching that tape. I see some real big ones coming through. Like there's probably a couple thousand. There's a lot more buys right there. 3,800 on that one. That's pretty good. Yeah, man, if I'd have got some there down there at 74 cents. I'd be up $100. We break the 9. That's why I use the 1 minute, because I'm using the moving averages. If I was using like a 5 minute, I'd probably be trading a little bit differently. Now we're at 82. So I had the triple bottom. So 1 day, 5 minute. Yeah, I might have jumped in this in here, maybe. Right around there. So right now in the 5 minute, I'm at a resistance. Right here. $556.02. '01, right? Not here. Definitely '02. And on a 3 minute, I would have took the trade on the 3 minute. 3 black crows, and my resistance would be the 9. So on the 1 minute, if we break the 9, I know we could probably get on up to these next resistance levels. So that's why I look at the another reason why I look at the 1 minute. It tells me if we're bullish, if I should stay in it a little longer, maybe. I'm just trying to define a little bit more about how I trade. So I should keep being bearish until we break the 9. Now, if I was looking at the 5 minute, there's only one way to tell if I'd have got in that trade. Yeah, I might have got in that trade at the lowest possible level. On the 5 minute. If you can count to 4, you might make a little bit more. 1 bits, 2 bits, 3 bits, 4. Yeah, I probably would have took that trade right there. If I was there watching it, and I had, and I seen it right at that time or at that moment, I would have definitely took that trade right there. That's on the 5 minute. Well, that would have been a good shot. I mean, it would have been hard to do. But that'd have been a good shot. You could probably got it that at 72 cents. Yeah, I'd be out of that trade by now. So we broke the 9. We created what you call J-hook. And we run into the 21. We're in at 77. So if you got busy or something, you make a business decision. I think if we break the 21, we're in good shot easily to get to the 200. Oh, my girlfriend's on television. Caroline.
Essentially, sentiment is very optimistic, but still shy of a full-blown bubble. That being said, they have a buy rating on NVIDIA and a $150 price target, so $20 higher than where it's currently trading right now. So, you know, maybe that plays into that Melius research theme a little bit, but for the most part, you know, there's still a lot of bulls on the street for NVIDIA. Yeah, and I was also reading that highlighted basically like the underperformance of some of these names we've seen. We can see the laggards now start to outperform, but so far, again, betting against NVIDIA hasn't worked. Is it the underperformers? I would say still continue to lag NVIDIA. So it's why it's a great FOMO candidate as always. But appreciate the breakdown. Appreciate it as always, Caroline Wood, senior markets correspondent for the network. So now, when we look at here trading this name, we do have some time before earnings, obviously, as this name reports at the end of the earnings cycle, so like no major catalyst, but hey, we've risen like 3.5% this week on not really any news. So NVIDIA, I mean, like the move always has legs, it feels like.
Yeah, it moves around a lot, and I think that the critical piece to this discussion, we'll get into the example trade, which again is going to be comparable to what we looked at in the other ones, is if you don't think that the stock is a price that is interesting, you're not forced to be bearish if you're not bullish. You can just not participate in the stock and look elsewhere. And I think that's the idea of some of these.
Well, how dare you?
Just looking for other ideas that maybe they feel have more upside than a name like NVIDIA.
Uh-oh.
That said, if you want to participate in NVIDIA, or maybe you have been participating
Uh-oh,
in NVIDIA,
Mike's rubbing it in.
using something like the call debit spread will protect you if there is a rapid repricing to the downside. You'll know the risk going in, but you can still participate if there is a little bit more upside to be had. I went up to the August 9th expiration for this one because it did have a little bit more time between now and its next earnings event. I looked at the 129, 134 call vertical. For a 250 debit, that would bring the break even to 131.5, which at the time was pretty close to where it was trading. The stock has sold off about $1.30 or so.
He's rubbing it in, Randy.
Since before the show when I was looking at it. But that being said, you'd risk 250 to make 250. Now, we talked about risking 100 to make 100 in Intel, a stock that trades around 34. We talked about risking 500 to make 500 in Microsoft, a stock that trades around 460. So NVIDIA finds itself somewhere in the middle between those two. And so the strategy a little bit more in line with the price of the stock. So risking 250 to make 250, break even near the current share price. Kind of going back to the well. If this has been a stock,
Randy, he's rubbing it in,
or trading to the upside, looking for more of that to continue. And Jenny, that's been the market environment, right? That's been what's happened, which is it's not necessarily been outside of around earnings.
Where you leaving?
This like huge jumps to the upside. It's rather been a lot of 1%, 2%
Don't leave.
on a regular basis in this name, with a few drawdowns from here and there. So if you think more of the same, more of that melt-up-like activity could happen, this is a strategy that would benefit from that.
Yeah, and that's also a good point. Is this name hasn't needed like specific news catalyst, which I think is actually why I say NVIDIA has buoyed the overall market, and thank goodness it has, because when we're like news light, like days as today is somewhat, I think NVIDIA has always become kind of an interesting one to look at in the overall market. Still are down about 7.5% from its recent 52, an all-time high at around 140 a share.
That's why we listen to you, honey.
Now up a whopping 232% from its 52-week low. So it's been, of course, the name to watch all year long, up 1.6% today in real time. But we will leave it there for all of our discussion surrounding all things NVIDIA and the semi-space. But coming up next, we'll look at another winning space.
Do you think
in
that
healthcare, which has been Eli Lilly
Spy can
and
break
the
out
weight
here?
loss drugs. We'll discuss why this name touched a new all-time high earlier today. Coming up next.
I think it'd be a very good idea if it did. Damn, I sound good, Mike. Mike just wrote in the room. He said, Jim, there's two reasons I stay in this room. For one, it's your singing. It's so relaxing, meditative. And the two is your charting. But definitely, I can see why Nancy keeps you around. Woo!
Dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me.
He would be proud of you, only if you told him that you're not diapers anymore and that you do not wet the bed. He'll be extremely proud of you.
Schwab Network.
Welcome back to Next Gen Investing. I'd like to now welcome in Kevin Green, Senior Markets Correspondent for the network, to discuss Eli Lilly touching new all-time highs today. Kevin, we're pulled back about 0.3% from that all-time high, but $9.30 a share even.
Woo!
Even number to sort of gauge its all-time high. But walk us through the news we're seeing obviously impact Eli Lilly to the upside today.
Yeah, we are continuing to see good news when it comes to this company, especially when it comes to the weight loss drugs that they are able to offer. Now, this is actually a study that came out and was published by JAMA Internal Medicine, and it found that Mounjaro...
You know, I got the best medicine, and it's a lot better than what they'll feed you in a pill or a shot form. Is Washboardjim's afternoon salads. Now today I had a nice little salad with some spinach and some romaine lettuce and a radish and a pickle, cucumber, and what else? I had pickled tomato. One more tomato left.
Fascinating.
And then I turned around and I smeared or sneered a tuna. So that turned out real nice. That's all I'm going to eat today, and I guarantee it'd be better than any of them pills they're going to give you on that show. My goal is to get to 160.
It's a lot different than Eli Lilly.
I can't tell you the last time I was at 160. It's been a long time. 30 years, maybe when I was not even 30 yet, probably 28. Started putting it on around 25.
I mean, there's a lot of dollars that's being put into this. Now, one thing to just kind of note, I mean, they are tapping into a market that is, it has a lot of opportunity, to say the least, and it's really hard for analysts right now to be able to see what the addressable market is going to be for this drug down the road. And then if you're kind of looking at the product offering, you have to continue to take this drug in order for it to be effective. And so they have more of like an annuitized type of product offering here in the healthcare space. So the market is providing a little bit of a premium for that in the near term. And then kind of going back to the supply chain issues and being able to try to produce enough to be able to fulfill demand, that's been a little bit of a struggle. And so they are once again going to have the margins in place in order to satisfy investors now. Now once that dynamic kind of shifts, we start seeing margins compressed here a little bit, maybe
on the 1 hour
regulators and try to lower prices. That might be a headwind for them, but in the near term, it seems like the market is really is showing a lot of promise here when it comes to these weight loss drugs in general, no matter if it's Eli Lilly or even Novo Nordisk.
Yeah, that's not
Kevin,
good.
I'm curious, like, if you're thinking on any sort of pricing dynamics of these drugs, because I was looking at like these recent studies that showed how expensive they are here in the U.S. versus like overseas, but then also like in terms of the overall economic health of the consumer, some of these, like Ozempic, for example, is over $900 a month. So is there any concern that like the price tags of these drugs right now is getting somewhat ridiculous for the person that needs to rely on it to continue to take these drugs?
I mean, yeah, that's kind of the system that we're in, unfortunately. I mean, we have a healthcare system that definitely inflates prescription drug prices across the board, not even when you're looking at weight loss drugs. And that's something that has been systemic for a very long time. Now, we know that there has been conversations and kind of jawboning back and forth between the current administration and some of these drug manufacturers in order to try to reduce some of these prices. But it's going to be very difficult because of just the healthcare landscape that we have and the prescription models that we have here in the United States. So I'm not sure if we're going to see any type of tailwinds there in the near term. And once again, we're kind of talking about a product offering where those that need it are trying to get it as much as possible, but it's also seeing a lot of supply going to those that are utilizing it in a recreational basis and maybe not need it for immediate health concerns. And so if that market is going to continue, this should actually be a tailwind for Eli Lilly in the near term. And I think that's probably, once again, why the market's been providing a pretty healthy premium for the stock.
Is this one, Kev, you may not know off the top of your head, but is this one that's maybe more institutionally traded? Doesn't seem like it's got a huge options market in terms of how often they're trading. You don't see a lot of stock shares changing hands. For as much as this stock is in the news and as strong of a performer it's been, it's really not the most liquid of underlyings. It kind of has Broadcom elements, but I just compared Broadcom is way more active than even Lilly is. When you look at the options world, about 4 times more options in Broadcom and twice as much stock shares. Why do you think that might be?
Yeah, I think the healthcare field is not as exciting, right? We have these cycles that come out for drugs. Maybe they happen every year or every 2 years, and you have this approval process. So it's not as attractive for the intraday traders or these option traders that are looking for pretty dramatic swings either to the upside or downside when it comes to stocks. And then also the price of the stock as well could actually deter a lot of options traders because it does get a little pricey. Same thing could be said for Chipotle, right? When it was trading at $3,000 a share, no one really wanted to trade those options because it just costs way too much. So yes, I think there's an institutional element for that for this stock, especially if you have to have allocation to the healthcare field or the pharmaceutical field. And you never know. If we get a stock split, then that could actually change as far as the appetite for retail traders.
Yeah, that's also a very good point. I think a good way to sort of look at why we see some of the differences in Eli Lilly versus a name that's as massive as like a Broadcom, for example. But we will leave it there. Great insight, as always, Kevin Green, senior markets correspondent for the network. Now, coming up next, it's time for Under 30. We are looking at Zeta Global. The shares are down now about 0.5%, despite one analyst seeing some optimism and raising its price targets. We'll dive more into that headline with George Tillis coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
I remember when I first started flying and we would experience turbulence. I would watch the flight attendants If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Okay. Things are in a weak spot. Yep, Disney. My opinion on Disney is it will eventually have its bounce up one or twice a year. It's definitely in a phase of trying to change with everything else. I think they got a little bit away from the children and more into streaming for adults. They got a little bit too big for their britches. But Jimmy likes Disney, and eventually they're going to start pumping it up again. Now, as a good place to get in this trade at, I think even if you can get down to $90, closer to 90, that would be an excellent spot. Right now you're at a pivot point. Today. Now. If you could come down a little bit more, it'd be a lot better trade. Here I'd go in small and add on if I was buying shares. Jimmy likes Disney. Jimmy likes Disney. I mean, it's definitely above a pivot point. There's your pivot point right there, 96.21. So yeah. Did you get that, Parge?
Bloomberg is over $20 a share. But you got Morgan Stanley, RBC Capital, Canaccord, Barclays, Needham, Oppenheimer, obviously. This is not, as much as it may be overlooked in the sense that it doesn't get the attention some of these other names, this is not a story that seems to be overlooked by some of these big shops.
I mean, you're right. There's a reason I suggest that a lot of these analysts are encroaching on this stock, at least from a rating standpoint. Because if you consider just some of the math, and this is, I talk about this all the time, when you see strong trends in growth stocks, you have to be wary about liquidity gaps. What I mean by that is volume can be very substandard at many times. But I do suggest if you look at the earnings growth of 31%, it's about 1.5 times its sales growth. So typically speaking, anytime you see 1.5 times earnings growth to sales growth, and those 1.5 to 1 ratios are higher, that speaks to stronger trends. But I do suggest, you have to keep in mind that the company, at least on a trailing basis, is not profitable on an adjusted basis. So that might come at a cost because there may be some dilution to finance the continual expansion of the business. So it may have maybe a situation where you see sort of 2 steps forward, 1 step back, because the company is probably going to issue some capital, some secondary offerings of equity, which is fine in the long run to help grow their business.
Yeah, and I think that's also a good point. I think a really interesting, overlooked stock that we haven't discussed enough, as Alex said, everyone I see as a buy right now. I know we're lower on the session, ironically, here, but still, and they've now climbed, 93% so far this year. And I think that this is the really interesting part about the AI discussion is there's these second-tier, third-tier winners that are still benefiting. But appreciate the insight, as always, and great breakdown on Zeta Global, which is now around $17 a share. George Tillis, senior markets correspondent for the network. And Alex, before we close out here, we were almost lower, actually, in 3 of the 4 major indices. So seeing some reversal from when we started the show about 55 minutes ago. But pretty much right now looking a whole lot of unchanged, even in the 4 major indices.
The most fascinating recent trend of the past few weeks has been, if you looked at the advances in the NASDAQ 100, said another way, the number of names that are higher on the session, those names, as that number grows, the NASDAQ gets weaker. We started with 33, we're almost at 50 now. The NASDAQ has gotten weaker as that happens. Make it make sense.
It doesn't, again, to close things out, it doesn't make sense. And I think that a lot of people right now are scratching their heads at this similar phenomenon. But, of course, now higher in 2 of the 4 major indices, lower in the NASDAQ as well as the Russell. But we will leave it there for Tuesday's Next Gen Investing. Coming up next, we have the watch list with, of course, Nicole Pedalides.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day.
Fast market, ready for you, ready to go.
Co-founder and CEO of Stardust Power. It is the company's first day of public trading. Also, it's Technical Tuesday, so Kevin Warner will walk us through some of the key trends that we're seeing on the charts for the S&P 500, Intel, and Dell. Our panel will talk about the outlook for the media landscape in the age of streaming after, of course, this big deal, Paramount and Skydance. What's next? In the meantime, here's a look at the numbers. We've had some back and forth action. We do have earnings later in the week. We also have CPI and PPI and watching those banks for Friday. Right now, the S&P 55 to 80 gaining 7. The NASDAQ has turned negative at 20,435. The Dow is up 18 points and the Russell down about 0.25%. Oil and gold are mixed. Gold is up about $5 today. Oil's at 81.71 the barrel, pulling back. The VIX at 1249. Dollar 104.85, and there's a look at Bitcoin 57,785, up 1.8%. So a lot to watch here. Kevin Hanks, host of Fast Market, is with us here on Schwab Network, and of course we've been hearing from our Fed Chair Jay Powell talking to the Senate Banking Committee. Tomorrow is the House Financial Services Committee. Some of your thoughts?
Yeah, Jerome Powell answered questions from senators. I thought he was very non-committal, sticking to his normal tone that he's going to let the data decide. They tried to press him on a date for when he was going to lower rates. Obviously, senators, people in President Biden's camp, they all want interest rates lower, but Jerome Powell said he's not confident yet, and he needs to see more data before he's willing to do that. He dodged questions on it, being as transparent as he could be, but he said it's going to be the data that decides. Nicole, if I was there, I would have asked him, at what unemployment rate does that trigger? Is that what's doing it? What's the trigger that'll make you lower rates? Is it 4.2%? What is it? So they asked him a lot of questions, most senators just reading from prepared statements, but a fascinating look into the way Jerome Powell works, that's for sure.
That's a good question, because we got the last unemployment rate came in at 4.1%.
Right.
It was up from 4%. So where is the threshold? I mean, they're very clear on inflation, and they want that to come down to 2%. So why can't they give us some clarity?
Yeah, it's a dual mandate, right?
Ratio of jobs to, maybe it's the ratio of jobs or wages or labor force participation rate or something that we're not getting. But I mean, if it would be as simple as that, just say, listen, if it hits 4.2%, you know, that would be give us some clarity. But that would be too easy, right? How about Tesla? Folks, you know, sort of wrote it off. It was no longer part of the Mag 7. They began to say, no, not so fast. Let's see what's going on here.
Yeah, with Tesla's earnings coming up and the August 8th robo-taxi event, this stock has run pretty sharply. Here's the numbers. You know, in the last month, just a month, 30 days, the stock's up 47%. 1 week, up 13%. However, it is extremely overbought. If you look at the relative strength indicator, up at 86, Nicole, that is an extremely high number. But some of their earnings that the street is looking for, 62 cents a share coming up versus 45 cents last quarter. Revenues $24.9 billion versus 21.3 last quarter. But I really think the overall slight improvement in EV sales, that they hit those numbers, and the robo-taxi event coming up August 8th is what's really driving this stock. And a general overall feeling that Tesla, the bad news that surrounded it, might be over with. And
Let's hope.
Incredible historic rally, up 10 straight days in a row, Nicole.
Yeah, I mean, that in itself is, just if you were to say 10 straight days, I mean, it's unbelievable. So we have a lot to look forward to.
Unbelievable.
Everybody's talking about 8-8. All right, thank you for that. Good to see you, Kevin Hayes, appreciate it. Andrew Rosen's with us, president of Diversify, to talk about some of the action that we are seeing here on Wall Street. Some of your thoughts, Andrew. Good afternoon.
Good afternoon, Nicole. How you doing?
Doing so well. Thank you for asking. Your thoughts on the market?
Well, it's been a good first half, that's for sure. 15% and change, but 15.29% S&P 500 first half of the year. It's hard to hide from the fact that you got your Mag 7 that are driving a good portion of that. Of course, we'll see some choppiness, I'm sure, around the election second half of the year. But all things considered, we're still pretty bullish here, and it's been a great ride the first half.
Right, so you're feeling more bullish. What's going to drive that bullishness? You're looking at the momentum that we're seeing, for example, we just finished talking about Tesla, and even NVIDIA came up off those lows and it went below 120, went back up to 132. You know, Apple hit new all-time highs, you know, Taiwan $70+ trillion. There's been a lot of fun things to watch if you love the markets and you want to look for bullish signs.
Yeah, so what gives us some promise? One is we know our new celebrity Fed chairman is really indicating that rates are coming down. Who knows when exactly? We saw the PCE last week or whenever it came out was at 2.6%, lowest since March 21. So that's one of the big signs we're seeing, and obviously gives us some bullish hope that it'll be more favorable markets for businesses moving forward than where we are today. Fundamentals and valuations aren't crazy. I mean, NVIDIA aside, which is just the belle of the ball, valuations aren't out of control where it screams recession or caution.
So when you look at the U.S. versus international, you're still leaning toward U.S., right?
Yeah, for sure. We think that, I mean, we still have exposure to international, but of course, a little more concentrated. But U.S. still seems to us to be we're the best prospects for the short term. So yeah, we're more U.S. We certainly have our tech sectors locked down. We like dividend-paying stocks right now, especially with where interest rates are. And smattering of different sectors, semiconductors. We still think that has a lot of runway. Just that whole industry.
Yeah. I mean, I think volatility, are folks expecting some volatility, and that's why you do some kind of stocks like you mentioned having dividend payers. Would that be to sort of handle a volatile market?
Yeah, that's one cause for it. Second is just good old natural diversification, spreading the risk to some more favorable markets, right? Like communication market as well. Interest rates lead us to to that discovery. And yeah, I think the second half we'll see a little more choppiness, especially around the election. That's what tends to happen in normal elections, and I don't think there's a huge on this planet that believes we're about to, in November, see a normal election. Not that I remember what that is anymore.
I know. I was just thinking that as I read your stat about the likelihood of the S&P going up when an incumbent is running. And, you know, what do? We rip up the script. I mean, we have so much on history throughout the years when an incumbent is running. And here you wrote that it's interesting, S&P has an average 16% average return when you have an incumbent. In this case, we may have a switch out. Then what? We have no historical data, do we?
Well, of course there's historical data. I mean, look, it happened 4 years ago, right? The incumbent did not win. Investors still believe the election is up for grabs, but the incumbent did not win, and markets proceeded. So but I think you're hitting on the macro topic, which is we have an election coming up. It is the most divisive election since, well, the last election, but that was the most divisive election ever. Anyways, I think what are the expectations and how do you prepare? One, stay diversified. Two is it will be choppy. That the stats show that in any election. We expect it to happen now. As people panic, as there's a change out from the Bulls to the Bears and the Doves to, it's just what's going to happen. But the statistics also say that when the election is over, volatility, very soon thereafter, the volatility subsides substantially. So I hate to say it's much ado nothing, but if you're a long-term investor, which I firmly believe in at my core, and I support tenant-to investment philosophy, I don't know that I let it bother me from a market standpoint. I mean, the market loves parity. If anything, root for a split Congress or
yeah. I want to ask you about the semiconductors because that's an area that you're watching really closely. Just a final thought on the elections in that, the incumbent versus former president, right? You have Biden versus Trump. We're using historical data for an incumbent, meaning Biden. I don't know that we have historical data for a switch out if Biden gets replaced in his role, which seems to be a possibility. Then do we go new versus new because there is no incumbent, or is it still incumbent or prior president? I just feel like because Trump is the prior president. I mean, we have no real historical data to say the incumbent dropped out, we get a new person, and a former president is running, so he's not totally new. It just seems like a little, like a jellyfish or something. I can't even figure it out. All right, when you put all the jellyfish in the bucket and you don't know what happens, where's one jellyfish? It just seems like a hot mess. That being said, let me ask you about semiconductors. Maybe I can really get a hold of this story. Tell me about the semis.
We love it. We're obsessed with it. It's been a great return story. We think it's got a ton of runway. It is who knows where AI's go, but it is here, right? I think we all sort of believe in the validity and the patent staying power of artificial intelligence. What drives that? Well, semiconductor chip. And so we don't see a slowdown in the manufacturing. We don't know who the winners and losers necessarily will be. I mean, NVIDIA's hit $3 trillion on a lot of spec. Obviously, people believe they're going to be a big winner. We like the whole market, if we're being honest. Rising tide.
Like this group, right? NVIDIA, AMD. Yep. I mean, some people think, we were talking about Micron earlier. A lot of talk about Qualcomm lately. I mean, which one's
Taiwan Semiconductors. Yeah, I'm sorry, what was the last question?
Which ones are the leaders in your mind?
Yeah. I mean, look, you named it. Taiwan Semiconductors, one you left off. And I think you're hard pressed to go wrong in this space. Pick one that you believe in or you want to follow or own the marketplace. Candidly, that's what we do. We've stayed away from even selecting specific holdings in the semiconductor, and we just have hold up that candidly. And it's proven well. It's like 70-some%.
Yeah. And look, I mean, there was definitely a long run, as with the semis, that's the way the market went. All you had to, sometimes we used to look at rates. What are rates doing? Then we know how the market reacted, right? If yields went up, the market came down. There was a time that, we just looked at semis. If the semis were higher, we knew the market was higher. It just sort of, brought that optimism. All right, Andrew, it's great to see you. No harm, no foul on the jellyfish story. It was when we were kids, we put the clear ones in, we put them right back. No jellyfish were hurt.
Listen, I'm not.
Andrew Rosen.
Right.
Thank you so much. Andrew Rosen of Diversified. Coming up, Options Corner. Tom White will join us, highlighting unusual options activity that we are seeing. How investors are going to trade on some of the recent news, names like Chipotle, Delta, and AMD. We'll be right back.
Triple top on Tesla. Triple top on Tesla. We have a triple top on Tesla. Breaker 109, get in the line. As we hit a triple top, you might want to take some profit and drop for the drop.
With the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Boom, baby. Boom, boom. Well, that's the way you do it. Patience. So now we're flagging out. We've come down and we've touched again. I'm getting ready to have a sip of instant coffee. Pow pow tomorrow. Who's giving money away today? Randy. That don't sound like you. Randy's not happy.
%, on the year, off of those all-time highs that we saw just before the pre-split, $69, just above there on 6/18. So June 18th was the high from the stock. It's pulled back somewhat. Last quarter was pretty good. As far as comparable sales, they increased about 7% last quarter. They beat on EPS handily. They came in just above expectations. There was a couple notes out today on price target hikes. Stifel came out and raised their price target to $70 from $65.40. They said same-store restaurant sales are projected to be higher than what the streets anticipated. The company gave guidance of high single-digit growth on sales. Stiefel thinks it's going to come in at up 10%, which is above the street expectations of about 8.8%. But then Truist came out, raised their price target. They came out with a note that basically said, hey, a lot of these fast food places are not doing well. If you look at the performance in McDonald's, QSR, Wendy's, they're under pressure. The only ones that are doing well are Brinker, EAT, Cava, another competitor in this space, and Chipotle, which is up, as I said, 26% so far this year. They think that Chipotle is going to do better. They report earnings towards the end of July, and I think this trader, with some unusual option activity, setting up for some further upside in the shares. We saw a buyer out in the September monthly options. So these about 73 days till expiration. You're going to capture that earnings event. Trader bought over 5,000 of the 57 strike.
That's what
calls
Mama
in
said.
September. Average debit of about $5.
That's what she told me.
These are pretty hefty option premiums, but they've got over 2 months in this position. That break even at 62.20 over the next 73 days. That's about 7.5% above the current share price in there.
Chipotle.
I mentioned earnings on the 24th of July.
Oh.
After this pullback from those all-time highs, will they beat? I think
Yes.
company's probably going to have to beat or get double digits on comparable sales growth for their franchisees. But yeah, somebody looking for some upside in here going into earnings.
We just got a new high
I'm glad you brought up
on
Kava,
Tesla.
too, because, of course, a friend of our network, Trisha Tolliver, has been on with us many times of Kava. Also, I saw about some notes on the Chipotle trades as far as options activity, and saying that deep-pocketed investors are moving bullish, but they won't reveal the identity, and maybe that's a bullish sign. But Kava did well. I don't know how people are spending, and that's the question. I mean, look what happened with Helen of Troy. I mean, is nobody buying, brawn shavers, but they want Mediterranean food? I think maybe people are just sort of allocating where they want to spend.
Yeah,
I think that's that.
Yeah, I think that's a big. That's big. I think the consumers.
4
making
people on here.
specific
That's weird.
choices. And you've seen the narrowness of the rally that we've seen in the overall market. And I think that takes place in every different sector, Nicole. There's going to be winners and there's going to be losers. And if you look at the S&P 500, this is the narrowest rally we've had in quite a while, probably since early 2000s to 2008 during the financial crisis. So, yeah, there's a lot of risk out there, but there's a lot of underperforming stocks in each sector.
Yeah, like you said yesterday, you were talking about the number of names that are actually above the 50-day moving average. So it is a narrow rally. Let's move on and talk about AMD. So a price target cut from KeyBank. Tell us, but you found a bullish play. So let's hear your thoughts there.
Yeah, this is a price target cut from 230 to 220 out of KeyBank. If you look at the landscape in the AI chip space, 90% of it's owned by NVIDIA, right? They're charging a premium for their GPU chips. At this point, AMD trying to make inroads into that space with their MI300X chip. Lisa Su, a really good CEO, is trying to gather some of that market share, but NVIDIA's still got a stranglehold. Now, one of the key components, I think, with AMD is what type of slippage are we going to have from NVIDIA, where their demand's outstripping supply at this point? How much of that market share can AMD take? One of the key takeaways from last quarter was, data centers did really well, but a couple of their other segments were horrible. Gaming was down 48% year over year. Embedded segments, that's industrial automotive testing industries, that was down 46%. So not being able to offset some of the losing areas within your marketplace is a problem that AMD is having at this point. And how much
That is true.
market share can they take away from NVIDIA as they move forward? Guidance was really light, not what the street anticipated last quarter. So that's why you've seen the stock pull back from those all-time highs of $227 in March. The stock's still up 19% so far this year, 8% this month, so it's had a pretty good run. But we did see some call buyers in here in the July 19th monthly cycle that expires in 10 days. Trader bought over 12,000 of the 180 strike calls in there. Average debit of about $4.10, so that break even 184.10 over the next week and a half. That's about 5% above the current share price in there. So if we could see another leg up for the chip space, they were having a good day yesterday, kind of pulling back here in AMD today. But yeah, you'd only need about a 5% move in the next week and a half for this trader to start profiting on this position.
Yeah, very interesting. KeyBank also put a new NVIDIA price target that I hadn't really combed through, and it applies 38% upside from here. And we just had Andrew Rosen on, and he said, I don't think you can go wrong with the group.
Yeah.
I mean, he wasn't really picking select names, but that was the group he really liked.
Yeah, KeyBank had a wide-ranging note in the chip space. They upped Qualcomm, they upped NVIDIA to 180 from 130. So yeah, definitely some optimism in this space. Micron was another one that they upped the price target on.
Oh, thanks for that, Tom. I'm glad you had the number ready. Thank you for that. How about Delta? Now this one more bearish.
Yeah, a little bit more bearish going into earnings on Thursday morning. This is going to be a big one, Nicole, because you travel, you see people are going, doing vacations, traveling more for business. Overseas international travel has really exploded. That's right in the wheelhouse of Delta as far as business travel and international travel. TSA numbers reached 3 million on Sunday, so biggest travel day in history according to that data point, but it doesn't seem like the airlines are able to take some profitability away from these high demand areas in travel. And Delta is probably best in breed in this space. They've got the lowest debt, they've got the highest margins, they own a refinery, so their fuel costs are a little bit lower. Option market's pricing at about a plus or minus 6% move in the shares post earnings on Thursday morning. Oil prices, they've rebounded about $10 over the last month. That's going to be, probably some pressure on their margins, maybe cutting their guidance from what the streets anticipated. But we have seen that pullback of about 12% since hitting 4-year highs just 2 months ago. You see that peak over there on the right before we started sliding here. So it's pulled back about 12%. Higher payroll weighing on their balance sheet. Expenses are eating into the profitability amid this strong demand for travel. So they are facing some headwinds at this point. But we did see a put buyer in here. So somebody taking maybe a cautious approach to this earnings event. It was in the July 12th weekly cycle. So you're going to capture that earnings event on Thursday morning. They expire on Friday. Traders bought 10,000 of the 45 strike puts for an average debit of about 60 cents. So that break even of 44.40 over the next 3 days is about 6% below the current share price in there. Put volume about double normal daily average volume that we've seen over the last 5 trading days. So we're starting to see a pickup ahead of this earnings event. But this trader's betting that we're either going to see some more weakness or maybe they're hedging a long stock position with some cheap out of the money options here, Nicole. But definitely a downside outlook for Delta going into the end of the week in their earnings.
Yeah, very interesting. So maybe they also are hoping that the whole market goes down. We'll have CPI and PPI and some bank earnings. So maybe that will help drag it down a little bit if that's what this particular trader is hoping for. Yep. Tom White, great to see you always for Options Corner. Thank you.
Thanks.
Good luck there. 3 important names: Chipotle, AMD, and Delta with Tom White. Coming up next, we will welcome the co-founder CEO of Stardust Power. Shares of lithium refiner began trading today. We'll talk the EV market, all the things that are in the works for this, the outlook for the company, SDST. We will be right back.
Knock, knock. #1 broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time
Spy looking ready again.
full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes.
I think this is the point where it has to.
ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Pedalides, live on the floor of the New York Stock Exchange. We have a few movers in the market for you right now. Bank of America shares hitting new 52-week highs. Piper Sandler upgrading this stock to neutral from underweight. The firm also raising the price target $42 from $37. The firm says it expects the bank's net interest income to trough in the second quarter and no longer sees a need to single it out for underperformance. Big banks kick off the earnings season on Friday. Bank of America, in fact, will actually report next Tuesday. On Friday, we'll have JP Morgan and Citi and Wells Fargo. Helen of Troy shares will plunging to 9-year lows after disappointing earnings and a reduced outlook. The company, the brands include everything from Vicks to Revlon and kitchenware maker OXO, as well as citing a worsening macro economy and also the health of the consumer is a concern here. Right now, the stock is on track for the biggest one-day loss since it went public back in the 70s. 1972, it is down 27.5% right now. So back to the market, and in this case, we're looking at the lithium
Right about here.
markets and an exciting company that is new. Maybe you haven't heard of it yet. Next guest, Roshan Bajari, is with us, co-founder, CEO, chairman, Stardust Power. Thank you for being with us. You have a new symbol here, SDST. You had a SPAC merger to get this up and going there at the NASDAQ. Tell us a little bit about the company.
61 cents.
Great. Well, first of all, thank you, Nicole, for having me today here on the watch list. Great to join the show. I'm a big fan. At Stardust Power, we are working on one of the asymmetries of the global energy transition, namely the onshoring of manufacturing of critical materials, especially lithium, to drive the energy transition ahead.
What kind of expectations do you have? Because from what I understand, we don't have nearly enough of anything. Not enough energy, not enough power, not enough raw materials. You talk about lithium. I mean, tell me about the future that we need to understand better.
Sure. So we know the demand curve and projected demand curve by 2030, that there is a lot of critical materials, especially battery-grade lithium, needed to make these batteries that go into handheld electronics and electric vehicles. You know, what a lot of people might be surprised to know is America is rich in raw materials. Some studies have America as the 4th largest reserve of these lithium raw materials. We were just not exploring for it previously, and we were offshoring it in places like South America, Africa, and Australia, where China has been very aggressive. It can be difficult to permit hard rock assets in the United States, but America is also blessed with lithium brine resources, coupled with a robust oil and gas sector who is often producing these brines as a byproduct of oil and gas exploration. So we see that America is rich in lithium, but what the critical gap in the supply chain is refining capacity. And that's how China is able to effectuate its stranglehold on the global lithium market by controlling up to 85% of global refining capacity for lithium. So at Stardust Power, what we're doing is building what could be North America's largest lithium refinery, strategically located in the center of the country. And the technological addition we're adding is optimizing the large central refinery for multiple sources of lithium brine input so we can aggregate supply and scale manufacturing more efficiently.
So you're talking about the facility in Oklahoma, right? That's the one that you said could be the Oklahoma facility is the one that you're referring to, that where you're going to have a lot of lithium and refinery there. Is that the one that you're referring to that may be the largest? Yeah. So
yes,
it makes me think about national security. I mean, it's such a key factor. I mean, one of the reasons why I think we're discovering at home where we hadn't realized that we have some of these reserves right here at home is because we were so dependent upon other countries. Now, do you feel almost a sense of patriotic nationalism as you're doing this at home? Because I think there's a certain element of safety or national security doing this at home too, isn't it?
Yes, couldn't agree with you more. It's a national security priority for America to onshore these manufacturing, especially in the case of lithium. Rising geopolitical tensions require that we look to create resilient American supply chains. China has already shown
perfect
its
bottom.
willingness to use protectionist trade policies for critical materials, for example, in the graphite market. So for long-term security, it's essential that we produce and manufacture these materials here. And just one quick point of clarity, we're developing our central refinery in Oklahoma that can take a lithium raw material feedstock into battery grade, and we'll be sourcing raw material lithium from around the rest of the United States.
All right, understood. At this point, how did you find, doing this SPAC merger and getting this up and out? I know it must have taken a lot of time, but it was important to do it now. How did you find the process?
The process was relatively smooth because we had great partners. We saw an opportunity to be a public company at this stage in our journey, for one, to diversify financings and access to capital markets. But secondly, and maybe most importantly, we see it as opportunities to vertically integrate our company with upstream raw materials production by leveraging public equity. So being a public company was a big part of our strategy. And we're very happy to work with a Global Partners Acquisition Corp. 2, owned by Antarctica Capital, a $3.7 billion alternative asset manager here in New York. And we were aligned from the beginning in our views on domestic manufacturing and capital markets as well. So great partner that was a value add through the process, but also throughout the life of the company. And the SPAC they had was a very efficient vehicle as well. Only 1/6 warrant coverage, no IPO investment banking fees, a lot of lockups on both sides. So an efficient partner coupled with a very efficient vehicle.
Yeah, thank you for all of that and explaining the process. How about the EV market? I mean, we think about what's produced here at home versus what's produced, for example, in China for electric vehicles. What's produced here at home, obviously, super exciting. What kind of demand do you foresee for EVs here at home? The power that's needed to plug them in, the power that's needed to make the materials that are needed for these batteries. The EV market, your outlook, I mean, is it going to be huge? Is it going to slowly grow? What are the needs in your outlook?
Yeah, great question. There's been a lot of talk on EV adoption rates, but at Stardust, we continue to be very bullish. Year over year, month over month, adoption rates are increasing, and we see them continuing to do so, largely driven by state initiatives such as the state of California and the state of New York and their requirements for shifting to electric vehicles. So there is also a premium on domestic manufacturing. The IRA, the Inflation Reduction Act, creates a premium for American manufactured lithium or IRA compliant lithium. To receive the full EV tax credit for a consumer, they qualify the critical materials all the way to the source. So there is a premium for manufacturing in America, as well as all of the security concerns. So not only is the market growing substantially, but the American market is a driving force of that.
That's interesting. Yeah, I look forward to seeing what happens there, and of course Tesla, huge. We have all the other
I don't believe you, Nicole.
making EVs as well. So we'll see that adoption rate going forward. Roshan Pujari, thank you so much. Congratulations to you and the Stardust Power team, co-founder, CEO, chairman of Stardust. Thank you.
Thank you, Nicole.
Still ahead, it's Technical Tuesday. Kevin Horner is standing by. He's going to watch the key levels of the S&P 500, which hit record highs again, and a look at Intel and Dell. We'll be right back.
Oh well.
Every morning, every trade, always live. Expert earnings analysis,
Anthony.
technical insights on every changing trend.
We hit the 63, Anthony,
Available anytime,
on the 1 minute.
on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
We're Oliver. Sorry about that. Ooh, ouch. I'm Arnold. Oliver.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim,
Okay.
the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Dude.
Welcome back to the watch list. I'm Nicole Petalese, coming to you live from the New York Stock Exchange. 90 minutes left in the trading day. We've gotten the first day of testimony from Jay Powell. Today was the Senate Banking Committee. Tomorrow is the House Financial Services Committee. So he's testifying to Congress. That used to be the Humphrey Hawkins testimony. And we'll get CPI, PPI, banks, a lot to digest. In the meantime, we're seeing some records. S&P and NASDAQ have been giving it a go. Let's go to Ben Lichtenstein for a market update. Senior
Good idea.
contributor. What are you watching here?
Hey, Nicole, a market that continues to exhibit 2 steps forward, 1 step back type price activity. We're continuing to climb this ladder, right? Another new intraday all-time high, although we're off that peak level from earlier this morning. As you mentioned, comments from Fed Chair Jerome Powell. Investors are waiting for more information. It sounds like he is as well. He was pretty clear to lawmakers. He's not going to give any signals, any hints in terms of timing of future Fed policy action. But take a look here at the NASDAQ. I keep my eye on the tech-heavy index as we head into the end of the session here today. And, you know, we are not far from that 21,000 level today, up to 20,771. We've come off a bit back down below 20,700, but still hanging in there pretty well. When you look at the bigger picture, that longer-term chart here really says it all. That was an intraday look at some of the price activity we've seen off the intraday new all-time high we posted here today. Here's a look at the bigger picture, longer-term daily candle chart, and you can see Powell was talking about easing too little, too late, could unduly weaken the economy, but he was also pretty clear they need more data to strengthen their confidence on inflation. He said a policy rate cut's not appropriate until the Fed gains greater confidence in inflation headed towards their sustainable 2% goal. I'm looking at the 10-year hanging out right around 4.3, Nicole, and you know, not much has changed really. Sort of feel like just status quo. Trends still intact to the upside. Powell continues to suggest again that we're making progress, just not quite there yet. And this is a market that's yet to reject these upper levels as of yet.
How about we turn our attention over to crude? 81.63. It was interesting because we were saying, oh, crude has run up. It's hitting new monthly high. Hasn't seen this in a couple of months. And then it just sort of hung around there. And I don't know, nothing much exciting happened after that. So we're waiting. See, what are you watching?
Yeah, crude at 84, 85. That's so yesterday, isn't it? Today, back down into that 81.20 level. Coming off those highs that we saw just recently, which were raising some concerns because that had us right back up to that April high up around 87. But that was the level that we mentioned. Until we get above 87, again, kind of a bit of a chop and somewhat range bound.
I think we're getting set up here again.
Off that level, as mentioned. Here it is, 84.52, in fact, all the way down to 81.25. Pretty well-defined trend here. We're looking at 5-minute candle charts, so just last couple days worth of price activity. But stepping back, you're going to see I mentioned yields hanging out at 4.3. That's kind of in the middle of a range we've been in over the last year. The dollar, similar situation, right around this 104, 105 level. And then take a look at crude oil. Range bound, contained. Here's that April high that I mentioned. You can see we recently rallied up to it, but it started to roll over. So keep an eye on that level if we take that out. We heard from the EIA today in the short-term energy outlet. They talked about Brent prices. They revised their forecast for second half of 2024 to 89 from 85 for their first half forecast. So they are seeing inventory start to dwindle a bit, and it sounds like that's going to have a bit of an impact on price. So while we're off a little bit here today, strong demand, some of the other factors contributing to, prices remain somewhat range-bound, stubbornly elevated, but not breaking out by any means here, Nicole.
All right, Ben Lichtenstein, thank you for all of that. Appreciate it. Thanks, Ben. It's time now for Technical Tuesday. We want to look at charts and trends, and Kevin Horner's with us, Senior Manager, Trading Services Education at Charles Schwab. Thank you for being here. So we just finished saying the S&P 500 again, an intraday high. Any gains today will be another record closing high. What levels are you watching as it bumps up against new highs?
Yeah, we got pretty close to that 5,600 today, didn't we, Nicole? It was right on the table for us. We're about 10 points away on that intraday high as we kind of breathe after what's been a fantastic week. 5 days up more than 2.5% in the SPX. Pretty pleasing move, as is the one from mid-April where we hit that swing low, April 19 up to the high we created today, 12.8%. It's been a fantastic push over the course of fewer than 3 months. Tough to argue with this. Now, that said, traders up here are possibly getting a little bit uncomfortable with all of the grind higher. I'll challenge the trader who wants to be maybe worried here. I mean, we don't look at new highs as bearish, of course, Nicole. So one thing that stands out on this chart is the RSI moving into overbought conditions, validating new price highs here. Sure, could we benefit from another 2-week consolidation like we had after the gap move up after the Fed announcement on June 12th? We could use that tight range again and benefit, allowing the 20-day moving average to get caught up. But ultimately, Nicole, if we're looking for downside targets, the 20-day moving average is certainly appropriate. That comes in at 54.75. If you wanted to go for the round figure, 5,500, that represents the prior highs that we just broke through as of last Thursday. So you've got a range maybe between 54.75 and 5,500. Another level below at the gap from June 12, 5,400, and then another one at 53.25. And I think, Nicole, the process here for traders should just be constant discussion with themselves about what's going to give me the greatest amount of comfort. How am I going to act if we start trading through some of these short-term support levels? I'll remind you, a pullback to the 50-day is perfectly within reason, and it would be one that nobody would enjoy. It would be nearly 5%, 4.75 as it turns out. But that's entirely within reason and still being able to maintain trend thereafter. So as a trend trader, I just think it makes sense to always be thinking about this, Nicole. What are these levels below? Where would I change my viewpoint? And do I want to be a seller on strength or maybe a seller on weakness? All of these things can be really helpful to the trader.
Yeah, and look, the RSI too, going into the overbought signal is telling too. You got to take it all into account. I get it. All right, so you're watching a few names here. One would be Dell, right?
Mm-hmm.
Tell me a little bit about that.
It's kind of interesting. Everything that once was cool and hip is now cool and hip again, perhaps. Dell is showing a really nice uptrend here. In fact, Dell, as of yesterday's close, Dell was up more than 90% year to date. It was a number that kind of surprised me a little bit, especially since they spent the last 5 weeks in the midst of a retreat. So kind of finding support in the neighborhood of the 50-day moving average, making higher lows along the way, and holding that and also giving us higher lows. So bulls are looking at this as maybe the potential to participate in a newly developed trend working against that nice level, that 50-day moving average. Again, we've seen minor pullbacks, but each time we've held that uptrend line that we have managed to maintain since about mid-March. And I think if you're a short-term trader, that's the level that a lot of them are watching, right? The level beneath that is the 200-day moving average, all the way down at just shy of $100 a share as we sit at 145 here. Now, today's action, we could call a potential rejection at the downtrend line. So we're still not yet convinced that this is a trend ready to continue, of course, if you're bullish, but the bullish trader does have the risk reward benefit here, where maybe downside risk is under the 50-day moving average, maybe 137 or so. That would give them about 8 or 9 points of risk. But if you're a believer that this is going back to the highs we've seen, well, then that fits from a risk to reward ratio standpoint. So better than 1 to 3 on risk versus reward for the bulls here, Nicole. But again, patience might be in the offing since we've seen a little bit of a pullback from that trend line.
Yep.
Some traders might want to see us trade above that on a close first to feel a little bit more confident.
Do have at least some sort of bullishness in that ratio there that you
I think
were
so.
talking about. Let's also
Sure.
mention Intel today.
Yeah, this one, of course, had a really great move yesterday. A gap level taken out. Now, this chart looks a lot different than what we've seen with Dell. Certainly a lot different than what we saw with the SPX. But what's notable here is just the technical development of moving through a tight trading range. So we had spent late April into early July in a $2.50 range down here between 30 and 32.50. And yesterday's gap move cleared that level with conviction on good volume, mind you. And so some traders are starting to wonder whether we've got the opportunity for a momentum-based move up to the 200-day moving average. That's at $39 a share. And as you can see on the descending downtrend line there, it comes into play as well. So we've got some confluence of resistance. What I think is notable is that Intel's been kind of unloved, as you can see, dating back to December, meaning we've had a rally from the broad market since November 1, and for the majority of that move, Intel has not participated. Now, that longer rundown trend
Yep,
is
I got
the more
fooled by it.
trailing trend. So it's entirely within reason that any movement up to 39 is just a bearish setup for those
It'll happen.
traders still not believing in Intel. So you got to look at resistance at 39 as a potential target for the short-term bulls. But I should also mention we've already achieved the so-called measured move opportunity, which took us to 35. Again, just taking the height of the trading range we were in for that 2-month window and adding it to the breakout ledge at 32.50. So it was a $2.50 range. Breaking 32.50 suggested a move to 35. We got to 35 today. In fact, our high 35.22, and we have then pulled back a little bit. So maybe watching that high, maybe waiting for a test of the breakout for new traders might make sense. So maybe even a pullback to 32.50, but it at least is changing the scope of this chart in the short to intermediate term here, Nicole.
Oh, for sure. It's really been bouncing around since after earnings. Basically it was bouncing around doing a lot of nothing, and now it's sort of staging this comeback 5 days in a row of gains. To your point, today's the 5th day. It's up 11% this month, so the Bulls and the Bears have to wait and see. Okay, thank you for all of that, Kevin Horner. Great to see you.
Thank you, Nicole.
Thank you. Well, we've watched the negotiations all about Paramount and Skydance, and the deal appears to be done, but is it really? Still has a few things to go through. We want to talk about streaming and more. Coming up next, our panel is ready. And we're going right now to Dan Rayburn, streaming media analyst, and Seth Schachter, managing director at Strat America's digital business executive. Thank you both so much for being here. So let's have a conversation here, Dan. This has been the longest drawn out deal, and bidders and what comes of this. Dan, do you think it's really going to happen here? Is this finally really happening?
I'm not getting Dan's audio.
I'm not getting Dan's audio either. Seth, are you able to hear me? Let's get some of your thoughts
I can
on
hear you
this.
loud and clear. Nice to be here, Nicole.
Seth, yeah, glad you're here. Some of your thoughts on this deal.
Boy, it's been a really long-running deal. It's more of a little bit of a high-level shrug, if you will, than it is, kind of excitement at this point. But, I think there's enough people in the Hollywood film and TV community that didn't want to see Paramount go away. It's a legacy part of the ecosystem here in so many different ways, from business to culture. And, I think this is an alternative that came out that will allow it to keep going. It's not going to cure some of the really fundamental problems that sit all across that enterprise. But it's, it doesn't appear like it's going to be broken up. And I think the biggest thing is that, the Ellison family, Redbird, seem to really want to be in the business. So I don't think it's something that is going to be necessarily sensitive to immediate movements as much as it is trying to build the thing and turn it around long term. And that's a positive thing. But but hard to be excited. It's been a long, messy process, basically.
Yeah, yeah. Look, and David Ellison has outlined a transformative plan for Paramount. It includes enhancing the Paramount Plus streaming service, advanced algorithmic recommendation engines, improved advertising technology in order to retain those subscribers, maybe attract more marketers. Dan, what do you think of that plan? Does that sound good? Does that sound like something doable and exciting?
But this deal does not significantly impact Paramount's competitive positioning. It doesn't change their exposure to industry headwinds, to cord cutting. So all their talk about synergy opportunities and scale, those really come as one-time positive hits to the balance sheet on a cost-saving standpoint. And also, many don't know that Paramount has been in the streaming game longer than most people because they had CBS All Access. So their video stack, as we call it, is already very good in the market. It's extremely robust. It targets customers very well. So this whole idea that new management team just comes in and is going to build a new stack or some sort of advanced technology, it sounds great, but that's just not the reality of how it works.
Yeah. And Jeff Shell, the former NBC Universal Media chief exec, is joining that. Dan, did you have any thoughts on that? Shell praised Ellison's abilities and his unique blend of creativity and technical know-how. I'm paraphrasing. Does that matter? I mean, does it seem like they have the lineup, Dan, for this to make it competitive?
Here's the thing. The new management team recognizes the value of the CBS network very well and linear cable brands, along with the dynamics of that business. So there is no doubt that who they're bringing in here from a leadership standpoint are going to manage those brands for cash flow and cash efficiency. That is a guarantee. They understand the TV business and the linear business, but the future here is D2C, direct-to-consumer streaming, and that's a very challenging market, and the challenges don't disappear with new leadership.
Yeah, yeah. And sports is huge, right? We talk about NFL, we talk about NBA. I mean, we couldn't find Wimbledon anywhere. We had to pay everywhere to try and watch some tennis this past week, Seth. Sports and live programming, live events is going to be a big deal.
Yeah, and I agree with everything Dan's saying. I think I took a lot of the comments that came from the team kind of as window dressing, because I think a lot of the studios are optimized for that stuff already. But I think it is legit to ask, are there new types of content or ways they can rejigger, the amazing assets that are in all those archives, right? And sports is an interesting one, but they're going to be under tremendous pressure from the tech titans for those rights, right? And the other initiatives that are out there. So it's a tough thing. I mean, no doubt about the cash flow. That you'd be looking at cost cuts and lots of staff layoffs. It's going to be a very hard road, I think, over the next 6 months.
Good point. Good point. I'm out of time. In 5 seconds, Seth, Dan, Netflix next week. You think it's going to be a thumbs up report or a thumbs down? Dan?
Thumbs up.
It's always thumbs up with those guys. So agree.
All right. Well, yeah, we see a price target hike over TV Callan today. Dan Rayburn, Seth Schachner, thank you so much. Great to see you both, Dan and Seth. Thank you. That's going to do it for us here on the watch list. Thanks for being with me. I'm Nicole Fedelides, live from the New York Stock Exchange every day here on Schwab Network, which you can get the app. It's available in the Apple App Store for free. And tune in 24/7, schwabnetwork.com. Thanks for watching. Market on Close is next with Oliver Rennick here on Schwab Network.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, and I definitely feel privileged to be in that position.
on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. All so you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go, at 12 p.m. Eastern on the Schwab Network.
Good afternoon and welcome to Market on Close. I'm Oliver Rennick. Thanks for tuning in. Heard from Jerome Powell, part one of the two-day testimony at Congress, and there's not a lot to report, frankly, more of the same generally, but a few little swings throughout the session here are attention grabbing, but generally we're grinding and we're just right at highs. So the status quo pretty much holding. NASDAQ slipped a little bit from some early strength, but it has been pretty much a divided market all day. Yesterday we had Russell strength that faded in favor of the NASDAQ in the second half of the day. We'll see how we close up. Generally the closing moves have been pretty strong, and S&P's just below 55.80 here. What's there to complain about? Technical new highs with every advance at this point. So tech is working. Nvidia's been up throughout the session. That's pretty much to some degree still the beginning and the end of the conversation, but that's where we'll begin today. Nvidia's been up pretty much all day, right out of the gate strong. We had the eBay note we talked about that pretty much showered love on all the semiconductors still. Nvidia number one in many's hearts, and understandably why, because still the valuations for Nvidia look very reasonable compared to a lot of the other tech leaders. So another 2% bounce. That being said, a little bit of a fade in the semiconductor basket. If you look at the SMH, we're still just a tad below that previous record. It seems like we're working our way up there, but it might be a little bit of a threshold to get through. It could be a challenge to punch through to a new high for the semiconductor ETF, but you can see how close we are. Still, tiny little bit of a red candle today as the sector's basically unch right now, 9 basis points. So a little bit of a fade from earlier on. We started to fade around Jay Powell when he started speaking. We'll say that he doesn't sound terribly dovish. He doesn't also sound very hawkish either. He continues to basically toe the line of looking for
I'm back.
incrementally positive data.
And Jimmy wants to know what he missed.
Did say that the last two inflation
Nothing yet.
were good and improvements, but he did use the word modest. And judging by some of the hysteria around a few of those inflation prints of folks taking like victory laps, not exactly the same level that Jerome Powell is viewing it on when he describes it as modest progress. That means he needs to see more. June's off the table, or July rather, off the table, and there's no August meeting. So what else can really change here? The dollar basically stays fixed around this 105-ish area. The 10-year yield backs up a little bit higher here today after swooning in the last 5 days. But what is important is the dollar and yields did connect. That was something I talked about for weeks here. First, it was the dollar that was just really elevated relative to yields. Yields caught up, but then that didn't seem to really make a whole lot of sense given the economic data continues to miss expectations. So now they've come back in together, and I think this does provide us a little bit more market harmony when you look at the macro framework. To see yields and the dollar reconnecting makes it easier for us to track the way the market's interpreting Powell. So to see dollar and yields bottom out here today, basically right around the time you started speaking, I think that makes sense because he still is just not going to cut, and the rest of the world is on their way to keep cutting more. And if we also are watching elections across the pond, and even though there were some moments of uncertainty, generally the path still forward is pretty predictable, and they're going to be able to keep lowering rates while we can't. So the dollar can't go down too far. Yields also seem to have some degree of limit to the downside. So you're basically just kind of range bound in the macro stuff, which makes sense. It's not the driving force right now. The driving force is definitely...
Does, huh?
However, that being said, looking back into today's movers, there's a few surprise winners. The value factor was actually one of the stronger factors today, but we're talking small moves. Anytime you see stuff like the banks or the value trade leading, it tends to be the weaker days. So, don't look a gift horse in the mouth. Highs are highs. You got a few basis points. And there is quite a bit of strength in some of the banks going into earnings. I think that's encouraging as well. But generally speaking, you got a good move in NVIDIA. That's your anchor for the day. A few other things participating, but just not a lot of movement otherwise, and limited swings on the macro. And we pretty much know the outlook for the next 3 months, which is we'll talk about cuts in September. I don't think we're going to see anything spectacular from Powell tomorrow either. So we now basically look forward to inflation. Joining me here in the studio, Kevin Hanks and Jenny Horn, contributors and hosts here on the Schwab Network. So we did get kind of a little bit of volatility and chop around Powell, Kev, but it didn't really amount to much.
No, the dollar firmed
Like
up a
in
little.
CMG.
Yields firmed up a little bit. It took some of the sting out of the upside.
Sure.
And the market kind of lost its...
Yeah, we lost our air a little bit.
They also didn't sell it off.
Yeah.
But, it just kind of lost its upside. And frankly, the air's thin up here, right?
Fair enough. Yeah.
The bar is extremely high going into this next earnings season, and there may be some people setting up for that, but today was, I hate to, there's no really nice way to say that. Today's testimony by Jerome Powell, this was the smart group, right? So it's not going to get better tomorrow.
Right.
It's going to be less entertaining. So I thought Jerome Powell stayed extremely neutral in what he said today. Refused to take any bait. What I would have asked him, however, is what level of unemployment will trigger it?
Right. Well, I don't think he has one, right? It's dependent on what happens with inflation.
He was uncommittal. He wouldn't go in either direction. He would just say data. It's about the data. So I thought Jerome Powell, other than some tense back and forth with Elizabeth Warren, I thought it went pretty unblemished.
He did sound pretty confident on the economy. I thought the first words out of his mouth, right when he started speaking, were about resilience. Now, he clearly acknowledges things have cooled off in the second half of last year, but I think generally his combination of optimism still on the economy and
resiliency
inflation doesn't quite mesh still with a lot of the market narrative you hear where people are saying, we're ready to cut, let's go now, we're going off a cliff.
Remember
it's a different tone.
Yeah, remember the fundamentals of the U.S. economy are this. Incredibly strong in all ways, but pressure on inflation. So Jerome Powell's got those two things in his pocket, right? Remember, before the pandemic, we were at 1.6 inflation and struggling with ways to get it to 2%. So he's got deflationary pressures and a strong U.S. economy. Just,
Don't break it.
Don't break it, exactly.
Right. That's where I feel like when people are arguing that he has to cut now to avoid breaking it, it's just a little bit disingenuous. Like, we've slowed down, things have softened up.
Right.
The more important point, I think, Jenny, is just looking at how the market functions. this stuff is all secondary now. It's been that way for months. It's been that way
Months.
all year. The macro has not been the leading force for the entire year. We came into the year expecting cuts. And now we're down to maybe one in September, right? And like the market hasn't cared.
No, like the jumpiness I feel like around the Fed's policy right now creates like a sense of like I don't necessarily even I don't pay attention to as much as what Jerome Powell says anymore.
You don't have
frankly.
to, yeah.
You don't have to because what matters
What's he
is
gonna say?
Exactly, and I think what matters now is as we go into this next earnings season, like what banks tell us first of all, because we'll get them first, but then also tech valuations are so lofty right now. I think you have to post big growth if you're a tech name that's run up as much as everything has.
How about Tesla? 10 days straight. 10 days out of nowhere.
Look at the 1 month, 47% in a month, 13% in a week.
Crazy. The high beta classic is back, baby.
It's up 89% from its lows it made in April. 89%
I
from
know.
April.
Just in April, we were at 140. That's crazy. We moved $120. I mean, Albemarle is actually down, by the way, today, which is kind of interesting. We're going to talk about that later in the developing story, because there's a downgrade on Albemarle, which is oftentimes connected, but like, there's not even any news on Tesla.
No, I think when we started this was like the deliveries that came in better than expected. But I mean, like you could also argue that the bar was set so much lower for their deliveries that I don't even know if that was necessarily as strong of news as maybe the market read it. But momentum has just like continued to reverse, and this is what we've seen with Nvidia all year long. That was when momentum moves, it continues to move without really any like fundamental change in the story, which is what is so interesting. Now we're seeing exactly what we've seen with Nvidia and Tesla, where the momentum has just swung now so in favor of obviously the bulls. I mean, the market cap has swelled about $250 billion over the last 10 trading sessions. That's the size of Toyota, just for context.
All right, so it still has massive size swinging around it. Okay, the thing is too, it is technically playing catch up on the year to the other automakers. Technically, that's one way to kind of look at it. It's closing the gap back with Ford and GM, which had been up on the year. GM has got a good year, 28%. So.
Remember, you're 4 weeks from the robo-taxi event.
Yeah.
Speculation on that's going to be big.
Well, that's where, to Jenny's point about earnings, there are now events on the horizon that we cannot be disappointed by, whether it's Apple earnings and the outlook for the refresh cycle, Microsoft Copilot, it's Tesla Robo. Like, this has got to be the quarter where it's like the product adoption's got to be overwhelming, or the service unveil has got to be like, it's got to show up in the numbers.
I mean, with Tesla trading at now 91 times on a forward basis, like you have to be able to tell me that you're growing. And I think the energy component of its business is really interesting, but that, like, we don't know what the money looks like tied to that yet. The robo-taxi event's really interesting, but yeah, earnings growth. Can you guide that you'll see continued delivery and production strength? And what's China look like? And what's margins look like? There's a lot of concerns that you could say with this recent run-up in shares.
That suddenly, I guess nobody's cared about when they were very worried about it for like a year and a half.
Exactly.
The margin story.
So, hey, that's when the market goes with, narrative and sentiment, which is, I think we've definitely been in that phase. So we're like melting up in this stuff. It's just still none of the rest of the market's melting. Maybe the banks don't, which are looking pretty good. All right, thanks, Jenny. Thanks, Kevin. Thanks, appreciate it, guys. All right, let's continue the conversation. Let's talk about the earnings ahead of us, as well as the market's prioritization of the tech story over the Fed. Joining us, Mr. Michael Block is here this afternoon. And Mike is a longtime source of mine, now runs a company called Agent Smith. Mike, we haven't talked a good bit. It's great to see you again, sir.
Great to see you, Oliver. Great to be here. Great to be here with Agent Smith.
Yeah, tell us about what you're doing.
Yeah, so Agent Smith was an outgrowth of some of the work I did in venture capital. My venture capital partner, Dan McCooey, and I, Dan's also a Wall Street veteran. We had the good fortune to invest in a company founded by Pulkit Jaswell in the predictive AI space. Pulkit was an serial entrepreneur in the drone and robotics space, and then predictive AI. Dan and I invested in a company of his called NWO.ai, which has been very successful. It's a predictive AI company. And then about a year ago, he said, how about we use predictive AI to look at markets and create investment insights? And thus, Agent Smith was born with myself, Dan, and Pulkit. And we provide a platform that uses predictive AI and advanced AI techniques to automate certain parts of the investment process, whether that's macro, sector level, sector and ticker level, or looking at technicals. Anything that's going to move markets is what we want to capture, and we do that in a very unique way for any users and clients.
Well, you've always had a unique way of looking at the market, so I'm sure you've kind of brought some of that perspective over. How much is subjective from your guys' side on kind of the data that you feed it? and how much of it is just sort of a beast, a wild beast on its own, where you set and let it run free?
Well, look at our name, Agent Smith.
Oh,
and that refers to the fact that we've created, autonomous AI agents. We tell them we want to get the full macro picture, and take in the gamma levels, take in the macroeconomics, take in bond markets, and then we let the agents do the work. It's almost like they're writing their own code to figure it out as objectively as possible. Now, that objective part doesn't just mean mechanically, robotically looking at fundamentals or economic data, right, Oliver? It means looking at all the opinions and emotions out there in the market. And I think in terms of encapsulating and integrating all of that, that's really where we look to excel and provide better value for our users.
And are those users like money managers who are trying to figure out how all the pieces of the complex portfolio fit together, or are there individual investors that can harness this for their own sort of trading approach?
Well, we have started marketing to institutional investors and to broker-dealers, research providers, wealth managers, such as those who work with Charles Schwab, of course, family offices, really anyone who's looking at investments.
AMD.
From an individual investor all the way up to the world's largest pension and sovereign wealth funds. So this is really something that we are marketing to everyone eventually. We'd like to be ubiquitous. We're 3 months in, so we'll get there.
All right. So tell me about kind of what it's reporting as the main driving force right now, our sort of own
Kind of resistance right now.
The macros kind of dropped a little bit to the second. It's kind of like every day just looking at NVIDIA as your starting point, your kind of cornerstone right now in the chips. I mean, is it that simple? Is it going to get harder, Mike?
Well, it always changes. So if you expect that things are going to stay one way, then maybe that becomes difficult. And yes, it has been all about tech, hasn't it? We try to take this approach, and we actually have a macro agent, Agent M, who specializes in kind of giving the morning report every morning at 5:45 a.m. They have ready for our subscribers a full look at the macro picture, taking everything into account. Now, obviously, coming into today, we're focused on the upcoming data, the upcoming earnings. Most pertinent, of course, was the 10 a.m. testimony that Jay Powell gave. So the thing that Agent Smith does and Agent M was pointing out was, look, a lot of this always comes down to support levels, resistance levels, and what the important gamma levels in the market are. Where are dealers positioned in the option market in major indices and ETFs? And this morning, one of Agent M's big takeaways in terms of the game plan for today that he gives every morning was that 1550 in the S&P 500 cash was a very important level, and if we held that, things would look good. Sure enough, we had this testimony where Powell didn't really do much of anything. I joked maybe the dog ate Powell's homework, but he didn't do anything to rock the boat. He acknowledged slowing jobs growth as we expected he would have. Didn't really commit to doing anything in September, even if the money markets are telling us right now that it's a 73% chance of at least one cut by September. So with that, 1550 held, as you pointed out earlier on your broadcast, tech continues to show leadership. We're also seeing stocks like Citigroup strong today ahead of its earnings on Friday. It's making a new 52-week high today. So, a lot of broad-based strength here. And, really, when we look ahead to Powell, I know Kevin said earlier, we get the, less smart group, as he put it. That was his words, not mine. Coming up tomorrow, let's see what comes up in Powell's Q&A tomorrow. And then, of course, we're looking at the big CPI on Thursday morning. And the question becomes, what's going to happen coming out of that?
Okay, so CPI in the context of what we heard from Jerome Powell, how do we know if it matters to markets right now, Mike, when there's no August meeting and it seems like July? I mean, I don't know. Is there a number, like a crazy black swan, the blackest of swan numbers that could make a move in July necessary? Because if not,
Or are we going to reverse? That's the question right now. Ryan D.
Right. So here you are saying there's no meeting. There's a lot of complacency.
How do you feel about it here,
Towing the line.
Magnificent?
Tech leads no matter what. So what could possibly go wrong? Now, Friday we have J.P. Morgan earnings, but J.P. Morgan, our friends there, being very erstwhile.
We paused.
Day morning, meaning the market's probably going to move at least 1%, according to what the options market is telling them. Interesting. So, in other words, if we're looking for a 0.3% up month over month in that core CPI plus 3.4 as the consensus for year over year, it's going to take some big aberration there. And they tried to game out this morning, and we were able to like interpret that through H&M's eyes. You know, if there's a 0.2 move, then it means this is going to happen. If it's a 0.1, I would say if there is something below 0.2 month over month, yeah, that's going to be a big move. There's something that's
Definitely
higher
a double
than
bottom
0.2,
here.
get some knee jerk to the downside where it's like, you know, it's time to be hawkish again. Forget about those 73% odds. Maybe that would go back to the 60s or something like that. We need to really watch those moves. One thing that, you know, we've learned at Agent Smith, watching these markets, and our autonomous agents giving us guidance about the way stocks move, is that, you know, a lot of times that when we talk about prices that a stock can go to, we call it the price of least resistance.
Yeah.
And option traders will really appreciate this because it's almost like it has to go to that strike, almost give that strike a kiss, that 90 basis points or 93 basis point move that JP Morgan's pricing in. And then we really have to watch. Did something really change, or is this options market, you know, trickery going on where it's gonna hit that level and then snap back? Because one thing that we find over and over again, and our autonomous agents unemotionally detect this and think about this really well, whether it's the option specialist, a macro specialist, or a technical specialist, Agent Q, they're really good at thinking through those issues and seeing that. So we're going to be watching that. It's going to take one heck of an outlier number. I'm talking something along the lines of 0.5 month over month, something like 3.7 year over year.
To really move the needle.
Of course, the downside, it's the same thing. So
55.85 is at 40 cents.
Again, you know, don't be surprised if we get some kind of crazy knee jerk that gets you right where JP Morgan's going. You know, they know what they're talking about. They know how to analyze option markets. They have their earnings Friday.
Right here.
So we look forward to hearing from them and Jamie Dimon. Of course, that's a whole other topic.
Love it. Let's chat some more on earnings, Mike.
Run, dude.
Catch up. Love the insight and the connection to what you're seeing and hearing, and what your own machine is spitting out. So we'll be in touch.
Excellent. Always a pleasure, Oliver.
Yeah, fun chat. Mike Block, co-founder and chief strategy officer at Agent Smith. All right. So still a number on CPI that could move the needle for September, which could move the needle on the market. All right. When we come back, we're going to get stock specific. Floors and decor might sound basic, but they're the target of the latest short from Ben Axler. Catch up with them, do a little trading next.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Who knew?
Have
Schwab.
a choice in how you invest with Schwab.
Schwab.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere,
40 cents.
on any device for free.
Accelerate your market knowledge.
And shift your perspective into full view. Real-time example trades.
Okay, that's not right. We're at 35.
I'm Kevin Hayes. Catch me on Fast Market. Weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
It took some work to get it there too, so I don't know. Jimmy don't like.
Floor Floor & Decor stock is getting hammered. Ben actually might have something to do with it. Reed joining us ahead of Spruce Point's got a fresh, strong sell. Founder and Chief Investment Officer. Ben, from a week ago, right? Is that right? Stock's been getting hammered.
Well, I guess the market is seeing what we're seeing, which is a troubled specialty retailer in an industry that's under pressure, and that being, the consumer and the homeowner pulling back on home improvement projects and spending. That's part of our concern. Obviously, there's some cyclical exposure here, but more broadly, we have concerns about the structural positioning of Floor & Decor as they move into different geographies. We think they're having various pressures. They're finally shrinking the store format. We think the stores are too big. And as you know, with a lot of our research, we're also finding a lot of changes of disclosures, retraction of disclosures necessary to understand the business, modifications to accounting policies, and ultimately insider selling. The CEOs enacted 3 insider sales programs recently. So these are part of the reasons why we're short the stock.
Okay. No, smoking gun legal thing, though. That's one thing. This seems like a very financial, analysis. Not like there hasn't been a crime committed, right? Because sometimes you find crimes.
That's right.
Well, we think there's a few things that investors are missing. Number
I'm
one
getting
is
robbed right now.
the board and the management. So the board came from a company called Linens and Things,
Blake
which
it.
had a very similar retail strategy, looking for large formats, large, big SKU offerings, everyday low prices. And those board members ultimately sold Linens and Things. The company went bankrupt. It had a financial restatement prior to that, but the strategy ultimately failed. And Floor & Decor, we think, is enacting a very similar strategy and could befall the same fate. Now,
Could have
why?
got some
The
at
leverage
35.
here is
I didn't
so
think about
one
it.
of the big misperceptions we've found in our research is the amount of
I think I
debt
could have got
that Floor
some.
& Decor has. So they have supply chain finance programs to suppliers. We believe that should be considered debt. They also have an escalation of lease commitments, which are not currently on the books.
Break it.
These are legally binding lease commitments that should be effectively debt.
Got to go, Randy.
And so you factor these things in. We think the debt is about $620 million more than the market considers, and this is on a base of potentially falling EBITDA. So we think there's a lot of leverage here that the market's missing.
Got it. Okay. Well, that's huge, right? If the leverage is being misstated or mischaracterized in a way, because then, if and when that comes to fruition, then it's like, batten down the hatches, basically. Thinking about valuation, too. I mean, how did this thing get so expensive? Trailing PEs on this thing are trading like a semiconductor stock.
Cool, 50
It's
cents.
perplexing too, because there's over a dozen
Whoa.
analysts covering it, and by the way, none of them seem to be overly bullish. The majority of them are neutral.
Can we have a real nice breakout to like $2?
So far, but we think there's definitely overvaluation in mid caps.
120, maybe 160.
With a $10 billion type market cap. But ultimately,
No.
we think that there's just a lack of deep due diligence here, and that's what our research is intended to do: is to look to see what is driving their problems. And one of them we think is that there's just more competition from the Home Depots and Lowe's of the world, the home improvement centers, which also sell flooring and tile, but also direct distributors that are courting their professional
Very ugly.
contractors, to sell the products. So, that ultimately we think, yes, it has the richest valuation in the home improvement and building product sector, but that valuation has to contract. And we see this thing easily going down to the 50s or lower.
Okay, it's a huge decline from here at $90. The growth's been pretty meager. Some of the analysts expect there to be a pickup in growth, but the one thing I do notice looking at the financials is that the margin's been very, very consistent. But are the calculations that you're challenging, would that kind of change what the margin would actually be? But I guess if it's more of a debt thing, it wouldn't affect the margin, because that part does seem like they've got some kind of well-oiled machine there.
Yeah. Well, look, they sell what we think are largely commodity products, right? Flooring, tile, bathroom vanities, lighting fixtures, some power tools. These are things that you can buy online, that you can buy at Home Depots or Lowe's. And so we don't think they have any natural advantage in selling these products. And ultimately, the supply chain benefits that they've claimed, we think, could also be a big risk here. Now, let's point out that over 25% of the products are sourced from China, and it looks increasingly likely
China.
that Mr. Trump could come back into presidency, and he's known as the tariff man. And so there is a tail risk here that if trade wars with China re-escalate, that could put significant downward pressure on Floor & Decor's margins, and we think the market may be slowly baking in that probability of a Trump win and a large impact on Floor & Decor's margins.
Got it. All right, so you're looking for something much closer to the multi-year lows, so which are about $59. You're thinking as low as $50. Can you give us any inside look at your position, Ben? Is it long dated? Are you buying puts, or what's the way to execute the view?
Break it.
So, as we've disclosed, we're short the stock. We continue to be
Jimmy
short
makes
the stock.
money too.
We think
Magnificent.
this upcoming quarter will be quite telling. I think if you look at what some of the other peers are saying in the home improvement space, like Pool Corp, for example, just warned that their sales could be down 15%, and they're seeing less demand for home
We have a
remodeling.
556.52 resistance to break.
They sell products into the pool space. They sell pool
I have a
tires. So that's an indication
557.40.
where things are going. We think that this is going to be a really challenged quarter. But again, our thesis is less about the quarter, more about the long-term
I could sell it now.
positioning of this company. Tiles and flooring products are heavy to move. A lot of them are imported. So as they expand geographically into the center of the country and other regions, we think it's costly. It's going to be a costly growth proposition. And we've done a whole analysis of their capital spending, which we think is increasing.
Continuation up to the upside, please.
Difficulty finding store labor. If you look at the amount of workers per store, that's also declining. And we've certainly called some stores.
I easily get out right here.
There's customer service challenges that could also weigh heavily on their sales outlook.
Okay, understood. Good reference to the pools. We were talking about that a couple weeks ago. And housing data has cooled off pretty substantially. Noted. All right, Floor & Decor, F&D short. Thanks, Ben.
Thank you very much for having me.
Absolutely. Mr. Axon, founder and chief investment officer at Spruce Point Capital Management. All right, when we come back, options, trading, and gamma levels, visiting some of the conversation that Mike Block kicked off for us at the top of the show. KG taking a look at it for us next.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network.
Accelerate your market knowledge
and shift your perspective into full view. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
All right, let's talk some options. Let's talk gamma levels. Mr. Kevin Green joins us to take a look at the S&P. And firstly, let's talk short term, KG, kind of like the response here today post Powell. I mean, look, we're going to make a mountain out of a molehill, but it seems like we're still kind of rolling around these same levels.
Yeah, definitely. So, I mean, the market's really boring. It's really right now.
Right, it's really boring. So at the end of the day, we're going to probably continue to see some compression until we have that CPI print on Thursday. We kind of talked about this yesterday. You are seeing some institutional flows going into the put side, maybe trying to hedge some downside risk. I know that you shared a note with me earlier today regarding potential
No sharing.
horizon from one investment bank that is a little bit concerned when it comes to the CPI number here. But when we're looking at today's flow going into the close, it's once again just that compression, but just kind of note we're
No sharing.
end of our negative gamma level here.
The cheating.
575 area, and all day we've been kind of buying the lows, selling the rips. That has been the trend over the last week. Right now we're at that low. So if we are going to see kind of this buying activity kind of take place in the remainder of the session here, it's going to happen at this level. If we do break here, Oliver, there is a trader that's looking at 55.60, so that we're around a 16-point move to the downside here. And from an upside standpoint, not really seeing the flows yet. That really signifies that we're going to have a melt up into the close. Now, obviously that can change, but that's kind of where we're at right now. Buying the dips here, selling the rips, compression around 15-point ranges that we're seeing on an intraday basis.
Okay. All right. Now, just, boy, the feel, like we talked earlier with Mike Block, who's got this new AI, trading tool that he's using, and they've built and sounds smart as heck. But I can't hesitate to give my own feel, right? It just feels like things are we're getting so quiet and so kind of not coiled, but complacent in a way. I mean, the fact that you've got this massive dispersion within the market, so much masked from the very slow, steady tide of the AI trade at the top. So when will the options kind of tell us if we're breaking in some direction or the other, KG?
So if we're going to have a break to the upside here, 5,600 is going to be that key area of resistance for this week. And yesterday we kind of talked about that 55.90-ish level. And, obviously it just moved up around 10 points. Not a huge deal, but that's going to be your key level to try to break through this week. We get to 56.10, that's where you can kind of have that melt up type of scenario to the upside. Downside, Oliver, it's really, really tough. 55.45 is kind of the area in the sand that we have right now. But there's not a lot of protection that's sitting down there. So you could actually have this free fall type of moment if we have a surprising hot print when it comes to CPI, and that's where we could see these downside moves. It just has not happened yet because, once again, everything's bullish. If you have no news and you have very light volume and price action continue goes to the upside, then that's overall bullish for this market. Until we actually have some volume stepping in, we have some sellers stepping in right now, that's where we could actually see the market kind of turn right now, and we're just not seeing that. And we probably won't see that until we actually have some fundamental data, some hardcore data, either in earnings or in the macro side, that tells us that something might be wrong or mispriced.
Okay, so that's an important thing that we did talk about yesterday. I'm glad you reiterated that, which is that there seems to be more preparation to the upside, and that kind of skew has shifted pretty significantly from a week ago where it seemed like it was a little bit more kind of balanced. Now it's kind of like assuming that things don't break down.
Right, yeah, there's a lot of bullish activity that's taking place for these institutional traders here. What they're really doing, what we are following here when we come up with these levels, is just these positions that they have around their core portfolio. So if these institutional traders are actually moving up their call strikes that are out of the money to the upside, that's ultimately bullish for the market. That could kind of relieve some pressure for dealers. If they're moving up their puts,
there we go.
That also is going to be bullish. Once you kind of see the
they said it couldn't be done.
The market stalling out, and you start seeing call flows getting lower and lower when it comes to the strikes, or maybe even close to the money, that's when you know that we might have a near-term pullback in this market. And we just have not seen that type of flow yet. I think everybody right now is kind of waiting for the data and kind of looking around and saying, okay, what's going to be the next catalyst for us to move to the upside here or the downside? And right now, there hasn't been, bears just don't want to play right now. Even when you're looking at the put flow, it's so unbalanced to the call side here that even the leverage bears don't even want to try to step their foot in the water to try to catch a downside move.
Yeah, all right. So we are kind of skewed. It's not just my gut, then it is kind of getting a little bit more lopsided. Mike at the top of the show seemed to believe that we could be moving based on September odds if they don't go perfectly with inflation this week. So, all right, it seems like the conclusion generally from the dealer positioning stuff is that they're ready for upside, not so much ready for downside at this point.
Yeah, definitely. And as we are going into the close, we kind of talked about that 55, 75 level, the level that they need to hold right now. And it appears that we are catching a little bit of a bid going into the close. That's really what you want to see for a start of a melt up. Now, once again, those key ingredients, communication services and semiconductors are going to have to lead the way here. But if we are going to see a pretty decent close, that's going to be the things that we're going to need. And then the balance level, because we highlighted this yesterday, is going to be 55.83. So if the dealers want to be pretty much flat from the day, that could be an area or a magnet where the market does close.
Okay, 55.83. All right, we haven't ventured too far from a lot of these key levels on a weekly basis, so it's been a pretty good guidepost for us to watch these sort of pins. All right, and generally the closes have been pretty strong for the most part, and so I feel like until that changes, the market doesn't drift too far, right? I mean, like, we've closed pretty solid. Like, I can remember last time we faded hard into the bell.
Yeah, definitely. And when we talk about a strong close, let's also kind of quantify that.
50
too. I
cents.
We see a nice 8-point move to the upside in the last, let's say, 5 minutes or 8 minutes of the close. That's actually fairly strong. Those anomalies that we saw maybe a month ago,
But
we
like
had a
it.
close of like 35
I'm gonna
points.
get out here
It was
soon.
like 30 points in the last 10 minutes. Those are really not normal. So an 8-point move to the upside from here would actually be fairly successful for the bulls. That would bring us at around 55.76. 55.86, I'm sorry, if we did have that pump. So that would be considered a melt-up win for the remainder of the session.
Okay, all right, good stuff. Thanks, helpful as always, Mr. Kevin Green, our senior markets correspondent here on the Schwab Network. Coming up, we're going to go to the NASDAQ. We're going to talk about what all this means for IPOs and if CEOs looking to go public are enjoying the record highs. Typically they have, so we'll get a fresh look at what's on the calendar for issues. Then we're going to take a look at Albemarle getting hit today. Kind of weird paired next to all the excitement around Tesla and EVs. Albemarle usually pretty closely linked to that same narrative as a lithium maker, so we'll be right back.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
There we go. Now we're talking.
How's my favorite client? Great. I started using Schwab
I'm gonna make a business decision.
Trends, like wearable tech. Trends? All that research sounds exhausting. Nope. Schwab's technology does the work. So if I spot an opportunity in
65 centers.
or pets, I can buy those stocks in a few clicks. Can't be that easy. It is with Schwab.
Schwab investing themes. 40 customizable themes up to
Bingo.
25 stocks in just a few clicks.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network.
Stocks hanging out just near highs. It's already been a good quarter for issuances and companies going public. So will they want to get through that door before it closes? Chris Dearborn joins us from the NASDAQ, Managing Director of the Market Intelligence Desk. So it's already been a pretty busy year, Chris. What's the vibe and momentum now that we just keep plugging away to records?
You know, you had a great first half of the year. We talked about months, we talked about quarters. Can you believe we're halfway through 2024 already, coming into a presidential election? It's kind of amazing, right? So you raised close to, we'll call it a little over $19 billion in the first half of the year. You know, you got a lot of good operating companies that are coming forward. On NASDAQ alone, we had 66 deals, which raised about $9 billion. We had a couple of deals last week, as a matter of fact, a couple of smaller deals, but they're still coming. We got a few more SPACs coming up at the end of this week and a couple of operating companies. So even though you're in the summer doldrums where the bankers have to take their 2 weeks off, unfortunately, you don't get those 2 weeks. There's still deals to come forward, and ideally you have a lot of items that are really pulling this market forward. You got higher valuation, especially if you look at the S&P and the NASDAQ. You talk about that all the time, right? You've got a low volatility, something that a lot of people aren't really talking about as much, with, you know, a 12 handle on the VIX. And the disinflation narrative is starting to play out a little bit, which is also very good for this. People have a risk appetite. Now, if you look at the 10-year, right, you're getting 4.3% right now, you know, so the risk-free rate is still pretty good. So if money is coming into IPOs, that must be telling you something about the operating companies that are coming forward.
Right.
Yeah.
You know, it seems like just the ideal petri dish, the perfect fertile ground for new issuances, and I know that it has been busy to that point because of valuations. I mean, what else do you hold out for at this point? You hold out for what, like COVID levels? I mean, like, you know, the standard, it seems you got to be satisfied with what's on offer right now.
You know, it's all about growth. The difference between growth in 2021, when you saw a gangbuster year, and then what's followed with the rising rate environment, is that was growth at any price in 2021. Yeah. Now investors are a little bit more discerning, and they still want growth, but the problem is they want, not even a problem, the good thing is that they want growth with a company that has a path to either profitability or an end game. You know, if you're an early stage investor, VC, what have you, you know, two of the main questions that you ask is, how much am I going to give, and what is my exit strategy? And the IPO is generally the exit strategy for a lot of these early investors.
How much of the tech stuff already got through the gate, Chris? Because to your point, the dispersion within the market does just obscenely favor tech, AI. Are there a lot of nascent tech companies that haven't gone public yet?
You know, the stable is full. You've got close to 200 companies ready to go. Some are names that are well known, that we really can't discuss just yet because not everything's out there. Some are not. But what's interesting is that it's been a number of different sectors across the space. You've had communications. We had Webtoon go
wow,
public
that thing dropped fast.
Nice raise. And then you had Alamis go public in the same week. Those two alone raised over $525 million on their listings in the last week of June.
Wow.
You put anything with an AI or tech base in it, it's going to act well, anything on the chip side. But you've seen biotech, we've had consumer names, you've got communications, even on, you've seen some energy names go forward. So they're getting out in all the different sectors, which is good to see. The problem is, you know, it's just not enough of them. We need more of the quality companies that want to tap the public markets as opposed to staying private for longer and going for the Series C, D, or E rounds to raise in those private markets.
Okay, great stuff. Always love the perspective and the update. Helpful for us. Love to hear kind of what the tone is and the vibes there, Chris. Appreciate your time.
Anytime. Thanks, Oliver.
Absolutely. Christopher Dearborn, Managing Director of the Market Intelligence Desk, right? 200 companies in the stable. All right, let's get developing the story. Let's go to a down mover today as Jay Horn's looking at Albemarle. Big sell-off, already been a terrible stock, Jenny, so the analysts just pile on or what?
It sort of appears that way. In the same way we were talking about momentum when it favors the bulls, I feel like you have to consider the momentum that favors the bears, and that's pretty much been the case for Albemarle, which shares down at this point 37% on the year, but more notably than that is actually, I think, when you zoom out and you look at a 3-year chart and see we've pulled back about 73% from all-time highs at just around $334 a share. So that to me is what's significant. And the fact that back then, so just I mean, back in 2022, lithium prices, which are obviously used as the batteries behind EVs, were trading at around 85,000 a metric ton. Prices today have fallen to just over 12,000 a ton. So that speaks to a lot of the weakness we've seen in Albemarle. And while we have seen EVs that are using more lithium, commodities are also becoming right now a bit more flexible to add on capacity to also serve the EV market. So it's not like lithium is necessarily like the only beneficiary of the growing EV trend overall. But today, Baird lowering its price target to 127 from 170 with an outperform rating, and this analyst highlighted that lithium pricing has remained at or below the bottom end of its guidance year today, which they believe will set up shares for a weaker second quarter. UBS also cut its price target, more notably than that, though, to 109 a share from 124 with a neutral rating. Also highlighting really their updates on chemical spreads and prices and their overall reduced second quarter estimates as a result of some of their North American chemical coverage overall. So overall right now, the average price target actually among these analysts, I mean like all 28 of them, is 148. So that implies like 60% upside. But I think that there's a lack of conviction right now. And like, again, lithium prices is a huge factor. But then we talk about also like the recent strength we've seen in a name like Tesla, arguably the biggest, I mean, it is the biggest EV maker. And that doesn't necessarily make sense. But obviously there's different ways in which these companies have been benefiting as of late, frankly.
Yeah, that's a really good point. Kind of the diversity of some of the revenue stream for Tesla that's helped it out is important. And it seems like, I guess right now, the commodities situation is a very different one where more Albemarle's more focused. Sounds like also just some bad financials in what you're describing with the company. So massive breakdown. One of the worst stocks last year, down 60%. Ouch, all right. Thanks for the update. Appreciate it, Jenny Horn. Host of Next Gen Investing. Coming up, big picture discussion with the Schwab teams. We head to the bell. We do a little recap of what we heard from the Fed chair, and also looking forward, of course, to CPI as well as an equity market that will begin earnings. There's plenty to discuss for the second half of this week, likely to be busier than the first half. Oh, bond auctions too tomorrow.
Ten more minutes. Tomorrow's the 10th.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Higgs. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim. The award-winning trading
They're hit
platform
200 just now.
trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique
100% gain.
needs with endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Nicole Pedalides, live from the New York Stock Exchange. Catch me on Schwab Network anytime, anywhere, on any device, for free. Schwab Network.
Interesting day, not bad.
I remember when I first started.
Patience.
And we would experience turbulence. I would watch the flight attendants.
Like Mike
They're
said,
not nervous,
sideways.
I'm not going to be nervous. Financially, I'm the flight attendant in that situation.
The relief that comes over people once they know they've got a guide to help them through. I definitely feel privileged to be in that position.
Stocks and bonds, bonds and stocks. That's what we love. Joining me here to close up the session into the bell, Kathy Jones, alongside Nate Peterson. He's the Director of Derivatives Analysis, and Kathy's the Chief Fixed Income Strategist at the Schwab Center for Financial Research. Tell me about some Powell, Kathy. Anything to mine from that speech?
Well, it was largely more of the same that Powell usually delivers, but
I will say, recent outings, Powell has talked a little bit more about the balance of risks rather than just about fighting inflation. So it does look like some of the deterioration of the labor market is having an influence on the Fed's thinking. And so what I took away from it is, yeah, the balance of risks is balanced, but it's tipping towards needing a rate cut because we're seeing some deterioration in the labor market. And inflation is coming down pretty nicely. So we're still looking for a September rate cut from the Fed and another one in December.
I've never been a wonderful student of the Fed linguistics, but I do wonder if he ever switches his order of topics to lead with disinflation rather than to lead with economic strength. Am I imagining something? Because it seems like he still always leads with economic optimism.
Yeah, and there's no reason to be too negative about the economy. It's still growing at a positive rate, and we still have relatively low unemployment. And I don't think, as the chair of the Federal Reserve, he wants to be somebody pushing a really negative narrative unless he's really worried about recession. So I don't think that's the case, but I think when you put it into perspective of the balance of risks, if it's tipping towards lower inflation, higher unemployment, why keep rates so restrictive? And
Exactly.
we think our rates are restrictive, so why would you do that if you think you're headed in the other direction? And so I think that that's where the narrative is shifting subtly. But my guess is we really won't get anything definitive out of the Fed until we get to Jackson Hole in August. Then we may get a signal that, yeah, the Fed is getting ready to cut rates.
Damn.
Okay. Where do you think this ranks, Nate, on priority for the equity market at this point? Is this all just kind of like fun body language analysis and like months out, because at the end of the day, maybe I just watch NVIDIA, well, where does it rank to you?
Well, certainly rates and the trajectory of rates are very important for the markets. We know that that's been the case. But yeah, look, this narrative, this preparation for the first rate cut certainly has been going on for quite some time. And the market has been, not only patient, they've been pushing stocks higher. I'd say the AI narrative and basically when we shift into the scrutiny about the AI monetization, that's going to be more important. So, look at the EPS growth and where it's coming from. It is from technology. This is a tech-driven rally. Look at the equal weighted S&P 500, flat over the past 6 weeks. Meanwhile, the market cap weighted S&P 500 continues to move higher. But we're stretched, Oliver. If you look at the RSIs, not only are we at a 77 RSI on the NASDAQ composite, the S&P 500, it's a high RSI for the year. But on the NASDAQ composite and the NASDAQ 100, we also have a negative RSI divergence, meaning the index has gone up to make a new high, but the relative RSI reading is lower than the previous peak. So that's a negative divergence there. And even if we continue to rally up into the end of this month, I just feel like we're set up for a little bit of a sell on the news. I don't see how technology is going to be able to surprise to the upside given how much has been priced in, given the performance here over the past couple of months.
Is that going to be more on the services and the product side this time, Nate? Like Apple, Microsoft, because those are the two that are now moving on pure valuation based on product expectations, right? Because there's still a lot of stuff that's supported by earnings. Not a lot, but a couple of the big ones that really matter. And then there's a few others that have just been pure valuation move.
Right. So if you take something like NVIDIA, that everything looks okay. If you look at the last couple of days, we've got an upgrade there from KeyBank and from UBS. Their channel checks say that demand is still very strong there. If you go to something like a Microsoft, what percentage of that revenue from their cloud services is coming from AI? That will be scrutinized. And so it might be a little bit case by case. We may not be at a place where, hey, Microsoft, tell us what your Copilot Pro growth rate is or your Gemini take rate is, Alphabet at this point in time. But there's only so much, patience that an investor can have, because what's built into this whole AI theme is that these companies are going to be able to get some ROI on all of the AI monetization, the AI-enabled revenue, as Goldman Sachs calls it. This is the phase 3. At some point, this is going to have to show up, and if that does fall short, This is going to even tie back to the whole infrastructure bill, because why continue to plow money into new infrastructure build out if the ROI isn't matching up to expectations there? So if it's not this quarter, it'll be coming soon. But even if they do deliver this quarter, the setup is likely some profit taking, some selling the news that might occur.
Sure, like it. All right, good assessment. First, we got to get through all the other ones, though. It's still 2 weeks away. Kathy, on a closing thought, is the credit market at all as imbalanced as the equity market is right now?
Well, credit spreads are just tight, pretty much across the board. We've seen a little bit of widening in the really low end of high yield, but in general, credit spreads are tight, and you're going to need a catalyst to make that change. I think it will eventually change, as it always does, but right now, as long as these stock markets keep performing and the economy doesn't go into recession, it looks like they're going to stay tight across the board.
All right, good stuff. Thanks, guys. Kathy Jones, Nate Peterson, appreciate the commentary. And we're going into the bell when we come back. A couple interesting stories from today that we're going to get into. And namely, coming back to that JP Morgan note that was out earlier this morning, chalking up some clear possibilities around CPI. I like the way their analysts prepped for the inflation print. We'll talk about that a little bit. We're also going to talk about the Oracle deal with XAI.
One minute left.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were able to help her move forward. Your client won't care how much you know until they know
How much you care. Tinkle-inkle-ding-dong-dong.
Accelerate your market knowledge
and shift your perspective into full view. Real-time example trades, a full hour of
Boing. The ding-a-ling went off. Perfect timing. Well, not a bad day. I mean, I scalped it. I think it's a market we're in right now. Trying to determine, we're waiting for earnings. We got the banks coming up. That starts it off again. So that's what we're waiting for. Figure what the earnings do and go on from there. The election's coming up. That could affect the market. Well, tonight's Tuesday night. Everybody have a great evening, and I'll catch y'all later. Not a bad day.